News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Bitcoin has erased almost all of its gains so far this year and briefly slipped into the red for 2025 before stabilising this morning in Asia. The cryptocurrency has fallen from a peak of around $126,000 at the start of October to about $95,000 today. With more, here is Bloomberg's Chris Pitt.
From exchange-traded fund allocators to corporate treasuries, many of the biggest buyers of Bitcoin have quietly...
Hello everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live analysis at whatever time zone you are right now. Welcome. मंडे है 1:30 लंदन सेशन ऑलरेडी ओपन है. 6:30 न्यूयॉर्क सेशन ओपन होगा. 8 बजे यूएस मार्केट ओपन होगा. उसके अलावा डेटा की बात करें तो आज कोई मेजर डेटा तो नहीं है. 7 PM पे एक एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा आएगा. थोड़ा बहुत क्रूड ऑयल नेचुरल गैस को इम्पैक्ट करेगा. आज एक्सपायरी है किसकी? आज एक्सपायरी है क्रूड ऑयल और क्रूड ऑयल मिनी की. तो थोड़ा सा ध्यान रखना जो लोग क्रूड ऑयल और क्रूड ऑयल मिनी में ट्रेड करते हैं. बाकी निफ्टी बैंक निफ्टी को देखोगे, निफ्टी ऑल टाइम, बैंक निफ्टी ऑल टाइम हाई. मॉर्निंग पे अच्छा था, एक रेजिस्टेंस था, सीधा ऊपर गैप अप ओपन हुआ, ब्रेकआउट में बाइंग आई. उसके बाद थोड़ा बहुत साइडवेज हो गया सेकंड हाफ में. जिन्होंने भी बाई किया होगा मोमेंटम अच्छा था. सेलिंग का तो कोई ट्रेड आज बना नहीं. थोड़ा सा ध्यान रखना. मैं कल परसों से कह रहा हूँ, मैं जितना देख पा रहा हूँ मार्केट जिस हिसाब से जा रहा है ना ऊपर, एक बबल बनने के चांसेस बहुत ज़्यादा लग रहे हैं, निफ्टी स्पेशली. बाकी नेचुरल गैस भी देखोगे, हल्का सा गैप डाउन ओपन हुआ था, रिकवर कर गया है, रेंज के अंदर ही है. परसों अपने ऑल टाइम हाई से, अभी रिसेंट जो ऑल टाइम हाई बनाया था स्विंग का, वहाँ से थोड़ा बहुत रिकवर किया था. लेट्स बैक टू द क्रूड ऑयल एज वेल. कोई क्वेश्चन होगा तो कमेंट बॉक्स में पूछ लेना. देखते हैं कमोडिटी मार्केट में भी कुछ अगर ट्रेड बनता है तो. ये स्टक क्यों हो रहा है? आई डोंट अंडरस्टैंड. ठीक है, नीचे जितना भी जा रहा है क्रूड ऑयल वापस बाइंग ही आ जा रही है इसमें. नीचे ज़्यादा टिक नहीं रहा है. नीचे आने पे जितना भी नीचे आ रहा है बार बार बाइंग ही आ रही है लोअर एंड पे. एक बार देख लेते हैं कुछ पॉसिबिलिटी है अगर ट्रेड बनने की. बाकी बिटकॉइन देखोगे कल से थोड़ा बहुत रुका हुआ है, अदरवाइज ये भी कंटिन्यूसली फॉल ही करता चला जा रहा है. 1 मंथ में जाओ.
stepped back from the digital asset over the past month. At the same time, the recent cooling of high-flying technology stocks has led to a drop in overall risk appetite, depriving the market of the support that had helped to propel the token to record highs earlier this year. As Mike McGlone, senior commodity strategist at Bloomberg Intelligence, puts it, with gold and stocks near all-time highs, Bitcoin is now the tip of the risk assets iceberg and melting. In London, Chris Pitt, Bloomberg Radio.
The British government plans to make it easier to remove migrants with no rights to stay in the UK. That's after 40,000 people made the journey across the English Channel in small boats this year. The Home Secretary will set out her plans to cut illegal migration in Parliament later today. Shabana Mahmood says she sees it as her moral mission to restore control to what she calls the broken asylum system.
At the moment, our system is particularly generous compared to other countries in Europe, where after 5 years, you're effectively automatically settled in this country. We will change that so that the status you get when your claim is granted is for 2.5 years and which is renewable every 2.5 years.
UK Home Secretary Shabana Mahmood speaking there as the Prime Minister Keir Starmer looks to regain the narrative following a bruising week for the ruling Labour Party.
US President Donald Trump has called on Republicans in the House of Representatives to vote for the Justice Department to release its files on Jeffrey Epstein in a reversal of his months-long opposition to the move. In a social media post, he said lawmakers should vote to disclose the documents, quote, because we have nothing to hide and it's time to move on. Speaking to Fox News over the weekend, House Speaker Mike Johnson said the president is not concerned by the Epstein scrutiny.
He's not worried about it. I talk to him all the time. He has nothing to do with this. He's frustrated that they're turning it into a political issue, and it's not surprising because the Democrats have nothing else to talk about. What have they accomplished in 10 months? Epstein is their entire game plan.
House Speaker Mike Johnson there, as President Trump has come under increasing pressure to release materials relating to the late convicted paedophile, with the House scheduled to vote on the matter on Thursday. Trump has repeatedly said that he cut ties with Epstein nearly 2 decades ago and was not aware of the disgraced financier's activities.
A bill to sanction countries doing business with Russia appears to have the US president's support. Over the weekend, Donald Trump gave his strongest indication yet that he would back Senate legislation to target major consumers of Russian energy that are not actively supporting Ukraine. If passed, it would allow the US to impose import tariffs of up to 500% on countries including India and China. Speaking to reporters as he left Florida on Sunday, President Trump said he was fine for Congress to move forward with the bill.
Any country that does business with Russia will be very severely sanctioned. We may add Iran to the formula, yeah.
That was President Trump speaking there as Ukraine intensifies strikes on Russian energy infrastructure, claiming it hit a Rosneft refinery in Russia's Samara region.
Well, oil traders are not expecting OPEC Plus to cut production next year, despite forecasts of a global surplus. That's according to almost 2/3 of brokers and analysts surveyed by Bloomberg. While many anticipate an oversupply next year, they say that it won't necessarily be large enough to sink crude prices and therefore provoke OPEC Plus to reverse this year's production hikes. Oil futures are down over 10% this year to approximately $64 a barrel for Brent crude in London. Some Wall Street forecasters anticipate further price declines.
Germany's finance minister will push for fewer Chinese trade barriers on a visit to Asia. His trip comes as tension among the US, China and Europe ramp up. Bloomberg's Tiwa Adebayo has the story.
Departing for a high-stakes mission in Asia, Germany's Lars Klingbeil called for open and rules-based global trade. The country's finance minister is set to make stops in Beijing, Shanghai and Singapore to discuss topics including access to raw materials and Chinese overcapacity. He'll be accompanied by representatives from the German central bank and officials from private sector firms like Deutsche Bank and Allianz. The high-level financial dialogue is also expected to include discussion with Chinese regulatory authorities and financial companies. It comes amidst strained relations between China and Europe after Beijing tightened export controls and Germany's foreign minister postponed a planned visit to China. Meanwhile, German business leaders poured 1.3 billion euros into China between 2023 and 2024, despite government warnings. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Looking at the markets, Asian stocks are edging lower. The Topix is down. MSCI Asia Pacific Index lower. MSCI China Index down 1%. European stock futures are also down by almost 0.2%. Oil is dropping. Currently, Brent crude futures down 1%, $63.76. US stock futures, though, are up. Bitcoin has pared earlier losses to just over $95,000. Gold this morning is also down 0.4%. And looking at the bond markets right now, US yields nudging lower a basis point at 4.13. Those are the markets.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Caroline Hepker, and this is Bloomberg.
ओके, देखो ये क्रूड ऑयल में थोड़ा सा ऊपर आता है तो एक सेलिंग का प्लान करेंगे। थोड़ा सा सेलिंग वाले ट्रेड में ना, जितने भी बनेंगे आने वाले टाइम में, थोड़ा कम ही क्वांटिटी में ट्रेड करना। नॉट बिकॉज ट्रेड सही नहीं रहेंगे, लेवल तो वही है, सेम ही रहते हैं सपोर्ट रेजिस्टेंस के अकॉर्डिंग, बट बिकॉज ऑफ uncertainty in the crude oil market, we don't want to कि प्राइस रिजेक्शन दे हमें उस वजह से, ठीक है। ये एक रेजिस्टेंस जोन रहेगा यहाँ पे। बाकी एक्सपायरी भी है कल, तो उसका भी ध्यान रखिए। ओवरऑल तो क्रूड मुझे बुलिश ही लग रहा है थोड़ा सा। कभी कोई सडनली न्यूज आ गई यूएस ने स्ट्राइक कर दिया है वेनेजुएला को, तो फिर क्रूड ऑयल जंप कर जाएगा ऊपर। अगर ऐसा होता है तो फिर इक्विटी मार्केट भी गिर सकता है, डिपेंड अपॉन क्रूड ऑयल कितना ऊपर जा रहा है उस केस में। 10 से 15% अगर जंप करता है करंट लेवल से, तो फिर 1000 से 2000 पॉइंट थोड़ा ज़्यादा जंप कर गया तो और ज़्यादा फॉल इक्विटी मार्केट उसी प्रोपोर्शन में। प्रसाद सत्या जी, गुड आफ्टरनून। नेचुरल गैस एक्सपायरी का रेंज प्रिडिक्ट कर सकते हैं क्या? ऐसा तो कुछ नहीं कर सकते सर एक्सपायरी का। वीकली में बता सकता हूँ मैक्सिमम क्या मैं एक्सपेक्ट कर रहा हूँ, बट एक्सपायरी का ऐसा एक्सपेक्ट नहीं कर सकते कि टिल कितना जा सकता है उस केस में। वीकली देख लिया करो, नेक्स्ट वीक तो एक्सपायरी होगी शायद। हाँ, नेक्स्ट वीक एक्सपायरी होगी ना, तो मैंने इस वीक नेक्स्ट वीक इस वीक का कर तो दिया है। इस वीक का चेक कर लो। कल मैंने कल परसों किया था ना, सैटरडे को मैंने वीकली एनालिसिस किया हुआ है, वहाँ पर आप थोड़ा देख सकते हो। पूरा एक्सपायरी तक मैं को भी नहीं कह सकता, क्योंकि वीकली एक्सपायरी होती नहीं, मंथली एक्सपायरी है। बाकी सिल्वर का देखते हैं एक बार, थोड़ा सा एक क्रूड ऑयल और नेचुरल गैस को देख लेते हैं। देखो अटैक तो होगा, कब होगा वो कह नहीं सकते। कब यूएस अटैक करेगा वेनेजुएला पे। ठीक है, ये एक तो सपोर्ट रेजिस्टेंस आप मान सकते हो, नीचे सपोर्ट है ऊपर रेजिस्टेंस है। कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे सेल नहीं, ओपन इक्वल टू हाई पे बाय नहीं। वीक में है 20 को ऑप्शन की, तो मैंने वीकली किया हुआ है एनालिसिस, एक बार देख लो। सैटरडे को किया था वीकली एनालिसिस, नेचुरल गैस में क्या रेंज एक्सपेक्टेड है। लेवल थोड़ा सा गलत हो गया, नहीं है सेम ही लेवल। यहाँ पर एक छोटा सा ये रेजिस्टेंस जोन, नहीं उसके ऊपर तो नहीं है। बाकी नेचुरल गैस परसों उस दिन इन्वेंट्री आई तो बेरिश थी, रिवर्स कर गया था, आज भी हल्का सा गैप डाउन बट वापस रिवर्स कर गया। ऊपर और ये नेचुरल गैस भी आएगा तो इसमें सेल करेंगे, बट थोड़ा सा ऊपर और नॉट नॉट ऑन दिस लेवल, थोड़ा सा और ऊपर आना चाहिए लॉजिकली। यहाँ पर एक एरिया ऑफ इंटरेस्ट तो है, सपोर्ट इसका हाई कितना है, इसको नहीं लेंगे, रहना दो। छोटा सा यहाँ पर एक एरिया है जहाँ पर थोड़ा सा ट्राई जरूर कर सकते हैं सेलर, नॉट दैट मच स्ट्रॉन्ग बट या दे कैन डेफिनेटली ट्राई ओवर हियर। ओवरऑल देखोगे नेचुरल गैस एक बहुत ही टाइट रेंज के अंदर ट्रैप्ड हो गया बिल्कुल। सिल्वर का भी देख रहे हैं, सिल्वर का भी मैं देख रहा हूँ, थोड़ा सा टाइम दो, एक सेकेंड। सिल्वर एमसीएक्स या फॉरेक्स ये भी बताया ना मुझे थोड़ा सा। एमसीएक्स देखूं या फॉरेक्स का चार्ट देखूं? वैसे फॉरेक्स का देखूंगा तो ज़्यादा बेटर रहेगा। लेट मी नो। बाकी एक डेटा भी है आज शाम को वैसे 7 PM पे, थोड़ा बहुत इम्पैक्ट कर सकता है गोल्ड और सिल्वर के प्राइस को। फॉरेक्स में 1 आवर में और 4 आवर में, फॉरेक्स में देख लेता हूँ सिल्वर ना। ठीक है। अच्छा, ये आपका नेचुरल गैस में अब सपोर्ट बन गया है ओवर हियर, ये भी स्ट्रांग ही लग रहा है। फॉरेक्स में देखोगे सिल्वर को 4 आवर टाइम फ्रेम पे और 1 आवर टाइम फ्रेम, सबसे पहले तो ध्यान रखना अभी शाम को 6:30 पे न्यूयॉर्क सेशन ओपन होगा, थोड़ी वॉलेटिलिटी वहां पर होती है। 7 PM पे एक डेटा है, वो भी वॉलेटाइल करेगा प्राइस को। एंड देन 8 बजे यूएस मार्केट की ओपनिंग भी, थ्री थिंग्स आर इम्पैक्टिंग द प्राइस नाउ। सिल्वर को देखोगे कल मतलब 14th 14th ऑफ नवंबर से प्राइस एक रेंज के अंदर ही चल रहा है। छोटा सा फ्लैग पैटर्न है, सिमेट्रिकल ट्रायंगल नहीं है, फ्लैग पैटर्न बना हुआ है। चांसेस लग रहे हैं कि अगर ये ब्रेक होता है तो मोमेंटम कर सकता है। 15 मिनट पे फ्लैग है, बट एज यू मेंशन आपको जानना है 4 आवर टाइम फ्रेम, तो लग रहा है शायद न्यूज़ का ही वेट कर रहा है, ब्रेकडाउन हुआ नहीं। यहाँ पर एक सपोर्ट है, प्राइस ऑलरेडी मैं चार्ट दिखा देता हूँ, ऑलरेडी काफ़ी टाइम से सेम ही लेवल पे रुका हुआ है। परसों ही आ गया था 14th को, 14th ऑफ नवंबर से, उसके बाद 15 को भी मार्केट क्लोज था, 16 को भी क्लोज था, 17 2 दिन से सेम ही लेवल पे। ब्रेक करे सीधा $50 ही आ रहा है रेजिस्टेंस। $50 के नीचे अगर 4 आवर में क्लोज करता है तो थोड़ा सा और कंटिन्यू हो सकता है सेल ऑफ। सपोर्ट है बट ऊपर भी नहीं जा रहा है, बाइंग भी नहीं आ रही है। आते रेजिस्टेंस की बात करें, लास्ट स्विंग हाई 4 आवर टाइम फ्रेम, दैट इज द ओनली रेजिस्टेंस। उसके पीछे फिर वो सीधा मंथली टाइम फ्रेम पे ही जाना पड़ेगा। मैं उतना जा नहीं रहा हूँ, 4 आवर में दिख रहा है नियर बाई रेजिस्टेंस, तो उसी को मार्क कर लेते हैं। एक बार सेलिंग पहले आई गई थी वहां से आपका 17th ऑफ अक्टूबर के आसपास, एक कल आई है वहां से सेल ऑफ आपका 13th ऑफ नवंबर के आसपास। तो ये लास्ट सपोर्ट जोन है, एक बार इसका नीचे भी देख लेते हैं, ब्रेक होगा तो। अभी हुआ नहीं है ब्रेक, ध्यान रखना। बट जिस तरह से कंसोलिडेशन कर रहे हैं, नॉर्मली सेल ऑफ थोड़ा जल्दी आता है। अकॉर्डिंग तो ब्रेक हो जाना चाहिए इसको एक बार, क्योंकि ऊपर भी 2 बार टेस्ट हो गया, अब थर्ड टाइम टेस्ट होगा, चांसेस कम ही लग रहे हैं। ठीक है, तो ये कुछ लेवल है आपके सिल्वर में। ये ऊपर एक रेजिस्टेंस आपका वही परसों का स्विंग 4 आवर टाइम फ्रेम पे 53 53.50 से 54.50 के बीच में, दैट इज स्टिल अ स्ट्रॉन्ग रेजिस्टेंस। दूसरी बार आई थी सेलिंग यहाँ से, अगर लोअर लो नहीं बना, जो नहीं बनेगा तो फिर वापस जाएगा, थोड़ा सा वीक हो जाएगा। ये लेवल ऑलरेडी टेस्ट हो गया था, ये लास्ट टाइम यहाँ पर इसी एरिया पे। ये सेकेंड टाइम रुका हुआ है इसी एरिया पे टेस्ट करने के लिए। निकलता है ऊपर, अगर क्लोजिंग आती है 51.15 तो थोड़ा और ऊपर जा सकता है। अगर ये ब्रेक डाउन करता है, ब्रेक डाउन तभी माना जाएगा जब कैंडल क्लोज होगी। अगर मान लो इसने विक बना दिया ऐसे नीचे आके ऊपर, तो फिर ब्रेक डाउन कंसिडर नहीं होगा। बट अगर ये डायरेक्टली कैंडल क्लोज कर देता है $50 के नीचे, सिंपल सा है, तो फिर नेक्स्ट सपोर्ट आपका सीधा 48 से लेकर $47.50 के बीच में है। दैट इज द सेकेंड सपोर्ट एरिया। वहां पर भी एक बार सपोर्ट ले गया, दूसरी बार आएगा, तो ये कुछ लेवल है 4 आवर टाइम फ्रेम पे सिल्वर फॉरेक्स में। एमसीएक्स नहीं है, एमसीएक्स के प्राइस थोड़ा सा अलग रहेंगे। बाकी आज क्रूड ऑयल की एक्सपायरी है, क्रूड ऑयल ऑप्शन और क्रूड ऑयल मिनी ऑप्शन। ध्यान रखना जो लोग ट्रेड कर रहे हैं क्रूड ऑयल को। होल्ड है उसमें। क्रूड ऑयल में भी रेजिस्टेंस ही है ऊपर, और नीचे सपोर्ट लगा रखा है, दैट इज अ सपोर्ट एरिया। यहाँ से क्रूड ऑयल में भी सेलिंग का प्लान है। थोड़ा सा सेलिंग वाले जितने ट्रेड है ना उनमें ध्यान रखना। ओवरऑल तो मुझे क्रूड बुलिश ही लग रहा है, बट इसका मतलब ये नहीं कि रेजिस्टेंस से सेलिंग नहीं आ सकती। बुलिश मुझे क्यों लग रहा है? बिकॉज ऑफ द न्यूज़। मैं एक्सपेक्ट कर रहा हूँ कि कब यूएस स्ट्राइक करेगा वेनेजुएला पे, क्योंकि जिस दिन भी ये न्यूज आई तो क्रूड ऑयल रुकने वाला नहीं है, फिर यहाँ से एटलीस्ट 10-15% तो जाना ही जाना है। अब हो सकता है आज कर दे, हो सकता है एक हफ्ते बाद करे, एक महीने बाद, 3 महीने बाद, एक साल बाद। वी डोंट नो येट, बट पॉसिबिलिटी वेरी हाई कि जल्दी स्ट्राइक हो सकती है वेनेजुएला पे यूएस की। और जितने टाइम तक वो वॉर चलती रहेगी प्राइस उतना ऊपर बना रहेगा, इक्विटी मार्केट उतना टाइम तक गिरता रहेगा। बाकी मार्केट तो ऐसी बबल में है, स्पेशली निफ्टी फिफ्टी ऊपर जरूर जा रहा है, बट बिल्कुल सेम पैटर्न जैसा कोविड से पहले गया था। मार्केट ऑल टाइम हाई, एक ट्रिगर मिला कोविड का, 2 महीने में बिल्कुल 30-40% डाउन। तो वो ना हो, ध्यान रखना, क्योंकि कोई ऐसा नहीं है कि नॉर्मल करेक्शन आने के चांसेस हैं, क्योंकि दो तरह से एक सेलिंग आती है, बाइंग सेलिंग स्पेशली जब करेक्शन आते हैं। एक तो होती है कि प्राइस किसी मेजर रेजिस्टेंस एरिया पे, जैसे मान लो ये मेजर रेजिस्टेंस एरिया वहां तक पहुंचा, वहां पर हिट करके फिर प्राइस धीरे धीरे लोअर लो बनाते हुए गिर रहा है, दैट इज नॉर्मल सेल ऑफ। प्रॉफिट बुकिंग में जो हम कहते हैं प्रॉफिट बुकिंग आ रही है। दूसरे होते हैं बबल्स, वो कब बनते हैं? मान लो कोई इंडेक्स है या फिर कोई स्टॉक ही मान लो, अच्छा खासा स्टॉक है, वो अपने किसी रेजिस्टेंस से हायर टाइम फ्रेम पे, अब नॉर्मली रेजिस्टेंस पे हिट करके प्राइस को नॉर्मली इस तरह से गिरना चाहिए, बट वो क्या करता है, रेजिस्टेंस जो है, जो कि वहां पर दिख रहा है कि रेजिस्टेंस है क्लियरली, उसके भी ऊपर ट्रेड करना शुरू कर देता है। ठीक है, उस लेवल के बिल्कुल हायर पॉइंट पर, या फिर इवन आप कह सकते हो इसके ऊपर भी निकल जाता है। तो इसके ऊपर अगर सस्टेन कर गया ये क्लोजिंग बेसिस पे, चाहे वो 1 महीना करे, 2 महीने, 3 महीना, डिपेंड ऑन द कैंडल कौन सी देख रहे हो, तो फिर आप मान के चलो कि वो बबल ही बन रहा है। और फिर बबल में सेलिंग आती है, वो ऐसी सेलिंग नहीं होती कि लो लो गिरेगा, ऐसे ना। जब बबल में सेल ऑफ आता है तो फिर वो सीधा गिरता है बड़ा। तो सेम वैसा ही पैटर्न है जैसा कोविड में देखने के लिए मिला था। आप चेक कर लेना चार्ट को इंडियन मार्केट के अकॉर्डिंग, या फिर 2008 का जो फाइनेंशियल क्राइसिस आया था, उस समय मार्केट गिरा था। डाउ जोन्स में देखोगे तो वहाँ पर भी सेम ही सिनेरियो है जो कोविड के टाइम पे आया था, 2008 में फाइनेंशियल क्राइसिस के वक्त आया था, 2000 के टाइम पे जो आईटी बबल आया था उस समय आया था। उससे पहले आई थिंक 1989 1990 के आसपास जो चार्ट बना हुआ है, जब इराक ने कुवैत पर आई थिंक इन्वेजन किया था मिडिल ईस्ट में। उस इन तीनों जो मेनली इवेंट रहे हैं वहां पर, तीन और हमारे इंडियन मार्केट में दो देखने के लिए मिलेंगे आपको। डाउ जोन्स में आपको 4 इवेंट हो गए, पीछे और भी हो सकता है, रिसेंटली जो मैंने देखा वो उसकी बात कर रहा हूँ। तो उसमें सेम सिनेरियो रहा है, इन लेवल पे प्राइस अपने रेजिस्टेंस जोन के ऊपर ही ट्रेड कर रहा था बबल बना के। और जब बस्ट हुआ, क्योंकि बस्ट होने के लिए मार्केट को कोई ऐसा नहीं प्राइस एक्शन चाहिए कि धीरे धीरे प्रॉफिट बुकिंग आएगी, क्योंकि वो बबल है। और जब बबल बस्ट होगा तो वो सीधा बस्ट होता है, सेल ऑफ ही उसमें कुछ इस तरह से देखने के लिए मिलता है। सेल ऑफ इन सारे सारे लेवल पे जो सेल ऑफ आया है वो बिल्कुल इमीडिएट आया है, बिल्कुल 1-2 महीने में पूरी बड़ी कैंडल रेड कलर की। बाकी नॉर्मल सेल ऑफ देखोगे तो वो तो काफी आते रहते हैं बीच बीच में, बट दैट इज वो जितने भी सेल ऑफ आएंगे वो रेजिस्टेंस एरिया को हिट करेंगे या फिर उसके बीच में कहीं आके हिट करते हैं, उसके ऊपर ट्रेड नहीं करते मोस्टली। थोड़ा सा ध्यान रखना जो लोग क्रूड ऑयल में ट्रेड करेंगे। वी डोंट नीड कि इस तरह की सडन कोई न्यूज आए और हम सेल ऑफ में बैठे रहें किसी ट्रेड में, क्योंकि फिर उस तरह की न्यूज़ स्मॉलर टाइम फ्रेम पे किसी प्राइस को देखेगा नहीं। इस तरह के बबल को बर्स्ट करने के लिए कोई एक ट्रिगर पॉइंट चाहिए, क्योंकि इस तरह के बबल ऐसा नहीं है कि रेजिस्टेंस के ऊपर ट्रेड कर रहे हैं फिर आराम से धीरे धीरे सेलिंग आती है, वो नहीं होता। कोई ट्रिगर पॉइंट चाहिए, कोई भी एक ट्रिगर पॉइंट बस मार्केट को गिराने के लिए। वो गिरेगा, इसका मतलब ये नहीं कि फिर वो उस मार्केट का हाल बुरा हो गया या फिर वो कभी ऊपर नहीं जाएगा। रिकवरी भी बहुत जल्दी आ जाती है, बट बिकॉज वैल्यूएशन इतने ज़्यादा हो गए उस वजह से प्राइस इंडेक्स का इतना ऊपर चला गया है, तो कहीं ना कहीं थोड़ी प्रॉफिट बुकिंग सारे लोगों को करनी पड़ेगी। उसका एक बहुत बड़ा एग्जांपल देखने के लिए अभी रिसेंटली आप लोग देखना, वो जो इन्वेस्टर हैं वॉरेन बफेट, उनकी जो कंपनी है, वो अभी तक के अपने दुनिया में सबसे बड़े कैश पे बैठा हुआ है वो, उनका कंपनी। रिसेंटली उन्होंने रिटायरमेंट भी ले लिया, बट रिसेंटली देखोगे वो कंटिन्यूअसली मार्केट से अपने स्टेक को कम करे जा रहे हैं। और ऐसा नहीं कि एक कंपनी से अपने शेयर बेचे, पैसा कमाया, निकल गए, उसको दोबारा फिर इन्वेस्ट कर दिया उसी समय, वो उस पैसे को बचा के बैठे हुए हैं। तो उनका जो स्टॉक पाइल था दैट इज अराउंड 312 बिलियन। इसके बारे में हमने बहुत 2-3 महीने 4 महीने पहले भी बात करी थी, उस समय 200 बिलियन का कैश पे बैठे हुए थे। अब रिसेंटली जो परसों न्यूज आई है उसमें वो 312 या 311 बिलियन डॉलर के कैश पे बैठ गए। मतलब मार्केट से पैसा निकाले जा रहे हैं, लगा नहीं रहे। इसका मतलब कुछ तो ऐसा है कि वो सोच रहे हैं कि प्राइस में कुछ ना कुछ होने वाला है। अदरवाइज अगर उनको लगता है कि प्राइस और ऊपर जा सकता है, यहाँ से सही वैल्यूएशन है, तो दे कैन इन्वेस्ट। उनके पास रिसोर्सेज हैं, ऑब्वियसली है, अंदर की इंफॉर्मेशन भी होगी होगी, तो दे नो कि समथिंग इज कुकिंग अंडर द टेबल। कुछ ना कुछ ऐसा होने वाला है जिस वजह से प्राइस गिर सकते हैं, तब एक अपॉर्चुनिटी मिलेगी वापस उनको इस बड़े कैश पाइल को वापस से री इन्वेस्ट करने की, और तब वो उसको लगाएंगे rather देन अभी इन्वेस्ट कर दें। तो थोड़ा सा ध्यान रखना जो लोग सेलिंग की पोजीशन बनाते हैं इक्विटी मार्केट में, या सॉरी बुलिस यू नो किसी स्टॉक को लेके हो रहे हैं या फिर इवन इंडेक्स को लेके हो रहे हैं। आई थिंक मेरे अकॉर्डिंग तो रुकना चाहिए अभी। अब भले ही मार्केट ऊपर जा रहा है, जाने दो जितना ऊपर जा रहा है, इवन करंट लेवल से भी 10% हो सकता है और ऊपर प्राइस भाग सकता है। तो जो लोग इन्वेस्ट करते हैं तो ध्यान रखना। बाकी ऑब्वियसली है, अगर वॉर वगैरह कुछ होती है तो क्रूड ऑयल के प्राइस ऊपर ही जाते हैं उस केस में। बाकी देखना पड़ेगा उस समय गोल्ड क्या करता है, क्या गोल्ड वापस रिकवरी करता है और ऊपर की ओर, या फिर थोड़ा प्रॉफिट बुकिंग दिखाता है। नॉर्मली तो वॉर की सिचुएशन में गोल्ड के प्राइस ऊपर ही जाते हैं। बाकी इस तरह का बबल निफ्टी फिफ्टी में दिख रहा है, बैंक निफ्टी में ऐसा कुछ शो नहीं हो रहा है। हाँ, बैंक निफ्टी में रीटेस्ट पेंडिंग है। रिसेंटली वहां पर भी एक नॉर्मल रेजिस्टेंस बने थे हायर टाइम फ्रेम पे, वो टेस्ट हुए, नीचे से सपोर्ट लेके उन रेजिस्टेंस को ब्रेक करके ऊपर गया है प्राइस। तो हो सकता है वो भी रीटेस्ट हो जाए। बट बैंक निफ्टी इतना बेरिश नहीं लगता एज कम्पेयर टू निफ्टी। हाँ, गिर तो सकता है निफ्टी भी बैंक निफ्टी के साथ साथ, बट इस तरह का बबल वहां पर बना है निफ्टी में, वो बैंक निफ्टी में नहीं बना है। निफ्टी गिर रहा है और बैंक निफ्टी रुका हुआ है। निफ्टी गिरेगा तो बैंक निफ्टी भी थोड़ा बहुत गिर ही जाएगा। कि अगर इंडियन मार्केट फॉल करता है, स्टॉक्स फॉल करते हैं, तो बहुत अच्छी अपॉर्चुनिटी मिलेगी, स्पेशली जो लोग इंडेक्स में इन्वेस्ट करते हैं, एसआईपी फिर से शुरू करना चाह रहे हैं, लमसम अमाउंट इन्वेस्ट करना चाह रहे हैं, दे हैव अ ग्रेट अपॉर्चुनिटी अगेन। अगर निफ्टी 50 फॉल करता है आने वाले समय में, ठीक है, फॉल करेगा, इसका मतलब ये मत समझना कि कुछ भी अगर रीजन हो कि इंडियन इकोनॉमी खराब हो गई है, इंडियन इकोनॉमी इज वेरी स्ट्रांग, वी कैन एक्सपेक्ट फिर से हमें आने वाले टाइम में कभी ना कभी एक और ऑल टाइम हाई देखने के लिए वापस मिलेगा जब प्राइस फॉल करेगा। तो उस समय के लिए थोड़ा कैश अपने पास जरूर रखना, क्योंकि उस तरह की अपॉर्चुनिटी हमेशा नहीं मिलती, 3-4 साल में एक बार इस तरह की अपॉर्चुनिटी आती है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया स्ट्रीम को, एंड सब्सक्राइब द चैनल एज वेल। अगेन एक्सपायरी है क्रूड ऑयल मिनी और क्रूड ऑयल की ऑप्शन की, तो ध्यान रखना जो लोग ऑप्शन ट्रेड कर रहे हैं, बाई स्पेशली। यार ये तो कुछ ज़्यादा ही 50%, 70%। Entered at 6320. 6320 crude, should I wait? फाइव थ्री टू जीरो, ओके 53, दैट्स आई एम सेइंग। मैंने कहा 6320 कहाँ चला गया प्राइस, 100 पॉइंट ऊपर चला गया। थोड़ा जल्दी एंट्री कर ली लग रहा है, थोड़ा ऊपर के लेवल से करो यार, ऐसा बड़ा हो जाएगा और कुछ नहीं होगा। है वो पूरा ही रेजिस्टेंस जोन। देखो रेजिस्टेंस जोन में कोई एक पर्टिकुलर पॉइंट नहीं होता, आप यहाँ भी सेल कर सकते हो, यहाँ भी सेल कर सकते हो, यहाँ भी सेल कर सकते हो। जितना नीचे सेल करोगे उतना बड़ा सेल हो जाएगा, तो उसका एक ही ऑप्शन है, क्योंकि देखो इसमें किस लेवल से जाएगा ये तो कोई नहीं कह सकता, सिर्फ हम रेंज ही बता सकते हैं। हो सकता है वो बिल्कुल यहाँ हिट करके फिर नीचे आए, हो सकता है इसी को टच करके चला जाए। तो नीचे लेवल से ले रहे हो तो थोड़ा सा क्वांटिटी कम रखो, सो दैट एसएल बड़ा बन जाएगा, तो भी कोई प्रॉब्लम नहीं है। क्योंकि ऐसा भी नहीं है कि यहाँ तक वेट करोगे हमेशा यहाँ तक आएगा ही आएगा, हमेशा नहीं आएगा, बट एसएल छोटा हो जाएगा। तो कोशिश करो मिडिल लेवल से ही लिया करो, ठीक है। कई बार मिस हो जाता है उस वजह से, कोई बात नहीं, बट लोअर एंड से ले रहे हो तो थोड़ा सा क्वांटिटी कम, फिर अगर ऊपर जा रहा है तो क्वांटिटी ऐड कर लो। तो आपने तो काफी नीचे ले लिया, शायद 5320 तो बहुत नीचे था। आपने तो यहाँ एंट्री कर ली है इसमें 5320, यहाँ एंट्री कर लिया तो और नीचे है, एटलीस्ट यहाँ तो लो। ये तो बहुत नीचे हो जाएगा। अब एसएल मान लो यहाँ भी रख रहे हो, इसके ऊपर थोड़ा बहुत यहाँ इतना एसएल रखोगे, उसके कंपैरिजन में टारगेट बहुत छोटा हो जाएगा, समझ रहे हो ना। तो जोन का मतलब ये नहीं है कि वो बिल्कुल टॉप ही हिट करेगा, बिल्कुल लो से ही चला जाएगा, मिडल ऑफ द लेवल आप मान के चल सकते हो। आपको अगर थोड़ा डाउट हो रहा है कि यार ऊपर नहीं जाएगा यहीं से रिवर्स कर जाएगा, तो फिर थोड़ा क्वांटिटी कम कर लो, या फिर सेफ में ऑप्शन सॉर्ट कर सकते हो, सेल कर सकते हो, वो और सेफ रहता है। अगर बाई कर रहे हो तो थोड़ा सा प्रिसाइज होके करना, ठीक है। एसएल बड़ा नहीं चाहिए। बाकी बहुत जल्दी लेने की मत सोचो कि बिल्कुल जैसे ही आया यहीं उठा लेते हैं, ठीक है। क्या बताओ ना जाए नीचे, ऊपर जाके एसएल हिट कर दे एक्चुअल में, फिर एसएल बहुत बड़ा हो जाएगा ऑटोमेटिकली। तो रिस्क रिवॉर्ड थोड़ा सा फिर भी मेंटेन करो, ठीक है। अब इसका मतलब ये नहीं कि हर हमेशा यहीं वेट करोगे कि यहीं आएगा, इस बिल्कुल अपर लेवल को टच करेगा फिर ही जाएगा, ऐसा नहीं होता, ठीक है, ऐसा भी नहीं होता। आप मान के चलो इस लेवल के अंदर आप कहीं पर भी ले सकते हो। मैंने लॉ बता दिया कि लोअर एंड पे ले रहे हो तो क्वांटिटी कम रखो, कोशिश करो कि बीच के लेवल पे ही लो, वो सबसे सेफ है। वहां पर ना एसएल बड़ा होता है ना छोटा होता है, दोनों के बीच का एसएल है। बट आपको बिल्कुल ही छोटा एसएल चाहिए तो फिर बिल्कुल टॉप पे वेट करो, बट वहां पर हमेशा आएगा ऐसी कोई गारंटी नहीं है, ना रिस्क तो लेना ही पड़ता है। अच्छा कॉल लिया हुआ है, कॉल लिया हुआ है 5320 पे। 5320 पे कौन सा ट्रेड था? कॉल के लिए थोड़ा सा वेट करना चाहिए था, नीचे था कॉल का, ट्रेल कर लो फिर उसको। स्कैल्पिंग करी है तो बात अलग है। हाँ ठीक है। नहीं सेम ही लगता है, फ्यूचर्स ट्रेड करने में और ऑप्शन सेल करने में सेम ही फंड चाहिए, ऑप्शन बाइंग में थोड़ा कम चाहिए था। था मई 2012 के आसपास। %60 दिखा रहा है अप्रोक्सीमेटली। शॉर्ट करके बैठे हुए हैं तब से 2022 से। अच्छा खासा थीरा डी के मिल गया उसमें, 4 साल का ना, 4 years थीरा डी के। वॉल्यूम कैसा है क्रूड ऑयल में? बाइंग प्रेशर कहाँ से आ सकता है? वो 5360 का ब्रेकआउट हो जाए तो हो सकता है वहां पर एक वॉल्यूम इनिशिएट वापस आ जाए। नीचे नहीं तो है 5260 280 के बीच में, दैट इज अ गुड डिमांड एरिया। सेलिंग आनी होगी तो ज़्यादा देर रुकेगा नहीं प्राइस, सेल ऑफ थोड़ा फास्ट ही आता है हमेशा। थाउजेंड 370 मान सकते हो लास्ट। इसके ऊपर तो नहीं जाना चाहिए, इसके ऊपर गया तो फिर ब्रेकआउट ही हो जाएगा वो। लास्ट टाइम यहाँ से सेलिंग आई थी, मार्केट ने एक लो क्रिएट किया था, दोबारा सेलिंग आई, लोअर लो क्रिएट किया, थर्ड टाइम आ रहा है यहाँ पर ये क्रूड ऑयल में। तो वो लोअर लो ही है जो थोड़ा बहुत बचा सकता है। अगर यहीं पर कंसोलिडेशन करने लग गया और फिर ऊपर गया तो सेलिंग आएगी, तो छोटी ही आएगी, फिर ज़्यादा बड़ी सेलिंग आएगी नहीं। तो 5370 कह सकते हो, उसके ऊपर सस्टेन नहीं होना चाहिए। पेंडिंग है अभी। ये भी है क्रूड ऑयल में ऊपर रेजिस्टेंस जोन, बट ये सारे के सारे टेस्ट हो चुके हैं। देखते हैं होल्ड करता है नहीं करता है इन लेवल पे भी। तरह से कंसोलिडेशन कर रहे हैं ना क्रूड ऑयल, ऊपर से सेलिंग आई तो फिर इतनी बड़ी सेलिंग आएगी नहीं, टारगेट मिलेगा नहीं। या तो एक गिर ही जाए, यहीं से गिर जाए, थोड़ा सा पुल बैक, फिर ऊपर जाए। मॉर्निंग पे इतने पाएंगे 2 बजे के आसपास। वो स्टॉक में है, देखते हैं। 5360 के ऊपर वाला लेवल क्या है? 5360 के ऊपर 5410 के अप्रोक्स। 5400 से 5410। गैस भी सपोर्ट रेंज में आने वाला है, इसमें भी एक बाइंग का ही प्लान है। नहीं, ये भी ट्रैप्ड हो गया रेंज के अंदर. चल गैस भी ना फंस गया है रेंज के अंदर, ऐसा लग रहा है बिल्कुल. या ये तक जाएगा ही नहीं रेंज के अंदर. Area of particular concern. नेचुरल गैस को इतना ज़्यादा प्रेशराइज हो रहा है ना ऊपर से ये सेल ऑफ में ऊपर रेजिस्टेंस कुछ ज़्यादा ही बन गए 405 406 के ऊपर जाता हुआ लग नहीं रहा है
Anna, so we're seeing the gains right now for Bitcoin up 2.2%. Ether is having a stronger session than that, up 4.1%. But this in the context of that pressure that we've seen in recent weeks and months for crypto. What's been going on? Is this? We've seen this story before. Are things different given the ETF inflows we saw at the start of the year, the regulatory focus in the US?
So it's very different, right? Normally when we had these big crashes, it was around some big event like a big exchange collapsing, multiple companies going bankrupt. But in this case, it's very confusing to people. There's no clear sign as to what. It's more, I guess maybe the asset is maturing more and it's following other asset classes, which is a bit ironic, seeing that it was supposed to not be connected to anything else. Obviously, it's interesting because they have the industry has all the support it needs now, the President of the United States and you know, Congress as well. So while the environment has not changed, you know, from the election of Trump, Bitcoin has erased all of its gains, which is really interesting.
So it's not about disappointment that the rhetoric around crypto regulation hasn't been met with real changes. Those changes have come through, and that they are continuing and will continue to support the market.
Yes, and I mean, what happened was on October 10th, there was a big flash crash, and the industry hasn't really the price hasn't really recovered as much. It's gone up and down a bit, but after those big liquidations, it sort of remained kind of, and we're entering now sort of another bear territory and perhaps another crypto winter, which is not connected to the wider environment. There's been no, you know, jailings, as we saw the last cycle. So it's very different.
What are you watching for in the days and weeks ahead? What could be the next catalyst then?
I guess we're going to see if there are more liquidations out of crypto ETFs, because that was a big change. When the ETFs were approved, we saw a massive inflow from retail investors, and now it's not coming back. They're pulling out. I guess maybe people are becoming more sensitive and used to the big price swings, and they don't want to risk it again. And it's maybe following the wider sort of risk.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we began with an apparent reversal from President Trump when it comes to the Jeffrey Epstein files. The president posted on social media last night that House Republicans should vote to require the Justice Department to release its documents on the late sex offender. In the president's words, quote, "We have nothing to hide and it's time to move on," end quote. It's a shift from a position that had President Trump calling conservative Congresswoman Marjorie Taylor Greene a traitor and a disgrace to the Republican Party.
The most hurtful thing he said, which is absolutely untrue, is he called me a traitor. And that is so extremely wrong. And those are the types of words used that can radicalize people against me and put my life in danger.
Republican Congresswoman Marjorie Taylor Greene appeared on CNN's State of the Union. House Speaker Mike Johnson had resisted bringing the Epstein files up for a vote until a petition forced his hand. Now he says it shouldn't be an issue for the president.
He's not worried about it. I talk to him all the time. He has nothing to do with this. He's frustrated that they're turning it into a political issue, and it's not surprising because the Democrats have nothing else to talk about.
House Speaker Mike Johnson was a guest on Fox News Sunday, heard every Sunday on Bloomberg Radio. The House is set to vote on the Epstein files bill tomorrow.
Well, Nathan, it could be back to normal today at the airport after more than a week of flight restrictions tied to the government shutdown. The Transportation Department and Federal Aviation Administration are allowing airlines to resume normal operations at 40 major airports as of 6 this morning, Wall Street time. Flight cuts had been capped at 3% through the weekend. They were supposed to rise as high as 10% by last Friday before President Trump signed the bill to end the shutdown. FAA Administrator Brian Bedford and Transportation Secretary Sean Duffy says staffing levels at air traffic control have continued to snap back since the government reopened.
Well, Karen, Treasury Secretary Scott Bessent says President Trump's proposal to send $2,000 dividend payments from tariffs to U.S. citizens would require congressional approval. Bessent was asked by Fox News Sunday Morning Futures anchor Maria Bartiromo whether the president would be sending the payments.
We will see. We need legislation for that. And again, President Trump is all about solutions, Maria, and yes. Everything is on the table.
Again, that was Treasury Secretary Scott Bessent on Fox's Sunday Morning Futures. President Trump has touted billions of dollars raised in U.S. tariff revenue this year, and he's talked about the checks as public frustration mounts over the cost of living.
Let's turn to the markets now, Nathan, where futures are higher as we kick off the new trading week. Investors are awaiting some key earnings reports and the release of long-delayed economic data. This morning, Morgan Stanley raised its 12-month target for the S&P 500. Strategist Mike Wilson says we're in the midst of a bull market. He's raising his target to 7,800, and that's about 16% above current levels.
Karen, the big market event of the week comes Wednesday when NVIDIA's highly anticipated earnings report hits. We get a preview from Bloomberg's John Tucker.
NVIDIA's report will be closely scrutinized by investors who are increasingly uneasy over stratospheric AI valuations. And now the chipmaker is widely expected to deliver another earnings beat. Bloomberg Intelligence says demand from operators of massive data centers will more than offset problems NVIDIA is having in China. But the $4.5 trillion company faces questions about SoftBank's recent exit as a shareholder. It's a move that's further fueled concerns that circular investments across the AI industry are creating a bubble. I'm John Tucker, Bloomberg Radio.
All right, John, thank you. It's been a volatile month for Bitcoin investors. Hundreds of billions of dollars have been erased since October. We get more with Bloomberg Markets reporter Valerie Teitel.
Bitcoin's reversal from all-time highs on October 6th is really following the broader weakness in tech stocks in the equity market. We know the equity market has not had a good November. Frankly, it's down some 5% from all-time highs, at least the NASDAQ is, from late October. But when it comes to Bitcoin, obviously the move has been been a lot more pronounced. Not only has it wiped out year-to-date gains, it's also down 25% since its October 6th peak. So in just a month and a half, it's gone from 125,000 to now trading around the 95,000 level. It's wiped out 600 billion in market cap in that time.
And that's Bloomberg's Valerie Teitel. Looking at Bitcoin this morning, it's higher, up 2.3% at $95,600.
And this morning, Karen, investors have new insights into the holdings of the world's biggest stock pickers with the latest 13F disclosures to the Securities and Exchange Commission. We get more from Bloomberg financial reporter Charlie Wells.
When you look at some of the holdings, some of the increases in those holdings as far as market value, you've got some familiar names kind of coming up as far as growing over that third quarter. So Nvidia up some $11 billion within the holdings of hedge funds. You've got Alphabet and Apple as well. When you think about losers, there's something interesting that's going on here too as well, because it's also tech names. So one of the biggest decliners as far as market value within these hedge fund holdings was CoreWeave.
And Bloomberg's Charlie Wells notes CoreWeave shares are down 55% from their all-time high set back in June.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. They played for first place in the NFC West, and the Rams intercepted Sam Darnold 4 times, beat the Seahawks 21-19. LA's won 5 in a row. Also a big NFC game last night in Philadelphia. Low-scoring affair. The Eagles beat the Lions 16-9. The Broncos on a last-play field goal beat the Chiefs 22-19. Denver's won 8 in a row. Kansas City is just 5-5. Easy win for the Steelers, but an injury to Aaron Rodgers to his left wrist. Initial concern is there's a slight fracture. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
In case you missed it on Bloomberg Brief. This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral. Don't miss Bloomberg Brief, live every weekday.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
There's been a shift down in Washington, D.C. around affordability. There's been a shift within this White House. Think about the policies that have emerged in the last week or so. Tariff relief, beef, coffee. We're talking about $2,000 checks. And on top of all of that, attempting to open up the mortgage market as well. Sort of a three-pronged effort over the last week, and I expect there's more to come.
The midterm elections were a game changer with respect to this administration's policies and a renewed focus. And a question for a lot of people in markets is, how much do you bake in extra fiscal stimulus in the first quarter of next year in response to this outcry from the population, clearly in the election results, showing a real focus on cost of living?
Treasury Secretary said over the weekend, we are not going to tell people how they should feel. They think that the Biden administration told people that this is just a vibe session. Prices are not higher. The problem is, that's what the Treasury Secretary is saying. Last night on the tarmac, the president came out and said, go to Walmart. Your Thanksgiving dinner is 25% cheaper. Now, maybe certain Thanksgiving items are cheaper this year, but the fact of the matter is, everyday items for kitchen tables of American families are higher. Bananas, beef, coffee, and this is why they're lowering the tariffs on some of these goods.
The Treasury Secretary learned the right lesson from the Biden administration. Don't gaslight the public. If the American public tell you they don't feel good right now about the U.S. economy, they don't feel good right now about the U.S. economy. You've got to do something about it. The problem that I think economists would have right now, the amount of credibility economists have left, I don't know, but the problem they've got right now is that some of the policies on the table down in Washington, D.C. have the potential to make the situation worse, to put up prices, not bring them down.
The issue has to be a supply-side response, which maybe is relieving some of the tariff barriers and getting more imports at the same time. That really undermines some of the trade agenda, which goes to the heart of what the president has been trying to do. Ultimately, there has to be a good look about how you can generate some sort of stimulus for lower-income individuals without causing the kind of inflation that we saw a couple of years ago.
Equities this morning doing better. We're higher by about 0.25% on the S&P. On the Nasdaq 100, higher by 0.4%. Trade very much in focus. Under surveillance this morning, progress between the U.S. and China.
I am confident that post our meeting in Korea between the two leaders, President Trump, President Xi, that China will honor their agreements. The magnets will flow freely as they did before April 4th. We are going to set up a dashboard of very quantitative metrics that they are going to have to meet. We haven't even finished the agreement, which we hope to have done by Thanksgiving.
So here's the latest this morning. The White House expecting a deal between the U.S. and China will be finalized soon. The Treasury Secretary, Scott Bessent, signaling both countries are still negotiating details over rare earths. Joining us now to discuss is the former White House trade advisor, Kate Kalukowicz. Kate, welcome back to the program. I just want to build on what we were discussing around the table just moments ago. $2,000 checks, tariff relief, attempting to do something about affordability in this country. Kate, how important is that developing backdrop for these negotiations with China?
Well, they're very important for the president's trade agenda. I mean, I think we saw over the weekend a number of new trade deals announced in addition to the progress they keep trying to push on China. All of these deals, these winnings for the president are important in the message that he's delivering to the American people, that just stick with me. We're going to remake the trade agenda that will be better for the United States. We just have to weather these bumps. This has been the message all along. Of course, I think his team realized that, tariffs were increasing costs on regular goods for everyday consumers, and particularly on things we can't produce in the United States. And so this easing, I think, is a recognition that perhaps some of the tariffs are not in our interest long term, and it's an indication that he's willing to consider that.
Kate, what do you think is left to really understand between Washington and Beijing in order to ink this agreement?
Well, Anne-Marie, I think we just continue to return to this status quo problem because China and the United States keep failing to get leverage over one another. We have this discussion about rare earths, it seems, every time that the two sides get together, indicate progress. We have progress. The progress gets challenged by some sort of licensing regime, and we end up in the same place. I think we can all be hopeful that this is the real deal this time, but I continue to be a bit discouraged by every time the Treasury Secretary or Trump officials signal that they're not quite there. I think that's because neither side is fully prepared to give away the leverage it has yet.
Could the U.S. sign an agreement with China restricting rare earths to some companies that have ties to the U.S. military?
Well, I suppose anything's on the table. China controls these rare earth metals, which are so critical to the U.S. economy, from military to more traditional sectors like autos. China has kept a stranglehold on these and restricted who gets them through a pretty complicated licensing regime. What the U.S. would like is for China to get rid of that licensing regime altogether, of course. But I suspect in the midterm, there is a potential for some sort of, let's say, situation where certain companies are given priority over others.
Kate, do you have a sense of how quickly the administration is moving to solidify trade deals with strategically important countries that have some of the resources that the U.S. would need to be more independent from China?
Yes, I think that is absolutely a priority for the Trump administration because, of course, to change the dynamic with China, they are going to have to change this dynamic on critical minerals. Of course, before the president traveled to Asia, we had a very huge deal with Australia around some licensing and critical minerals deals in Australia. Last week, the president's administration, he announced a number of trade deals, including with Argentina, which will be another very key ally when it comes to accessing these critical minerals we don't have in the United States.
Hey, Kate, good to hear from you. Thanks for being here. Kate Kalukowicz there, the former White House trade advisor, weighing in on the trade situation. Here's a name in focus, Alibaba. This from the Financial Times over the weekend. A White House national security memo claiming that Alibaba Group provided the Chinese military with technology support against targets in the United States. That's a report worth taking a look at.
How much is this actually something that they found that really does highlight the potential connection between Alibaba and the military, which honestly, how surprising would it be given the fact that there clearly are national champions in China that have pretty intimate relationships with different companies? At the same time, how much is this additional leverage to try to get a sense of just how much the U.S. is willing to crack down on some Chinese companies?
What's interesting, too, is that the administration potentially could then use something that would be more of a nuclear option when it comes to Beijing, and any of these Chinese companies that need access to the U.S. capital markets, potentially they will not be able to list anymore in the United States.
That's the next step. That's how this escalates. Not saying it will escalate, but that's how it could escalate. You cut off access for U.S. investors to invest in some of these companies. If you go there, that's a massive problem because these companies are absolutely humongous.
Yeah, and a lot of people want to invest in them because they want to invest in both the Chinese tech story as well as the U.S. tech story because they seem to be developing a bit more in parallel right now.
We've got a lot to get through this week. If you're just tuning in, welcome to the program. Stocks are positive by a third of 1%. Big week of earnings coming up, including numbers from NVIDIA. We'll catch up with Sarah Hunt of Alpine Saxon Woods, Henrietta Trey's of Vader Partners, Airbus executive Christian Schreier, plus Stephen Parker of JP Morgan Private Bank. The second hour of Bloomberg Surveillance up next.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Of this trade war
Want a visual.
and the analysis you need.
China's not going anywhere, nor are we.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Yeah.
Right. Yeah.
Some of the inherited Warner people, understand this feeling, but when we started to work for David, his one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, like, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting Newline, pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
Have you ever played mixed doubles?
I wasn't very good at mixed doubles.
Oh, you come to my house, court, and we would pretend that you're just an average person who's visiting for the weekend.
Okay.
And then we'll just see if we can win some money that way.
Do you just have one court?
I have
Several
one
courts.
court per house, yeah.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
It is hard for me to see an economy that is not continuing to move forward in a world where the consumer is still so engaged.
The consumer spending numbers and the credit card data numbers have still been robust.
There's just this creeping level of inflation.
We do expect inflation to stay at least above what the Fed's target is anticipating.
There is enough evidence here for the Fed to continue to cut rates, at least one more time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 adding some weight to last week's very painful rally. We're up 0.1% last week, believe it or not. We're up by 0.2 this morning. On the Nasdaq 100, up by 0.4. What a week we've got in store for you. Earnings from Nvidia, some of the major retailers, Home Depot, Target, Walmart, plus a very, very delayed September payrolls report.
It's all cylinders that have been really driving this market. You have questions around the consumer, maybe some color from Target and Walmart and Home Depot that will give you a sense of what's going on there. Then when it comes to Fed rate cuts, you get, of course, the non-farm payrolls report, which is, of course, for September, not for October, let alone November. But we also do get some Fed speak when it comes through just all the speeches, as well as the meeting minutes on Wednesday. And then, of course, you have Nvidia. This question of how far the AI boom or bubble, depending on your perspective, can ultimately go.
I'm going to pick one. Let's run with jobs. Here are the estimates right now. Median estimate 50K, the high 75, the lows 40. Torsten's Lock of Apollo on the program about 30 minutes ago. Torsten making a case that 50 is pretty decent. 50 is better than good. 50 is enough to keep this Fed on hold.
That was actually something that one of the Fed regional Fed banks talked about, the idea that because of the lack of immigration and the lack of population growth, you need a much lower break-even rate. What do we do with that number? We're not getting the unemployment rate. We're not going to get wages until the next day. And it raises this reaction function from the Federal Reserve. Are they focusing on the wrong metric at a time where they don't have a lot of other data, including the CPI?
Torsten making a case that we could see a reacceleration in early 2026. We asked the question, the obvious one, for the politicians out there right now. Please tell me that GDP growth comes with some jobs growth, because we've got a problem right now. That problem is affordability. And this White House has seen a shift develop, a real shift develop in the last week or so.
Absolutely. You can see that for how the president speaks, how his Treasury Secretary speaks. Scott Bessent over the weekend saying he is not going to do what he thought the Biden administration did, which was tell Americans how they are feeling right now. But what's the administration doing? They're thinking about $2,000 dividend checks when it comes to the tariff money coming in. That might actually increase inflation inflation and become a problem. The other thing, notably, this administration did when they talk about their central policy being tariffs, they actually lowered the barrier when it comes to tariffs for certain products that consumers are saying are just too high. Coffee, bananas, beef. Omaha Steak CEO talking about $10 a pound for ground beef. That is going to be a problem heading into the midterm.
The good news for the Treasury Secretary is right now in the middle of November, 10-year bond yields are closer to 4 than they are to 5. Yields are down again today by 3 basis points, so let's call it 4.12. Everything we're talking about that the White House might be doing might be a case for high yields and not lower yields. And the Treasury Secretary has probably got the same idea, the same worry about what could develop if we start handing out checks for $2,000 here, there, and everywhere.
Which is the reason why you've seen Treasury Secretary Scott Bessent really kind of try to thread a needle, start talking about, oh, this is money that's already going back to people that didn't work, and then talking about, oh, yeah, guess what? This is actually going to need some congressional approval, so I can't do this single-handedly. This is clearly a difficult thing for him to swallow based on the balance sheet considerations as well as inflation.
Well, remember, the president comes out with sometimes unconventional, sometimes controversial, extreme ideas, and then it's the Treasury Secretary's job to go out there and soothe the market.
The market's been soothed. We're up about 0.1% so far on the S&P 500. Last week was crazy, so volatile, and squeezed out a weekly gain of 0.08% or something like that on the S&P 500. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Sachs & Woods as Wall Street looks to revive the equity market rally. Henrietta Trays of Vader Partners as the White House weighs tariff dividend checks, and Stephen Parker of JP Morgan as AI ignites a new era for investing. We begin this hour with stocks inching higher ahead of key earnings from Nvidia. Sarah Hunt of Alpine Sachs & Woods writing, earnings estimates still seem to be faring well, and absent any bad news from Nvidia, markets could stay on track for a positive end to the year. Sarah joins us now for more. Sarah, good morning.
Good morning.
What are the lessons from the recent volatility, if there are any lessons at all?
I think that there was a whole lot of things that were going on that created some of that downdraft. And I think, there was an earlier question about what's the most important thing that's coming up this week. I think it's a question of timing. If the payrolls was coming before NVIDIA, I'd say payrolls. But because NVIDIA is coming first, that's going to set a tone. And either payrolls are going to help that or hurt that. And I think that, if you get any more downdraft in technology, it's going to be hard to rally through the end of the year because there is some concern there and there's some concerns about valuation.
We've been speaking for years about the K-shaped economy. This week's the K-shaped market. Consumers been struggling. You've seen that in some of the restaurant earnings. We're going to see it in the retailers potentially later this week. And then there's Nvidia. Can we close that K anytime soon in the equity market? Never mind the economy.
It's a bit tough because people are, if the technology story stays on track, people stay away from some of the retail areas where you've seen weakness. If there's a wobble, then people start looking at staples. Like you saw that downdraft day, there was some of the stocks that were doing okay, were the more value-oriented, more dividend-oriented, more like those kind of stocks did better. I think there's an argument to be made that going into next year with valuations where they are, there should definitely be a balance in the portfolio, and you should have some of that, because if you get volatility, that's going to act better than some of the technology. And I think the volatility is just going to stay and get moved around from data point to data point.
Is NVIDIA the last tech company to actually feel the pain if AI isn't delivering on some of the promise that people expect?
Well, it's interesting to see the number of people who are, going publicly talking about getting out of their NVIDIA stakes. And I'm not sure if that's one of those, we want to move on to the next thing, or we think that's the top for NVIDIA. I think NVIDIA is in a good spot in terms of being able to keep bringing money in because people still need these chips. There is, to your point earlier, also a big depreciation cycle on those chips. So there is a round robin. It's not like you buy it once and you don't have to buy them again. So I don't know that NVIDIA is going to be the problem there. I think the issue is going to be who's making money with those chips and how is that return coming? Because that is the big question into the next iteration of AI.
This is the reason why Oracle has been so interesting, why OpenAI has been so interesting, why the CDS spreads and how much they've been blowing out has been so interesting, because there is a question about whether the rank and file company in the average economy is seeing the monetization from some of the new AI tools that they've been getting, and whether that's enough to justify the massive spending and investment. Is anything that you're seeing seeming to suggest that, yes, we are getting to a place where we will see massive sea change kinds of earnings from the rank and file companies that could lead to that broadening out and a justification for AI valuations?
I think the hard thing is that to believe that that is going to be the case in the near term, it has to be about, to some degree, productivity, which has to be about not having as many people on the payrolls. And that's not a great thing right now because we don't want to see that happen. I don't know that we are yet understanding exactly how those tools are going to play into a variety of things, including productivity and better earnings, except to get rid of people. And so I think that you need to see some work cases where it's very clear that this is less about getting rid of people and more about making them more productive. And I think that's still not quite clear enough from the investment side to say, oh, I can see this going into this industry and that industry and that industry. That's what people are hoping for. I don't know that we're there yet.
Well, Lisa mentioned this earlier about how some Fed members are talking about the structural changes in the economy, like immigration, like these technology changes, which is why potentially there are shifts in the labor market. How does the Fed address that?
That's another question that having a whole bunch of 6 weeks of not having data does not help you at all, because that is trying to figure out what the right number is, you know, to Torsten Slack's point, given all the things that are going on, is very difficult when you don't have enough data. You don't see weekly claims either, which also sort of informs you, even if it's not that week, the average of that starts to inform you. I think that's going to be one of the things that into 2026, if you need to see some earnings growth because that's what's being built in, but you also need to see a labor market that people feel comfortable with. And I think that we just don't have enough information right now. And that's where the timing of that data coming in versus other things starts to be an issue. And the faster we get some of it, the better off we are. But it's going to be about what's happening now. I don't know that September is that informative because people were looking at the ADP numbers for October.
Two pillars coming out this week in terms of Wall Street for NVIDIA earnings and then Main Street for when it comes to Walmart. Could Wall Street continue to do well if the consumer's really struggling?
It's managed to do it so far this year, and the consumer has been struggling for a while, especially on the lower end. I mean, you've seen some of that delinquencies on the lower end in auto loans, delinquencies on the lower end in credit cards, but not on the upper end. That upper end spend has really been able to carry things, not so much for the retail sector, because as a whole, they need more than just the upper end, except the very high luxury stuff. So it depends on where that goes, and that's also where the labor market comes into play, because if you feel comfortable that you're keeping your job, it's easier to spend the money as it comes in. But if you don't, that's where people start to get a little bit more on the savings side.
Things are about to get really difficult for the American CEO. We've talked a lot about the difference between corporate earnings up there and employment down here. And the space between is where all the tension's going to play out. They've got to be very careful about how they talk about some of the progress and benefits they're getting from this technology. We've heard a lot of the banks talk about how they're going to keep the staff force, the workforce stable and get more revenue out of every single employee. I think they need someone, the head of Washington Affairs, alongside them whenever they talk about this issue, because the more you talk about greater productivity, greater technological advancements and fewer people, the greater the chance of the regulatory pushback developing down in Washington, D.C. And that would be a great shame, because what we've got in America, I think the secret sauce to this economy is fantastic labour market flexibility compared to, say, the Europeans. And I fear, it's my fear, I have this worry that we're just going down this path that just makes greater regulation almost inevitable if this is where corporate America wants to go. And you're going to see some regressive impact up front, some job losses early. Washington's going to push back. They're going to have no choice but to push back.
Which is the reason why every single CEO, you can listen to the earnings calls. Very few of them, except for Amazon, which really ballooned in terms of its staff recently, very few of them have actually said, we're going to cut jobs in response to AI. They say, oh, it's increasing productivity. Oh, potentially we could do more with just the same footprint.
Hours.
And you just wonder at what point that story will change, or if the rhetoric is going to stay the same, but the numbers start to move.
Sarah, it's good to see you. Thanks for being here. Sarah Hunt there of Alpine Saxon Woods PR down in Washington. Imagine how much they're going to have to spend on that.
Yeah, you know, what they have to spend on it is trading programs, because you can't fight a sea change. And that ultimately is what a lot of people are talking about. What's the strategy? There are plenty of jobs that are still required. And so you start to have to say, OK, do we need retraining? Do we need to focus people on different things? These are the questions that ought to take up more of the oxygen. In D.C., frankly, and on Wall Street.
Unions have been fighting technological advancements for a long, long time. Talk to anyone down at a port in this country, talk to the European train driver. We've had the technology to have driverless trains for a long, long time. You will get the labour force to push back and to stop certain companies and certain industries implementing this kind of technology. We've seen it before, why won't we see it again?
The only difference, I would say, and I don't know if this is optimism or pessimism, is the existential overlay to this. That if you do not keep up with this technology, there is this existential fear that you will become obsolete, that you will ultimately get overrun by China or by another power who gets better technology. So the only change in that narrative would be that there is this race, an almost arms race of technology going on that might supersede some of those impulses.
It's going to be the tug of war between the technology and the regulator over the next year and beyond. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Tensions are increasing between China and Japan. China's state media warning Beijing is prepared for economic retaliation for Japanese Prime Minister Sanae Takaichi's comments on Taiwan. This after Takaichi said a Chinese attack on Taiwan could trigger a Japanese military response. Meanwhile, Bitcoin has fallen sharply after topping 126,000 last month, briefly wiping out all of its 2025 gains before stabilizing earlier. Bitcoin's total market value fell by about $600 billion from an October high, with some traders citing the 4-year halving cycle, while others blaming global liquidity. And Apple is making big changes to its iPhone strategy. Sources telling us here at Bloomberg that the tech giant is developing a foldable model and a new high-end version with a hidden camera. Apple is also ending its traditional single fall product launch in favor of a new biannual schedule starting in 2026, releasing Pro models in the fall and mid-tier models in the spring. That's your Bloomberg brief, John.
Yahara, thank you. Appreciate it. Up next on the program, President Trump's tariff checks.
Is he going to be sending these direct payments to Americans of $2,000 or more?
We will see. We need legislation for that. And again, President Trump is all about solutions.
Lisa, you said this. This is the second consecutive weekend that the Treasury Secretaries had to dance around this over the weekend.
Oh, beautifully done, by the way. Really impressive.
So we need Congress for $2,000 checks, but they don't need Congress for IEPA. Interesting.
Up next, Henrietta Trays of Vader Partners, live from New York. Good morning.
गाइस 6:30 होने वाला है, ध्यान रखना। लंदन सेशन के बाद न्यूयॉर्क सेशन इज गोइंग टू ओपन एट 6:30। कंसोलिडेशन कर रहा है, लेट्स सी। ऊपर जाए तो सेलिंग है बनती है इसमें, नीचे आ जाए तो बाइंग कर लेंगे। क्या आज एक्सपायरी भी है, ठीक है, क्रूड ऑयल की मिनी और नॉर्मल क्रूड ऑयल ऑप्शन की। क्रूड ऑयल सॉरी नेचुरल गैस में ऊपर बहुत ही रेजिस्टेंस क्रिएट हो गए, वो भी बड़े बड़े। नीचे सपोर्ट जरूर है बट ऊपर भी रेजिस्टेंस है। मुझे तो नहीं लग रहा है 406 के ऊपर किसी भी सूरत में जाने वाला है। ऊपर जाके वापस सेलिंग ही आनी है ओवरऑल। The candle in crude oil open equal to high है candle 5321 open 5321 high. Look at the current candle. This is open equal to low. Last one is open equal to high. This is open equal to low. Okay, 6:30 याद रखना न्यूयॉर्क सेशन ओपन होगा थोड़ा वॉल्यूम और आ सकता है. Trump urges House Republican to vote for releasing his STN file. ये तो कल अपोजिट था. Zelensky says Ukraine will obtain 100 French-made Rafale warplanes. Guys, like रुकने नीचे like भी करते रहो सभी लोग.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's Monday, November 17th. Today, Trump changes his mind on the Epstein files, calling for lawmakers to force the release of the Justice Department documents. Saudi Arabia's Crown Prince prepares to head to the White House. And the UK toughens its stance on immigration as the Labour government looks to reverse far-right gains. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. President Donald Trump is calling on lawmakers to vote to release the Epstein files, saying, quote, "We have nothing to hide." Trump made the comments in a post on Truth Social. The House of Representatives is due to vote as early as this week to force the Justice Department to release a swathe of documents related to late sex offender Jeffrey Epstein. That bill would then need to pass the Senate and be signed off by Trump himself. Many documents have already been released by the Justice Department, by Democrats and by Republicans, but it's thought these documents would be far more comprehensive than anything made public so far. One of the Republicans who wants the Justice Department files to be made public is Marjorie Taylor Greene. Once a staunch Trump ally, she now says her criticism of him and his online attacks and response have put her life in danger. White House reporter Graham Slattery explains how things got so heated.
She's been critical of Trump for focusing so much on international affairs in the first 10 months of his term. One of the tenets of sort of Trumpian political philosophy, many Trump supporters thought, was that it was a neo-isolationist policy, or at least one that was skeptical of military intervention or the threat thereof.
But the biggest issue is Greene's vote in the House for the Epstein file release.
Essentially, this measure is called a discharge petition, and it basically got the final vote it needed when the House came back into session after the government shutdown ended. It got the votes necessary with MTG's vote, and that's really upset the White House and Trump personally. So there's two serious rifts here. I don't think any Republicans are going to vote Democratic next year in the congressional elections, but this is a turnout game. If Trump's base is disenchanted, they're just not going to show up in the numbers they need to, and that's going to make a difference.
In a Truth Social post, Trump says she's making herself a victim and that no one cares about this, quote, traitor to our country. Protests in Charlotte as federal agents arrested more than 80 people in just 5 hours in North Carolina over the weekend. It's a major escalation of President Trump's mass deportation campaign. US Border Patrol says the arrests involved people with significant criminal and immigration history. The Department of Homeland Security says the Charlotte raids were in response to local officials refusing to carry out more than 1,000 detainer requests, which allow suspects to be held for up to 48 hours beyond the time they would ordinarily be released. Wall Street faces a big week of earnings and data, including Thursday's delayed September jobs report, although private surveys have already flagged a labour market slowdown. The real focus is 19 speeches from Federal Reserve officials on the agenda for this week, which markets will scrutinise for rate clues. And on earnings, Home Depot, Target and Walmart report, as does Nvidia. Its results will test the AI rally that's pushed shares up more than 40% this year and passed a $5 trillion market cap. Plus, some markets news from the other side of the world. The Japanese economy has shrunk. A drop in exports caused by US tariffs has resulted in the first contraction in 6 quarters. The US military has released footage it says shows another attack on a drug smuggling boat in the Eastern Pacific. The Pentagon says 3 people were killed when the vessel, allegedly carrying narcotics along a known trafficking route, was attacked by US troops in international waters. The US has carried out more than 20 similar strikes in the past 3 months as part of an effort to disrupt the flow of narcotics into the States. More than 80 people have been killed. Critics say the raids may violate international law, but the Trump administration says it has legal authority and military personnel who carry out the attacks are immune from prosecution. Despite accusing Venezuela's President Nicolas Maduro of leading one of the drug cartels, the Cartel de los Soles, President Trump now says he's open to meeting with him.
We may be having some discussions with Maduro, and we'll see how that turns out. They would like to talk.
Senior Trump administration officials have held several meetings at the White House this week to discuss options for possible military operations in Venezuela. The US is already building up its military presence in the Caribbean, deploying warships, a nuclear submarine, and F-35 aircraft. And speaking of F-35s, the US is hoping to ink a deal to sell some of the Lockheed Martin fighter jets to Saudi Arabia when President Trump meets with Crown Prince Mohammed bin Salman at the White House this week. Mohammed bin Salman has some big economic goals on the agenda too. But as our White House reporter Steve Holland explains, Trump will have his own set of asks.
MBS, as he is known, is wanting to seal a defense agreement with the United States. We're expecting agreements on manufacturing, technology, defense. Now, President Trump wants Saudi Arabia to join the Abraham Accords, the series of deals between Israel and other nations. The Saudis do not want to go that far. They're not ready yet. They want to see steps toward Palestinian statehood before they would agree to normalize relations with Israel. So this is a point of potential tension between the president and MBS.
This meeting continues efforts by MBS to revive his image on the world stage after the 2018 murder of Jamal Khashoggi at the Saudi consulate in Istanbul. US intelligence shows that bin Salman approved the operation to capture or kill the journalist.
He has worked to try to avoid the fallout from that ever since it happened. Joe Biden once called MBS a pariah, but then later did a fist bump with him on a trip to Saudi Arabia. Trump does not have the same qualms about the Khashoggi murder as Biden did, and so he's quite willing to play up their friendship with the Saudi crown prince.
To the UK now, where the government is coming under pressure to deliver on its promise to secure the country's borders. Immigration has surged to the top of voters' concerns, according to recent polls, helping the right-wing Reform UK party gain political ground. In response, the UK's Interior Minister, Shabana Mahmood, is set to announce a major shake-up of asylum policy later today. Here's reporter Alastair Smout in London.
The Labour government is proposing refugee status will be temporary, reviewed every 2.5 years, and refugees could be returned to their home countries if it's deemed to be safe. Previously, Mahmood has said that after 5 years, in many cases, refugees can apply for settlement and stay forever. Now it will take 20 years. So that's a quadrupling of that amount of time.
But the Labour Party is losing support among farther left-leaning voters who tend to be more sympathetic to asylum seekers. And that leaves a difficult needle to thread for the party.
So the government is always keen to stress that it believes in helping those in genuine need. And the government also likes to talk about these safe and legal routes as a sort of carrot when they're announcing the stick of tougher measures on asylum seekers, on immigration, on refugee status. So what they've outlined this weekend was a capped route for displaced students to study in the UK, a similar route for skilled workers, and a refugee sponsorship scheme to give voluntary organisations a bigger role in resettling people. They say that builds on an approach seen at the start of the war in Ukraine, when hundreds of thousands of British people hosted Ukrainians in their homes.
And finally, some good news for Thanksgiving travellers. The FAA is lifting flight restrictions at 40 major US airports starting today. The cuts were imposed during the federal shutdown over air traffic controller shortages, but officials say staffing concerns have eased. Airlines expected the move. Cancellations are already near record lows, so operations should be smooth as holiday travel ramps up. And for today's recommended read, Taiwan will, for the first time, begin distributing millions of security handbooks to households across the country. It's an unprecedented effort to prepare residents for emergencies, such as a Chinese attack. It also includes a reminder that any claims of Taiwanese surrender should be considered false. There's a link to that story in the description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters.
Hi, I'm Christopher Walljasper in Chicago. It's Sunday, November 16th. Today, Trump's immigration crackdown turns...
making lots of noise in the last 24 hours. At the end of August, the start of September, the Fed starts talking about risk management interest rate cuts. The market gets excited about a cutting cycle. Here we are facing the prospect of a prolonged pause, and maybe for the duration of Chair Powell's term as the chair of the Federal Reserve.
So I was looking at Fed funds futures back just before the last Fed meeting about a month ago, and it was above 100% chance that there would be a Fed rate cut in December. You take a look now, it is less than 50% for the first time since that meeting. Suddenly, people are saying there is a greater chance of the Fed not cutting rates next month than actually cutting rates because of the pushback that we got from Cleveland Fed President Beth Hammack or St. Louis Fed President Alberto Musalem. And there's a real question here about how much they really do have the upper hand as inflation does remain above that 2% goal.
Do you think that was the objective? I'm pleased you've gone back to that news conference. Wasn't that the objective of Chairman Powell, to make this a coin flip? A 50-50 bet for December, and a market that didn't really fully internalize the message in that news conference. And it's taken a flood of hawkish Fed speak in the last day or so to really get us back to maybe where he wanted us to be.
This is what a lot of people are speculating, which is the reason why they're saying bet against this. They're still going to cut rates because this is just wonderful messaging to try to take some of the froth out of the market. That said, it does seem like this Federal Reserve wants to go slower without the government data, and it looks like we're not going to get the government data. The idea that we could get the jobless, the overall job creation from the non-farm payrolls, but not the employment rate, the unemployment rate, raises a question about what kind of value this data actually will have.
Before we get into it, here stateside, let's just spend a moment, a couple of beats on what's happening in the UK. This is the price of chaos. The price of chaos and uncertainty is volatility, and it's been a very volatile session for sterling assets over the last 24 hours, both for sterling against the US dollar and for the bond market as well. Back and forth over what policy is going to look like in the budget in the coming weeks. This has been a problem that's been building for months now.
Yeah, so they're between a rock and a hard place when it comes to Rachel Reeves, the UK Chancellor of the Exchequer, and she was expected to raise taxes yet again, I think the third time in 3 years, even after pledging she wouldn't do so. Now she's trying to back away from that, potentially. That's some of the news this morning that's coming out, and it's raising questions. Is this a good thing or a bad thing for the fiscal backdrop, given that there aren't credible means to cut spending? At this point, they're in a bad position, and the market's getting whipsawed by, frankly, just fiscal instability, a lack of any kind of fiscal structure of exactly how they're going to maneuver.
This is one of the most disruptive budgets I've ever seen, and we haven't even seen it yet. That's how ridiculous things are in the UK at the moment. Sterling all over the place. Coming up this hour, George Concalves of MUFG as the equity market pulls back. Francisco Blanch of Bank of America on the energy risk for AI data centres. And the former BLS commissioner, Bill Beach, on a month of missing economic data. We begin this hour with stocks already steady, heading lower after notching their worst day in more than a month. George Concalves of MUFG writing, market internals are starting to look exhausted and ripe for at least a correction. We think many of the positive catalysts are priced in, whereas the weak consumer and credit concerns are not. George joins us now for more. George, good morning, sir.
Good morning.
Have you ever seen such a freak out about a 2 to 3% pullback on the S&P 500?
It seems worse because it's been easy sledding all year long after Liberation Day, right? It's been up and to the right. And I think this is a critical time point. We're coming towards the end of the year. There's been a lot of gains had in many different asset classes. I think this is when investors start to discern, do they take chips off the table? I think that the last couple of days is reminding them. I mean, the last week and a half, to be honest.
What do you think's changing? Lisa and I were talking about this. The chairman clearly had a message in the news conference at the last meeting. Do you think the market failed to fully internalise what that message meant?
I do think there's an element of the Fed at play as well. I mean, the rates market, the bond market has been pricing in cuts for quite some time, and now we're at this kind of 50-50 injunction. I do think that if the Fed does not deliver on the easing that's been promised or at least expected, the markets are going to reprice, all markets.
Do you think this is a Fed story, or do you think this is more a change in the AI story from a pure play on the potential hopes and dreams to one that is more debt-fueled and more speculative with leverage put on top of it?
Even if that's the case, and I have my concerns around that as well, I do think that the cost of funding, the time of the year, all these great P&L all throughout the year, that we're getting to this point where, if the Fed doesn't deliver cuts, I think it's probably weighing on the psychology.
Okay, so why aren't we seeing the biggest drawdowns in some of the more cyclical plays? Why are we seeing the big tech names hit hardest? Which is the reason why I'm pushing back. I'm trying to understand exactly, do we need to have a narrative for this? Or is this just basically some people taking the chips off the table?
Yeah, so look, the narrative always shifts, as you know. And the narrative and the reality as well, technology is a long duration play. Always was. And if they went from using free cash flow to using debt, and interest rates will start to matter at some point, and so will spreads. And there's been actually a widening of spreads within that category. So I do think there's a fixed income component, not purely Fed and fundamentals. But I do think that if they're becoming long duration assets, they're going to swing with rates.
Do all of these forces, the forces I'm talking about, Lisa's talking about, do they put the year-end rally in jeopardy? Is that year-end melt-up now at risk?
Well, we're going to go through many mini cycles before we get towards the typical year-end seasonal type rally, which typically kicks off closer to Thanksgiving into the end of the year. I think it comes down to the data. And we're going to, at least now, finally, with the government reopening, we're going to get the data.
Some data.
Not
all of it.
Not all of it. But I do think the burden will be there, that the burden of proof is there, that, you have to have really strong jobs data to turn off the Fed. Even though they're talking tough, I think they're still going to cut, is our view.
Can we just get into the data and why we're not getting the household survey? What is it about that particular survey that makes it difficult to produce?
Well, I think it's the actual collection process. And let's also take a step back and realize the BLS has been, has had staffing issues all throughout the year, getting people back in place, collecting the surveys, doing the household. It's much easier to do the establishment NFP.
What's your sense that this data would come in stronger than expected or weaker than expected based on some of the peripheral information that we have been getting?
Yeah, I think that the alternative data that we've gotten throughout the last 6 weeks still points to a weaker labor market. So I think that once that's clear and you see it, it's going to be hard for the Fed to back down.
So if the Fed does cut rates, where is the outperformance going to actually come from if it really is in response to a real problem, right? It's sort of this idea that be careful what you wish for when the Fed actually does cut rates because they could be responding to a real issue.
True. I think if it lingers into Q1. So if the Fed cuts rates, because we've been kind of in this lull of no data, vol's been very low, there's uncertainty about what the outlook is. If they're cutting because there's the persistent weakness is one thing. If it's an accelerated weakness, I think that probably shows up more in Q1 than at the end of the year.
Oh, you don't buy the pickup in Q1 next year? Because that's what this market's priced for. That's what Fed President Muslim's talking about, a re-acceleration in Q1 26. Why don't you buy it?
Well, as both you in your opening intro, I mean, yes, small businesses should be leading the charge. But if you look at the NFIB surveys, you're not seeing that pick up yet. And they're the most rate sensitive. So you need to get rates much lower to get them to actually start to hire and not just, be reacting to the fiscal policy that's been put in place. And look, let's not ignore the layoffs have been huge and they keep coming through, even heading into the holiday season. And the seasonal sort of hiring plans aren't there. So the jobs market, in our view, still gets worse before it gets better.
They're real. That headline for Verizon was super concerning. The initial report, I think, came from the Wall Street Journal and said up to 15,000. And 4, 5, 6 hours later, that number went up 5K. That's super concerning.
Especially given the fact that it's trying to compete on price. This is because Verizon has fallen behind when it comes to attracting new consumers because they've tried to just raise prices on the ones that they're keeping. They can't do that anymore, which highlights really the state of some of the weakening that we're seeing.
Hiring intentions elsewhere aren't exactly robust for that 20,000 job cut pool to go and find a job immediately afterwards anyway. That's the problem. In a low churn labour market, to have those kind of layoffs, where's the pickup going to come from?
The real question, though, going forward is how much will Fed rate cuts change that, right? How much is this something that is structural or cyclical? This has been the big debate on the Fed, and frankly, this is the big debate in markets. How much are we seeing a new efficiency ploy that's going to somehow reduce the need for human labor that's going to really skew the numbers in a material way?
The S&P this morning, session lows now. We're down by 0.5% on the S&P 500. George Concalves of MUFG is going to be sticking with us. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump is preparing substantial tariff cuts to address high food prices. The president unveiled framework agreements with Argentina, Guatemala, El Salvador, and Ecuador to reduce tariffs on common grocery items. The deals will reduce tariff and barriers on items like beef, bananas, and coffee beans in a push to lower costs. Meanwhile, new data out of China showed cooling economic activity at the start of the fourth quarter. Investment slumped at a record pace for the period, while industrial output saw its smallest gain since the start of the year, and retail sales slowed for the fifth straight month. And UK bond yields are paring losses after Chancellor Rachel Reeves dropped plans to raise income taxes. The change came in response to an improved fiscal forecast from the UK's budget watchdog. The country's fiscal hole was found to be closer to £20 billion, while expectations were as high as $35 billion, which still may require major tax rises to tackle in the future. That's Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, fixing affordability.
I want to address the affordability issue.
So we understand that people still feel the pain.
My administration and our partners in Congress will continue our work to lower the cost of living and make America affordable again.
That conversation up next with Bloomberg's Mika Sona, live from New York City this morning. Good morning.
A lot of our inspirations for new features comes from experiences in our own daily life.
The other day, I needed to double check an important meeting schedule by finding a specific call recording. Thankfully, with call summarization feature on my Galaxy, I could quickly find it.
Our users ask complex questions, and our model has to be able to speak multiple languages. What seems impossible now can quickly become possible.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Stocks are down. We're down by 0.5% on the S&P 500. On the Nasdaq, check this out, down again by 0.9%. And check out what isn't happening. There's no bond market rally. Check out fixed income, 2/10. 30s. Yields up by a single basis point and 10s, 412.89. That's something new. We've talked about bonds doing what bonds are meant to do recently. Not happening in the last 24 hours.
And part of this could be, you could say this is part of the Fed move, the idea that the risk-off mood stems from the Fed being more reluctant to cut rates as a given in December. There also has been a different tone under this particular sell-off, which is you're seeing a commensurate sell-off in some of the corporate credit tied to some of the big tech names. That's new. Real pushback suddenly from debt investors who are saying, hold on a second, what are we paying for?
Everything that was doing so well is facing pushback across the board, and I'll throw in crypto as well. Bitcoin's had a terrible go of it too. If you've had a good year, you've had a bad few days. That seems to be the story at the moment.
Momentum has really struggled, and I think that raises this question. Is that the beginning of something deeper? Or are we starting to see that rotation that Mike Wilson of Morgan Stanley was talking about? Interesting that the NASDAQ is underperforming the Russell 2000. You're seeing the equal weight actually outperform for a consistent stretch of a number of days. So it raises this question, is this the beginning?
रॉय 2009 क्रूड ऑयल क्या कर रहा है? एक्सपायरी है, टाइम वेस्ट। क्रूड ऑयल की एक्सपायरी है ना ऑप्शन की, क्रूड ऑयल की भी, क्रूड ऑयल मिनी की भी। जितना टाइम स्पेंड करेगा रेंज में उतना बेटर है ऑप्शन सेलर्स के लिए, तो रख रहे हैं रेंज के अंदर उसे, नहीं तो कहीं ना कहीं मूव कर जाना चाहिए था अभी तक। कंप्लीट एक्सपायरी डे।
We see really high wage growth and inflation is much more under control.
My administration and our partners in Congress will continue our work to lower the cost of living and make America affordable again.
So here's the latest this morning. President Donald Trump preparing new trade deals and substantial cuts to tariffs as the administration looks to ease affordability concerns. Joining us now is Bloomberg's Mika Solna. Mika, this is a bit of a pivot coming from the White House over the last week or so. What's behind it and what are the steps they're willing to take?
Yeah, absolutely. After the results of the election earlier this month, I think the White House is really looking to hammer the affordability, cost of living message that Democrats had done so well on. President Trump has essentially blamed any kind of economic downturn on his predecessor, Joe Biden. But right now, I think the circumstances that millions of Americans are feeling when it comes to their pocketbook is really catching up to them. So the administration is really trying to scramble here and find some ways to make that their winning issue.
Mika, how did they massage the messaging? Because the takeaway for a lot of people is going to be, you're focused on affordability.
The volatility and the rotation that we're seeing among single names is healthy.
The breadth picture under the surface for the S&P 500 is actually starting to improve.
The Mag 7, they just have to sort of behave, right, in order for the market not to have, kind of one of these major scares.
I think equities are still going up 15 to 20% from where they are over the next year.
This bull market deserves the benefit of the doubt.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday with markets on edge. Investor jitters around mega-cap tech, taking stock markets lower as a chorus of Fed hawks is leaving a December rate cut firmly in doubt. The doves get a data point. Verizon discussing plans to make some major job cuts, up to 20,000 jobs on the chopping block.
And that's a significant part of their overall staff, which is about 100,000, just to give you a sense. And it comes after a leadership change at that company that happened a couple of months ago. This goes to the ultimate question, though. Verizon is cutting jobs as it tries to compete on price. It can no longer pass along price increases to consumers. How much does this highlight how much companies are grappling with the fact that they're reaching the limits of consumer tolerance of higher prices and have to make efficiency changes that are hitting the job market?
We keep getting these contradictory headlines in the labour market as well. It's really confusing. You take a big headline like that, super flashy, very concerning. Then you compare it to something boring like state jobless claims. State jobless claims say everything is okay in the labour market right now, and that's some fuel for the hawks into next month.
Most labour creation comes from smaller businesses. That is the reason why this is so complicated. You can get some high-profile large businesses that are making efficiency pushes, but this is what they always do. And this can be idiosyncratic. It is not where the most of the labour market growth really happens. It's the reason why so many people say, watch for the vibes, but really listen to the data. The fact that we haven't gotten data, we may not get data that we're looking for, really muddies the picture that much more.
The vibe shifting around the Federal Reserve. Let's talk about it. The hawks making lots of noise in the last 24 hours. At the end of August, the start of September, the Fed starts talking about risk management interest rate cuts. The market gets excited about a cutting cycle. Here we are facing the prospect of a prolonged pause and maybe, for the duration of Chair Powell's term, as the chair of the Federal Reserve.
So I was looking at Fed funds futures back just before the last Fed meeting about a month ago, and it was above 100% chance that there would be a Fed rate cut in December. You take a look now, it is less than 50% for the first time since that meeting. Suddenly, people are saying there is a greater chance of the Fed not cutting rates next month than actually cutting rates because of the pushback that we got from Cleveland Fed President Beth Hammack or St. Louis Fed President Alberto Musalem. And there's a real question here about how much they really do have the upper hand as inflation does remain above that 2%
Do you think that was the objective? I'm pleased you've gone back to that news conference. Wasn't that the objective of Chairman Powell, to make this a coin flip? A 50-50 bet for December, and a market that didn't really fully internalize the message in that news conference. And it's taken a flood of hawkish Fed speak in the last day or so to really get us back to maybe where he wanted us to be.
This is what a lot of people are speculating, which is the reason why they're saying bet against this. They're still going to cut rates because this is just wonderful messaging to try to take some of the froth out of the market. That said, it does seem like this Federal Reserve wants to go slower without the government data, and it looks like we're not going to get the government data. The idea that we could get the jobless, the overall job creation from the non-farm payrolls, but not the employment rate, the unemployment rate, raises a question about what kind of value this data actually will have.
Before we get into it, here stateside, let's just spend a moment, a couple of beats on what's happening in the UK. This is the price of chaos. The price of chaos and uncertainty is volatility, and it's been a very volatile session for sterling assets over the last 24 hours, both for sterling against the US dollar and for the bond market as well. Back and forth over what policy is going to look like in the budget in the coming weeks. This has been a problem that's been building for months now.
Yeah, so they're between a rock and a hard place when it comes to Rachel Reeves, the UK Chancellor of the Exchequer, and she was expected to raise taxes yet again, I think the third time in 3 years, even after pledging she wouldn't do so. Now she's trying to back away from that potentially. That's some of the news this morning that's coming out, and it's raising questions. Is this a good thing or a bad thing for the fiscal backdrop, given that there aren't credible means to cut spending? At this point, they're in a bad position, and the market's getting whipsawed by, frankly, just fiscal instability, a lack of any kind of fiscal structure of exactly how they're going to maneuver.
This is one of the most disruptive budgets I've ever seen, and we haven't even seen it yet. That's how ridiculous things are in the UK at the moment. Sterling all over the place. Coming up this hour, George Concalves of MUFG as the equity market pulls back. Francisco Blanch of Bank of America on the energy risk for AI data centers, and the former BLS commissioner, Bill Beach, on a month of missing economic data. We begin this hour with stocks already steady, heading lower after notching their worst day in more than a month. George Concalves of MUFG writing, market internals are starting to look exhausted and ripe for at least a correction. We think many of the positive catalysts are priced in, whereas the weak consumer and credit concerns are not. George joins us now for more. George, good morning, sir.
Good morning.
Have you ever seen such a freak out about a 2 to 3% pullback on the S&P 500?
It seems worse because it's been easy sledding all year long after Liberation Day, right? It's been up and to the right. And I think this is a critical time point. We're coming towards the end of the year. There's been a lot of gains had in many different asset classes. I think this is when investors start to discern, do they take chips off the table? I think that the last couple of days is reminding them. The last week and a half, to be honest.
What do you think's changing? What do you think's changing? Lisa and I were talking about this. The chairman clearly had a message in the news conference at the last meeting. Do you think the market failed to fully internalize what that message meant?
I do think there's an element of the Fed at play as well. The rates market, the bond market has been pricing in cuts for quite some time, and now we're at this kind of 50-50 injunction. I do think that if the Fed does not deliver on the easing that's been promised or at least expected, the markets are going to reprice, all markets.
Do you think this is a Fed story, or do you think this is more a change in the AI story from a pure play on the potential hopes and dreams to one that is more debt-fueled and more speculative with leverage put on top of it?
Even if that's the case, and I have my concerns around that as well, I do think that the cost of funding, the time of the year, all these great P&L all throughout the year, that we're getting to this point where, if the Fed doesn't deliver cuts, I think it's probably weighing on the psychology.
Okay, so why aren't we seeing the biggest drawdowns in some of the more cyclical plays? Why are we seeing the big tech names hit hardest? Which is the reason why I'm pushing back. I'm trying to understand exactly, do we need to have a narrative for this? Or is this just basically some people taking the chips off the table?
Yeah, so, look, the narrative always shifts, as you know. And the narrative and the reality as well, technology is a long-duration play. Always was. And if they went from using free cash flow to using debt, And interest rates will start to matter at some point, and so will spreads. And there's been actually a widening of spreads within that category. So I do think there's a fixed income component, not purely Fed and fundamentals, but I do think that if they're becoming long duration assets, they're going to swing with rates.
Do all of these forces, the forces I'm talking about, Lisa's talking about, do they put the year-end rally in jeopardy? Is that year-end melt-up now at risk?
Well, we're going to go through many mini cycles before we get towards the typical year-end seasonal type rally, which typically kicks off closer to Thanksgiving into the end of the year. I think it comes down to the data. And we're going to, at least now, finally, with the government reopening, we're going to get the data.
Some data.
Some data.
Not all of it.
Not all of it. But I do think the burden will be there, that the burden of proof is there, that, you have to have really strong jobs data to turn off the Fed. Even though they're talking tough, I think they'll go. They're still going to cut. Is our view.
Can we just get into the data and why we're not getting the household survey? What is it about that particular survey that makes it difficult to produce?
Well, I think it's the actual collection process, and let's also take a step back and realize the BLS has been, has had staffing issues all throughout the year. Getting people back in place, collecting the surveys, doing the household. It's much easier to do the establishment NFP.
What's your sense that this data would come in stronger than expected or weaker than expected based on some of the peripheral information that we have been getting?
Yeah, I think that the alternative data that we've gotten throughout the last 6 weeks still points to a weaker labor market. So I think that once that's clear and you see it, it's going to be hard for the Fed to back down.
So if the Fed does cut rates, where is the outperformance going to actually come from if it really is in response to a real problem, right? It's sort of this idea that be careful what you wish for when the Fed actually does cut rates because they could be responding to a real issue.
True. I think if it lingers into Q1. So if the Fed cuts rates because we've been kind of in this lull of no data, vol's been very low, there's uncertainty about what the outlook is. If they're cutting because there's the persistent weakness is one thing. If it's an accelerated weakness, I think that probably shows up more in Q1 than at the end of the year.
Oh, you don't buy the pickup in Q1 next year? Because that's what this market's priced for. That's what Fed President Muslim's talking about, a re-acceleration in Q1 26. Why don't you buy it?
Well, as both of you in your opening intro, yes, small businesses should be leading the charge. But if you look at the NFIB surveys, you're not seeing that pick up yet. And they're the most rate sensitive. So you need to get rates much lower to get them to actually start to hire and not just, be reacting to the fiscal policy that's been put in place. And look, let's not ignore the layoffs have been huge and they keep coming through even heading into the holiday season. And the seasonal sort of hiring plans aren't there. So the jobs market, in our view, still gets worse before it gets better.
They're real. That headline for Verizon was super concerning. The initial report, I think, came from the Wall Street Journal and said up to 15,000. And 4, 5, 6 hours later, that number went up 5K. That's super concerning.
Especially given the fact that it's trying to compete on price. This is because Verizon has fallen behind when it comes to attracting new consumers because they've tried to just raise prices on the ones that they're keeping. They can't do that anymore, which highlights really the state of some of the weakening that we're seeing.
Hiring intentions elsewhere aren't exactly robust for that 20,000 job cut pool to go and find a job immediately afterwards anyway. That's the problem. In a low-churn labour market, to have those kind of layoffs, where's the pickup going to come from?
The real question, though, going forward is how much will Fed rate cuts change that, right? How much is this something that is structural or cyclical? This has been the big debate on the Fed, and frankly, this is the big debate in markets. How much are we seeing a new efficiency ploy that's going to somehow reduce the need for human labor that's going to really skew the numbers in a material way?
The S&P this morning, session lows now. We're down by 0.5% on the S&P 500. George Concavas of MUFG is going to be sticking with us. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump is preparing substantial tariff cuts to address high food prices. The president unveiled framework agreements with Argentina, Guatemala, El Salvador, and Ecuador to reduce tariffs on common grocery items. The deals will reduce tariff and barriers on items like beef, bananas, and coffee beans in a push to lower costs. Meanwhile, new data out of China showed cooling economic activity at the start of the fourth quarter. Investment slumped at a record pace for the period, while industrial output saw its smallest gain since the start of the year, and retail sales slowed for the fifth straight month. And UK bond yields are paring losses after Chancellor Rachel Reeves dropped plans to raise income taxes. The change came in response to an improved fiscal forecast from the UK's budget watchdog. The country's fiscal hole was found to be closer to £20 billion, while expectations were as high as $35 billion, which still may require major tax rises to tackle in the future. That's Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, fixing affordability.
I want to address the affordability issue.
So we understand that people still feel the pain.
My administration and our partners in Congress will continue our work to lower the cost of living and make America affordable again.
That conversation up next with Bloomberg's Mika Sona. Live from New York City this morning. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks are downwind, down by 0.5% on the S&P 500. On the Nasdaq, check this out, down again by 0.9%. And check out what isn't happening. There's no bond market rally. Check out fixed income, 2s, 10s, 30s, yields up by a single basis point and 10s, 412.89. That's something new. We've talked about bonds doing what bonds are meant to do recently. Not happening in the last 24 hours.
And part of this could be, you could say this is part of the Fed move, the idea that the risk-off mood stems from the Fed being more reluctant to cut rates as a given in December. There also has been a different tone under this particular sell-off, which is you're seeing a commensurate sell-off in some of the corporate credit tied to some of the big tech names. That's new. Real pushback suddenly from debt investors who are saying, hold on a second, what are we paying for?
Everything that was doing so well is facing pushback across the board, and I'll throw in crypto as well. Bitcoin's had a terrible go of it too. If you've had a good year, you've had a bad few days. That seems to be the story at the moment.
Momentum has really struggled, and I think that raises this question. Is that the beginning of something deeper? Or are we starting to see that rotation that Mike Wilson of Morgan Stanley was talking about? Interesting that the NASDAQ is underperforming the Russell 2000. You're seeing the equal weight actually outperform for a consistent stretch of a number of days. So it raises this question, is this the beginning of the new stretch, which is a positive, or is this the beginning of a downturn that reflects a weakening that's a negative?
Equity futures this morning down by 0.6%. Under surveillance this morning, fixing affordability.
I want to address the affordability issue. The Trump administration has taken aggressive action to fix the Biden-created cost of living issues.
So we understand that people still feel the pain. We see really high wage growth and inflation is much more under control.
My administration and our partners in Congress will continue our work to lower the cost of living and make America affordable again.
So here's the latest this morning. President Donald Trump preparing new trade deals and substantial cuts to tariffs as the administration looks to ease affordability concerns. Joining us now is Bloomberg's Mika Sona. Mika, this is a bit of a pivot coming from the White House over the last week or so. What's behind it and what are the steps they're willing to take?
Yeah, absolutely. After the results of the election earlier this month, I think the White House is really looking to hammer the affordability, cost of living message that Democrats have done so well on. President Trump has essentially blamed any kind of economic downturn on his predecessor, Joe Biden. But right now, I think the circumstances that millions of Americans are feeling when it comes to their pocketbook is really catching up to them. So the administration is really trying to scramble here and find some ways to make that their winning issue.
Mika, how did they massage the messaging? Because the takeaway for a lot of people is going to be, you're focused on affordability and your first move is to drop tariffs. Aren't you acknowledging that tariffs are damaging affordability?
Well, one way that the White House is really trying to mitigate that is the idea of a potential tariff stimulus or surplus checks going to Americans with an income threshold that would qualify for that, similar to the COVID stimulus bill. Other areas that the president is looking to is potentially a 50-year mortgage. And there's other avenues, I think, that the White House is still exploring when it comes to trying to message and play up the message of affordability.
Mika, appreciate the update. Mika Sona in Washington, D.C. It's a problem, isn't it? It's a real problem.
You can't say that you want to remove some of the tariffs to address cost of living issues while also saying that tariffs don't cause inflation and have no impact on the price of goods. This is a conundrum for them, and it raises issues, frankly, for the Supreme Court case. How do they argue this is a national security concern if they can remove the tariffs because of an affordability issue? There are a lot of questions here, and it raises a real issue longer term for how they deploy this in a strategic way.
George Calvis of MBFG is still with us. George, this is a challenge for the economic marketing wing of the White House. Kevin Hassett has to dance around this carefully. But what's your conclusion based on the past few days?
Look, a few things. One, the tariffs do matter because not everyone's consumption basket is the same. So there's an acknowledgement if the food component for some cohorts matter more than others, then clearly that's obviously the way you address it. Number two, the tariffs haven't fully been implemented. I mean, we've obviously benefited with some price rigidities throughout the year. There was a lot of inventory pull-through and hoarding of goods. We're going to see we still believe that the tariffs are going to still filter through over the next 3 to 6 months. And the saving grace for the U.S. is that, we consume only 20% of goods, and most of it is still services, right? So we're still getting the disinflationary from the rent side, from wages not going up. But I think it's going to come through, and I think it's clearly an issue. And the second point, which the bond market, you have to be careful here because the bond market the saving grace for the bond market has been the tariffs. Ironically enough, it's been a revenue source.
True.
So if you're going to then shift to a sort of stimulus using tariffs, the bond market will then reprice, and then there goes all your benefit.
People are have sympathy for the national security objectives of the tariff push. I think people are sympathetic with that issue, one. But two, I don't mean to be flippant about this or snarky, but don't go after people's coffee. This is the pitfall of doing everything all at once on everyone without a nuanced approach to the kind of things that, you don't make here in America. You don't develop enough. You don't grow. That's the problem.
Yeah, avocados, bananas, coffee. Every morning, everyone goes and gets their coffee. That's sort of a barometer for how much prices are going up. But again, this goes to the idea of how much the recognition of the public opinion and how much it's declined on some of these cost of living increases, how much it's affecting the politics. How much are we underestimating how much that's going to really affect policy going forward?
The Supreme Court's another issue as well. They might strike down a lot of this by the end of the year. You throw in the fact that the Federal Reserve isn't going to be cutting or hiking anytime soon. They're just going to stand pat. You've got an administration backing away from tariffs. You look at this bond market. Now, George, what are the risks around fixed income for the new year?
So that's the challenge, right? That's why I was making this point that it's been a good year for most asset classes. Even treasuries rallied, right?
Yields have fallen.
Look, and that's been our view, by the way. We were out of consensus. We were pretty much bullish duration. But the fact that we keep stalling at that 4% level, it's going to be hard for rates to rally if we're seeing these sort of, indecision either from the Fed or what's going on the fiscal front. The bond market, I think, is in this sort of impasse that could, see a backup in rates, easily 25 basis points.
Well, this is what a lot of people have been debating on this show. Whether we're going to see some sort of stimulus early next year, that's going to cause yields to go up in anticipation of inflation, anticipation of stronger growth, or if that stimulus extends to monetary stimulus and the use of the balance sheet to suppress yields, even if that is the potential ramifications. How are you playing that out?
Yeah, it's a timing issue, ultimately, right? And of course, you can throw in there, Chair Powell's in play until at least May, and then what happens after that? There's going to be a big timing issue. So, like for us, it's more about the forward curve and how the forward curve is signaling that rates are actually going to head higher in 26, 27. Slightly, the lower sort of terminal rate has been shifting up above 3%. And if you look at the forward curve in 27, 28 is already at 325. So you're already starting to see the market saying, hey, it's going to be hard to pin rates down.
At the same time, yesterday we saw something new, at least versus the past couple of months, which is the return of the Sell America trade. We saw it with respect to bonds. We saw it with respect to AI. We saw it with respect to the dollar. And I'm just wondering, do you think this is going to come back, or do you think this is a momentary blip until people realize that everywhere else it's not so much better?
I'm not sure if all the asset classes will stay in unison like that, because if we do go into a more an actual slowdown that's more visible and present and the labor market to us is so critical that eventually the bond market would catch a bid. But in this period of indecision where it's very ambiguous, you don't know where you are, and you have this fiscal uncertainty, I think that all asset classes can go down.
What's your assessment of where the labour market is right now? What's a good jobs number? What is a bad jobs number? What is the break-even rate? What's the range of estimates for you and the team?
No, look, and that's a moving target, and it depends on a number of factors. We're still, and of course, we may not get the unemployment rate, so we're more focused on the unemployment rate. And the lack of, there's a lot of entrants that are not coming into the jobs market. I mean, if you look at the youth unemployment, that is a shadow unemployment rate that's, really not filtering through to claims data. Like claims data, if you don't have a job, you can't go and actually get the claims, right? So, like all these things have been altered, and so you're not really getting a good sense. I think that, anything like around 50,000+ NFP.
50 plus gets it done. Keeps a lid on unemployment.
For the most part.
Yeah?
Yeah.
The problem is that we're not going to get unemployment.
Right.
Has the Federal Reserve put out where they think the break-even rate is and what they think is a good number? I'm trying to work out what the guide's going to be for December 10th. We will get payrolls. We won't get unemployment. What's a good number? What's a bad number? What leads this Fed to cut interest rates?
I mean, the federal work numbers are going to work through there as well. So we're probably going to get a really weak NFP, at least for October. And September could be pretty weak as well.
What's your highest conviction trade heading into the end of the year?
So, I mean, we like being underweight credit at this point because how much of it's been priced in. Even mortgages have performed, so even mortgage spreads are too tight. Basically, staying very defensive down the curve, and anything beyond the 7-year point on the Treasury curve, I think, is at risk, which will then amplify IG losses as well as mortgages.
So, what do you like?
Just short-term securities.
Short-term securities and just cash. Essentially, you're packing cash into your mattress and expecting for the worst. Is that right? Well,
sort of. But, I mean, it's more of that it's defensive in anticipation of if we get the sort of weakness in the macro front, then you can redeploy. So I think, it's more about just trying to look for a setup for next year.
A super bearish George Goncalves of MUFG. Thank you, sir. Good to see you, George.
Cheers.
George didn't say that, but that's my conclusion for anyone sat in the front end of the curve, parked in cash, waiting for bad things to happen.
Yeah, so that you can come in and buy. I guess that's the one silver lining is that potentially there could be better valuations that come down the pike. But there is this feeling that right now there's a dichotomy between those people who say, look, this can't continue. There's too much froth that potentially needs to come out of the market before we can get in. And those people who say it's a Santa Claus rally. People are going to feel like they missed out after 20+% earnings in the NASDAQ overall. They've missed the rally. The FOMO is going to get everyone back in. And ultimately, that's the debate heading into year end.
There's nothing festive about this move so far this morning. We're down by 0.6% on the S&P, and it's not coming with a rally in the bond market. Yields on 10-year treasuries are just about unchanged now on the session. Coming up on the program, in the next segment, we'll catch up with Francisco Blanch of Bank of America on the limitations threatening the AI data center build-out. Plus, Yahira has some of the morning movers for you. StubHub plummeting after its first earnings report since going public. That stock is down by 19%. Live from New York City, you're watching Bloomberg TV.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
The losses continue. We're down by 0.6% on the S&P, on the Nasdaq 100 down by 1%. Session lows. We snapped a 4-day streak without losses on the benchmark stateside in yesterday's session. The biggest one-day loss going back to October, so the biggest one-day decline in about a month. On the Nasdaq, session lows and down another 1% so far. Turn to the bond market. Look what's not happening. No Treasury market rally this morning. 10-year bond yields just about unchanged at 4.1250. 2-year bond yields at 3.5849.
You can say this is because of the Fed. I'll bring another aspect to this. Yesterday, we got that 30-year auction. I was saying that it was going to be exciting. It was exciting. There was actual pushback, and it led a sell-off in the long end of the yield curve that moved into the corporate debt market, where there has been some longer-term debt that's been sold. So how much is this what's at play versus actually a Fed rate bet?
I'd throw in the hawkish chorus as well in the last 24 hours. I think it's material. And clearly there's an objective here to get the odds for December back to a coin flip. Because I don't think this market fully internalized the message coming from the chairman in the last news conference.
And you can see from Fed funds futures that it went from more than 100% chance of a December rate cut right before the October news conference to now below 50%, to that coin flip that you're talking about, as we hear this churn of different Fed officials coming out and saying inflation still is a real problem, and that is our priority.
That's the story, the front end of the curve, as Lisa pointed out, the very long end of the curve. Check out 30s this morning, up another 2 basis points, 4.73. That's the cross-asset setup so far this Friday morning as we count you down to the opening bell about 3 hours away. Let's get you some morning movers with Yahira. Hey, Yahira.
Hi, John. We start with Warner Brothers Discovery. Shares are rising 3% in the pre-market on growing conviction a buyout could materialize. That's because the Wall Street Journal is reporting Paramount, Comcast, and Netflix are all preparing bids ahead of a November 20th deadline, with Paramount eyeing the whole company while Comcast and Netflix are eyeing the studios, HBO Max, but not its cable studios. And we move on to Applied Materials. Those shares are falling 5.5% in the pre-market after reporting another quarter of falling sales. This is a company that makes the machines that make semiconductors, and they say that U.S. export curbs to China are weighing on sales. It expects that drag to continue into the current quarter and doesn't expect a pickup in demand until the latter part of next year. And we end on a big mover to the downside, and that is StubHub. Shares are falling 18% after delivering a much bigger loss than Wall Street expected in its first earnings report since becoming a public company. Revenue and ticket volume did come in solid, but shares started to plunge yesterday on the earnings call when the CEO said that they would not give a 2026 outlook just yet, despite him insisting that demand for live ticket events remains phenomenal. John?
Brutal move. Yahira, thanks for the update. Appreciate it. On our radar this morning, the White House readying substantial tariff cuts to everyday items as it ramps up messaging on affordability. The cuts coming through trade deals with Latin American countries that export items like beef, bananas, and coffee beans. Elsewhere, Fed officials casting doubt on a December interest rate cut. Minneapolis Fed President Neil Kashkari saying he didn't support the central bank's latest interest rate cut. Plus, Cleveland Fed President Beth Hammack sharing a similar take.
I think we need to remain somewhat restrictive to continue putting pressure to bring inflation down towards our target.
The comments highlighting a growing divide among policymakers.
Ultimately, they're hamstrung between the idea of a labor market that does seem to be slowing and inflation that still is above target. What Beth Hammack of the Cleveland Fed said, though, I think is really interesting. She pointed to Fed credibility. She said, how can the Fed maintain its credibility if it doesn't prioritize getting inflation down to 2%? That ultimately may end up being the quagmire. How much does the Fed look at the dollar for a tell on exactly how much this is a Fed credibility issue versus maybe just a usual monetary policy decision? But that seems to be preeminent in some of their discussions.
It's funny, isn't it? Because those comments from Beth Hammack make the process appear to be more credible, even if they do decide to cut interest rates with inflation closer to 3 than 2.
Oh, what a skeptic. I love it. This is actually what a lot of people are saying. You're absolutely not wrong. And I think that a lot of people are saying the same thing. It sounds so good. Doesn't this actually do exactly the job that people were expecting the Fed to do, which is they're still going to cut rates, don't worry, but they're going to try to make it seem like it is a very deliberative process that really is come towards you.
I don't think the division is contrived. I think it's real. I just think that the optics are valuable right now, because the inflation story, look, you'd look at markets and you'd still say that inflation expectations are still well anchored. Well, thank goodness we have people like Beth Hammack on the committee to make sure that we just pull back the individuals that would like to go 50, 50, 50 every single meeting and get us down to 2 point something almost immediately, with inflation closer to 3 than to 2.
I'll add to that Stephen Myron, who is the Fed governor, who's thought to be the uber dove, who wants to cut by 50 basis points, came out yesterday and was talking about how he's concerned about overuse of the balance sheet. So if you want to take a look at even the uber doves coming out and really expressing some concern about overly interventionist policy, he's not alone. He's actually joining the chorus.
He's not running to be Fed chair. Just to throw that out there. Equity futures this morning, session lows were down by 0.6%. Big focus on the labour market, of course, and this headline that came yesterday, Verizon discussing cutting as many as 20,000 jobs, downsizing the workforce by as much as 20%. People familiar with the matter telling Bloomberg the cuts could come at every level of the business. That one could hurt.
Yeah, and this one comes after a leadership change. Dan Schulman coming in as CEO. And one thing that he said was that they're going to take bold and fiscally responsible actions. He said, these will not be incremental changes. We will aggressively transform our culture, our cost structure, and the financial profile of Verizon in order to put our customers first. They are dealing with the fact that T-Mobile and AT&T have been eating their lunch. They have been lowering prices, and they have been getting a lot of new customers. They have not. So now they have to compete on price. Is this a telecom story, or is this a broader question of competing on price and making efficiency cuts in the process in order to deal with the fact consumers just don't want to pay up?
That is the argument of the doves right now in the committee, essentially. Everything you just said about Verizon is the argument of the doves on the Federal Reserve at the moment.
Which is the reason why they think that inflation is not going to pick up and that ultimately you have to prioritize the labor market. And this is a structural shift where they can be more efficient. That is the key. They can be more efficient and do more with less because of some of the technological advancements.
Verizon this morning in the pre-market higher by just about 0.2%. Let's turn to energy. The White House pushing for affordability while AI electricity demands remain poised to raise costs. Francisco Blanch of Bank of America writing, we are concerned that retail electricity affordability might cause politicians and regulators to slow down data center development. Francisco joins us now for more. Francisco, good morning, sir.
Good morning. How are you?
This is timely and very important. It's good to see you. Let's take a step back. What's happened to electricity prices in places like Virginia, where you've seen this massive data center build-out?
They're going up. No surprise. Remember, ever since the beginning of mankind, we've tried to use more energy to reduce the labor input into any process, right? I mean, whether it's inventing fire or just electricity itself. And I mean, everything is about energy, right? Energy and technology are the main drivers of productivity. And we are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy. So the technology and the energy are combining in a way that's, to your earlier comment, we're seeing job reductions, but at the same time, we're going to see a massive increase in power bills.
AI is winning the PR fight on Wall Street. It's losing on Main Street. How do you convince people it's good for them when you build a data center like this in their area and you sit there and you say, look, this is what's happening. My job's under threat and my electricity bill's going up. What's AI doing for me?
Well, I mean, hopefully it's allowing you to repolish your skills and potentially facilitate a lot of the processes in your life. But you're right. I mean, where we're seeing the shortages in the skill base, it's really in more manual labor, and that's what CEOs are telling us, right? That's where the gap is people able to do things with their hands. One key example people bring up all the time is, well, it's not easy to apple pick, right? I mean, you actually need a lot of computing power to replicate apple picking, but yet for a human, apple picking comes just naturally.
How much does this muddy the investment process? As an investor, how difficult does this make it to say, look, I want to invest in electricity. I want to invest in building these plants. Right. If there is this policy uncertainty of how politicians are going to respond to rising prices.
So there's definitely going to be a concern, right, with prices rising. But also remember, it's not just about the power centers themselves. It's also about the transmission lines, the connection, the grid, the substations. There's so many things that go into the electricity network. They're very, very expensive to upgrade. And I think the key point people need to remember is that for the last 15, 20 years, average electricity demand has grown at 0.2, 0.3% a year. Now it's growing at 2 to 3% a year, 10 times the rate. So in order to accommodate that kind of demand growth, you need to invest very, very heavily. Or you can do what Texas is doing, which is deregulate and just go very fast. I mean, Texan power demand is growing at 5% per annum. You won't even find an emerging market that's growing that fast. But they've taken the view of like anything goes, right? So you can be highly deregulatory, like just super fast, or alternatively, you got to find a way to accommodate these data centers. But utilities have long-term contracts. They can't give away on them. Otherwise, the lights would just go off. We wouldn't be able to talk right now.
This is fascinating because there is the potential deregulatory impulse coming from the United States, and you're seeing this pretty broadly.
Right.
You're not seeing that in Europe. And right now you're seeing a lot of pressures coming on the electricity side, not only from data center usage, but also just from some of the heating costs from potentially a cold winter. Why is it a better bet to expect energy prices in the UK and, frankly, in mainland Europe to go up much faster than those in the United States?
So one advantage, if you can call it that way, that Europe has over the U.S. is that Europe destroyed its demand for power in 22 and 23 with the Russia-Ukraine crisis and the big increase in gas and power prices that came on the back of the Russian invasion of Ukraine. So as Europe lost access to all that Russian energy, and of course, we also had an issue with French nuclear reactors that year. We ended up with a massive spike in prices, gas and power. So that hurt demand for industry. So Europe has plenty of spare capacity to ramp up electricity supply. And in fact, utilization rates for gas-fired power stations in Europe are 23% on average. I mean, so that means that 3/4 of the time, these gas plants aren't running in Europe. So they could bring those back. And of course, the other thing that Europe has going for it is that in the next 12, 18 months, America is going to export a lot of liquid natural gas, a lot of LNG. And that's part of the trade deal with President Trump and President von der Leyen. Europe is going to be buying a lot more gas from the U.S. and it's going to hopefully become cheaper after extremely high prices for the last 5 years. So that's one tailwind for Europe. Now, of course, it's a tailwind that comes on the back of a major industrial compression and 4 years of recession and quasi-recession in Germany. So it's not something that they were necessarily building, but something that Europe ended up with.
Throw in the issue that are also gripped by climate doom. Climate doomerism across the continent. I don't think it's surprising that Bill Gates came out recently and backed away from climate doom because he's got a big stake in building out a massive AI push across this country as well. And that's the issue. You've got a generation that has been indoctrinated by climate doom in Europe, and I don't see them backing away from that anytime soon. Do you? Look at the UK, great example of that.
Right. And Europe has been trying to pull back also from nuclear power. Many countries continue to try to shut down nuclear reactors. There's a couple of projects in between. People, we are a little bit over-reliant on gas and power, on wind and solar, and in the power sector. And I think the build-out in the last 4 or 5 years has created some vulnerabilities because there's been little investment in the grid in Europe, but very importantly, very little investment in what's called battery storage for power. So in California and in Texas, they've kind of figured this one out already. So they've invested very heavily in those areas. So you've seen as a result a better behaved power market in Texas. California is a bit of a different story because it's got other issues. But Europe needs to really step up on the investment in battery battery storage.
You've given us tons to think about. Yeah. What's the trade? What are you advocating for at the moment?
So we are generally bearish on European natural gas prices because we think all this wave of U.S. natural gas is going to push things lower. That's on the gas side. We are still constructive on things that you need to build those data centers, like copper, medium term. We think copper is going to go to $15,000 a ton, medium term. We still like silver. Silver is the best electricity conductor. Of course, it's already expensive. We think we'll go to $65 an ounce. And so again, more bearish on the gas, still bullish on the metals that are significantly supply constrained. And then I think on the oil side, we are maybe more on the bearish side here, although geopolitics are very complicated there, right? So,
final question. It's an important one for viewers waking up this morning. Is our coffee going to get cheaper or not?
Well, I mean that's a trade situation, right? I think eventually, Brazil is the biggest exporter of coffee, of beef, and biggest in the world. So, I mean, obviously, tariffs on Brazil don't help. But hopefully, the answer is yes. Agricultural commodities are beautiful in the sense that they tend to mean revert a lot faster, for the most part, with the exception of cattle. They tend to mean revert a lot faster than, for example, metals, which can trend on forever because it takes 10 years to build a mine.
We hope you're right. Thank you, sir. We appreciate it. As always, thank you very much. Francisco Blanch there of Bank of America the AI build-out, the data center build-out, and the political pushback we're about to see in this country, I think could be quite severe based on what happens with electricity prices in the not-too-distant future.
Yeah, and one of the key questions is, what do they do about it? Is it with respect to putting a stop to some of the data center proliferation? Is it sort of capping some of the build-out, or is it just mass deregulation akin to what we've seen in Texas that allows a very rapid build-out of a lot of different electricity grids?
Equity futures this morning, session lows right now. We're down by 0.7% with an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. Ukrainian drones attacked a giant Russian Black Sea oil port overnight, prompting a state of emergency. The attacks come as Russia has been ramping up strikes on power facilities across Ukraine, aiming to disrupt the country's energy system ahead of winter. Meanwhile, Amazon and Microsoft are lining up against Nvidia. The Wall Street Journal reporting the two companies are supporting legislation that would require chip companies to satisfy U.S. demand before sending products to China and other countries subject to arms embargoes. Nvidia is fighting the legislation. And the shutdown is over and paychecks are finally flowing with a bit of extra cash given to some federal workers. Homeland Security Secretary Kristi Noem announced TSA officers who worked without pay during the shutdown will be getting $10,000 bonus checks, calling the payments a reward for exemplary service under strain. That's your Bloomberg Brief. John?
I hope that happens. Yahira, thank you. Thanks for the update. We appreciate it. Up next on the program, waiting for delayed data.
The October employment report for the payroll side will be able to be calculated, but the household survey wasn't completed. So we will never know what the unemployment rate was in October.
That conversation up next with the former BLS Commissioner, Bill Beach from New York City. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks are lower, negative by 0.75% on the S&P. We're down by more than 1% now on the Nasdaq 100. On the Russell, we're down by 0.85. If you turn to fixed income quickly, I just want to give you a snapshot of what's not happening in treasuries. Yields are up at the long end of the curve on 10s and on 30s, at least for the 10-year gap to about 4.13. As a level, 4.13 is nothing to be concerned about, but it's just the move relative to what's happening with risk assets that catches your eye on a morning like this one.
Yeah, there are a couple of different narratives. On one hand, this is yield curve steepening that's coming with the expectation that maybe the Fed will be more aggressive earlier next year, despite the fact that we are in something of a data desert and the fact that there has been this pushback. On the other hand, you are seeing supply concerns. And you're seeing that in a very real way, both on the corporate side as well as on the U.S. government debt side. And we saw that yesterday. How much is that percolating into some of the price action?
We'd like some data under surveillance this morning, waiting for delayed data.
The September jobs report has already been cooked, and we expect we might get that next week. The October employment report for the payroll side will be able to be calculated, but the household survey wasn't completed. So we'll get sort of half a jobs report. Most everything else, I think, we'll be able to concoct the correct number after we look back. But we will never know what the unemployment rate was in October because there wasn't a household survey.
So here's the latest this morning. Official economic data set to return after the record-long government shutdown, delayed releases for more than a month. Joining us now, the former BLS Commissioner, Bill Beach. Bill, welcome back to the programme. Can you give us some insight into how the BLS will be operating at the moment after a month-plus long government shutdown? What the first order of business actually is?
Well, I think they turned the data systems on yesterday to sort of end that data desert that you just referred to. And so hopefully everything rebooted well. That's always a question. And then they have to ask about the field staff, how many people are coming back to work. You know, some of those people probably took early retirement or retirement. It's kind of an older staff anyway. We might want to talk about the CPI. But back to the jobs report that Dr. Hassett mentioned. Yeah, it is true. The jobs number, which is acquired from firms through an electronic survey, Now BLS will prompt those firms to send their survey in electronically to Chicago or Fort Walton Beach, where those forms are collected, and we will probably have a jobs number for October. But the household survey, which is collected largely by calling people on the telephone and asking them a series of questions, quite a lot of questions. We may never have those data, and that includes not only the unemployment rate, but all of the breakout by race, by region, labor force participation, all those things that are really important for policymakers to follow. I'm also concerned about the CPI, but I think on the labor side, that'll be the biggest hole. I do expect the jobs report to come out for September, which was fully collected, but not quite written up yet. I expect that next week. I think they're right about that.
Well, you mentioned inflation a few times. Just describe the CPI process, the data collection, how that survey's put together, and why it's so difficult to produce that number.
So the CPI is collected from the first of the month to the end of the month. They put as many working days in there as possible. And it's largely collected, I'd say about 70% of all of the observations or goods, services, are collected by people going into stores. These are BLS employees, and literally going down the aisles and marking down the price and seeing how many, potato chips are in the bag. So it's a labor-intensive thing. Now we're starting that process probably next Monday. That only gives us 2 weeks to collect 4 weeks of data. Now, it is true that a lot of that data comes in electronically. The housing stuff, the gasoline, automobile prices, those are electronically produced data from private sources. So 30%, fine, no problem. But you can't have a CPI with only 30% of the data. So I'm worried about the CPI. I'm worried about the quality of the October CPI. So that's an issue, and we'll see how that works. The November numbers are also at risk because we're going to be collecting those November numbers as well as collecting as many of the data on the October side as we possibly can. That's going to be really dicey, but I think the staff is probably up to it. So let me just say, bottom line, no unemployment rate, no labor force data that shows the demographics, and I think people should be concerned about the CPI. The PPI is collected largely electronically, and of course the import-export indexes are entirely collected from administrative data from the Commerce Department.
Bill, just quickly here, how much are you seeing the reduction in staff for the Bureau of Labor Statistics just generally presenting a problem in both ramping up but also going forward presenting the same kind of accurate data?
Well, at the beginning of the shutdown, we had a really firm number. It was about 1 out of every 5 employees at BLS had quit. But there are 2 areas of really great concern. First off, the field, and I've mentioned that several times. So many of our data from the Employment Cost Index, which is field collected, the CPI, the household survey that does the unemployment rate, these are labor intensive. So you have to be really concerned for the 1,000 people basically who work in the field. We don't know how many of those people are coming back to work, honestly. They're largely an older staff, and that means they may have choices in whether they work or not work. And then the other area that I'm very concerned about is the senior leadership of BLS, about 31 positions that are absolutely crucial. And about 13 of those we think are now vacant. That's the largest vacancy rate ever. And so this is expert knowledge that just can't be replaced quickly by going out to Indeed.com and finding some good resume. Those 2 areas I'm very concerned about.
Bill, thank you, sir. I leave this interview with way more concern than I had going into it. The former BLS Commissioner Bill Beach there on the difficulty of putting together this economic data.
Yeah, and going forward, what it means for the staffing levels at this key economic statistics agency.
The second hour of Bloomberg surveillance coming up next with equity futures near session lows.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
you have the payroll number, but you don't have the unemployment rate, we don't really understand what the supply situation is looking like.
It's not a foregone conclusion that the labor market is in balance.
I think we still have enough information to say that the economy is still kind of muddling along.
There is enough evidence here for the Fed to continue to cut rates, at least one more time.
It's just this gradual ongoing softening that's keeping the Fed on edge.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores don't look good this morning. We're down by 0.7% on the S&P 500, negative on the Nasdaq by more than 1 percentage point. In the bond market, 2s, 10s, 30s. This bond market's not rallying. Yields are higher by a basis point on 10s, up by almost 2 on 30s. Over the next week, a big focus on the earnings. Nvidia, top of mind, but a major focus on the consumer. We should get some jobless claims next Thursday. And in the mix, numbers from Home Depot, from Target, from Walmart.
This is the perfect encapsulation of the K-shaped economy through some of the earnings reports that we're going to get next week. A real question for Walmart and Target of how much they're able to pass along their price increases to consumers, whether people are downshifting into lower priced items, other types of elements of concern that you would see at a point of some sort of inflection, particularly to the weaker side. On the flip side, we can get a gut check from NVIDIA. How much is the AI hopes and dreams of 2025 continuing to power all of the earnings that we're seeing in the AI sphere and can continue to deliver some sort of upswing to markets, even in the face of potentially softer consumer spending?
Just every day when you see this kind of drawdown, there's one stock I check. How's Apple doing? Apple just seeing some relative outperformance here and there when you have these kind of aggressive drawdowns. They were criticized about a month, 2 months ago for sitting out the massive capex spend, not leaning hard enough into AI. All of a sudden, some jitters around that story, and Apple's talking about a better iPhone sales story going into year end and the holiday season. And it looks like a relatively better picture now for that company.
Apple is oddly the uncorrelated tech stock because they didn't necessarily go all in on artificial intelligence the same kind of way. So for people who are worried about the overbuild in data center land or potentially the overspend in Oracle and OpenAI land, well, Apple is not necessarily part of that because they're not Apple AI.
Nasdaq futures this morning down by 1.2%. Session lows right now in the S&P as well. We're down by 0.8%. Coming up this hour, we'll catch up with Victoria Fernandez of Crossmark as valuation jitters rattle investors. Sarah Bianchi of Evercore as the White House pivots to affordability. And Alejandra Grindle of Ned Davis Research as Verizon moves to cut perhaps up to 20,000 jobs. We begin this hour with stocks losing ground. Victoria Fernandez of Crossmark warning against chasing this market. She writes, we have seen this story before. Breadth deterioration coupled with bullish sentiment can lead to 5 to 10% pullbacks, and we wouldn't be surprised if the story repeated itself here. Victoria joins us now for more. Victoria, welcome. I'm going to kick things off with the same question that I asked George Concalves about an hour ago. Have you ever seen a freak out like this one over a 2 to 3% pullback on the S&P 500?
Yeah, I mean, yes, we have seen these pullbacks before, and it was what you were just talking about. When we have that breadth deterioration in this market, when you have this internal weakness kind of bubbling under the surface, but at the same time, you have this, for lack of a better word, you have this exuberance, you have this sentiment that is extremely bullish. At some point, those two worlds start to collide and you see this pullback. But look, Jonathan, we are still not that far below all-time highs, really, when we look at the markets as a whole. So I still think there's probably some room to see more pullback, especially when you're seeing small caps down as much as they are. We know the tech stocks kind of led this rally. We see them leading the pullback we're having here. But I do think some of the internal weakness is driving this. And the fact that the government shutdown is now over, I think investors are starting to look and go, wait a minute, we've been ignoring some of these facts that have been out here, some of these warning signs. Now they're starting to pay attention to it. And we're getting a little bit of a consolidation of a correction here.
This is going to sound slightly cliche, but I'm going to run with it. Just how strong are the hands in this market right now, Victoria? I was listening to Amy Wu Silverman of RBC earlier on this morning. She tuned into Bloomberg Radio and she phoned in and she said something like, I would describe people at the moment as fully invested bears. How fragile has the buying actually been?
I think that's a great description of where a lot of investors are. It's where a lot of our clients, I think, feel like they are, because we tell them you want to be invested in this market. The pull down that we've seen so far has not changed the trends. The trends are still higher. Until we see the trends change, we see negative relative performance coming out of some of these leadership sectors, and staples start to perform a lot better, then I think you continue to see the market, although it will churn, you will continue to see it move higher. And that's why you want to be invested in the market. But there are these warning signals. We haven't been getting the data. We're about to get it. What is it going to tell us? Is it going to say we're weaker than what we thought some of the private data was actually telling us? If so, then yes, you will continue to have some spaces where you want to put some defensive components in your portfolio. So it does make sense. It is fully invested, but a little bit of a bearish outlook.
Victoria, just to build on what John was asking about, it does seem like institutional investors are fully invested, especially if they missed out on the rally earlier this year. It does seem, though, like there is retail selling. And when you take a look at some of the high momentum sides of the market, that's what's led the drawdown. It raises this question. Earlier this year, retail and buying actually led to the upside, and investors chased that. Is this going to be the reverse of that? Retail selling, and then eventually institutions chasing that as well? Or are they stepping in to actually pick this up?
Yeah, unfortunately, I think you do see a lot of the retail investors chasing that market. And like you said, the reverse right now. Institutional investors tend to take a little bit of a longer term approach. And so they are slower to move on some of these changes. They look and say, what are we looking at 3, 6, 9, 12 months out? Retail investors tend to be a little bit more emotional investors. And so you see things change more quickly and more turnover in some of those portfolios. We have said all along, don't chase this market. Let it come to you. There's going to be an opportunity here because of the weakness that we saw in breadth and internally, that the market's going to come to you. And that's what it's doing right now. So I would actually take this as an opportunity to add to some of the names that you've liked, some of the sectors that you're starting to see troughs and see uptrends. We've talked about them before. You look at healthcare, you look at the big banks, you look at some of the materials components and the metals that are there, and even energy. We saw about 40% of the S&P energy sector actually make 3-month highs earlier this week. So I think there's some places you can play. Institutional investors will start stepping into that, but retail investors tend to be a little bit more emotional and move with what they're seeing in the headlines.
You didn't mention tech, Victoria, and I do think that we have to focus on that, given the fact that not only has the tone shifted, but there's been a shift in the fundamentals of some of these companies. Not that they're not earning tons of money, but it does seem like the debt issuance of the past few months has really caused some concern. You are seeing bond markets start to push back. You're seeing concessions in some of the new issue market. You are seeing some bonds lose a ton of value, particularly from Oracle. I'm just wondering if this is a warning shot to you that there has been a material shift in the tech sector and greater risk going forward.
It's definitely a warning signal, Lisa. You know, we watch spreads very closely in the bond market. They are a warning signal, that canary in the coal mine to tell you what's happening. And we've seen the widening over the last month and even over the last quarter. Year to date, we're about equal at this point in time. We had been extremely tight. We've seen spreads widen out. And yes, when it comes to tech, you're seeing large issuance come out. And it's been a question for a while. How are a lot of these companies going to pay for what they're saying they're going to do? And how is that going to affect free cash flow? How is that going to affect their debt ratios? And we're seeing some of that come to fruition now. We're seeing some concerns about what that means longer term, especially if we're not getting the revenue generation that a lot of these companies say they're going to. So definitely something to watch and to be careful on when you're looking at the debt market.
These companies, Victoria, seem absolutely determined to spend. They've said that repeatedly. They are determined not to underinvest, and they don't mind taking the risk of over-investing. Do you really see this market in a position at the moment, at least, to inflict discipline on those hyperscalers who are absolutely determined to spend hundreds of billions of dollars on this effort?
Yeah, discipline is an interesting word, Jonathan. I'm not sure that they are. These investors right now look at these companies and they believe what they're telling them. They're saying, okay, even though we saw free cash flow take NVIDIA out of the equation down almost 20% year over year for a lot of these companies. And now we're seeing debt issuance move higher. Investors still say they're going to be able to do what they're doing. You heard Lisa Su this week talk about 80% revenues from data centers for the next 3 to 5 years, year over year. That's a lot of positivity coming from these companies. But yet at the same time, we're hearing builders can't deliver on data centers. There's not enough energy and power for some of these data centers. So I would be a little more skeptical than maybe the average investor is. But, I'm a bond girl at heart, so that makes sense that I would be a little more cautious. But I do think for now, they are taking these companies at their word because their earnings are supporting it. The minute we don't see earnings supportive, that's when I think you'll see it all flip.
Victoria, so how are you handling this? Are you selling tech stocks and selling the bonds as well? Are you buying the stocks, selling the credit? How are you playing it?
Yeah, so we're trimming on some of our big tech names, but also we want to stay within, we have parameters within the benchmark of where we need to be on these. And because there's such strong holdings in the benchmark, we can't just eliminate these holdings completely. You have to have exposure to them. But we are taking the opportunity to put it to work in other areas, both on the equity side and on debt. And looking at that debt, like 7 to 10 years out, we're starting to see the yield curve steepen. That 2 to 30 spread was like sub 100, and now we're about 115. So we're starting to steepen a little bit. It's good for financials. That's our main area of where we're looking, but we're also looking at healthcare, buying some bonds and some equity there. And then, like I said, looking at materials a little bit as well. I think those areas on both sides of the equation you can have in your portfolio.
Victoria, thank you. Appreciate your take. As always, Victoria Fernandez, a bond girl, her own words. Victoria Fernandez of Crossmark. If you are a bond person, you'll be looking at this situation and it'll get your radar up, that's for sure.
Well, you took a look yesterday at Oracle's, say, 30-year bonds, and they plummeted. They're 92 cents. They were at 100 cents about a month ago on the dollar. And it raises this question of how much pushback has there actually been? And going forward, will this reduce some of the hopes and dreams of some of the more speculative players? There was another one, Applied Data Technologies, that came out and had to sell bonds at a huge discount in order to get some of the investor appetite up. So, again, you are seeing pushback, and that is a different tone in markets.
I keep going back to that Sam Altman interview. I know I keep going back to this.
You do.
I just found it so awkward. Just asked a very direct, simple, reasonable question. Your revenue's here. Your spending commitments are right out there, and they're really, really big. How do you get from here to here? How does one inform and support the other? Just a non-answer. Sell your stock if you want to. I found that really uncomfortable. For a moment we're in, with the valuations we have, that's not the right answer.
Faith-based investing may work for certain asset classes, in particular tied to equity. They do not work for bonds. And that is what you're seeing when it comes to Oracle. Even people are worried about Microsoft and how much they're tied to OpenAI and how much their valuations highlight the losses that OpenAI is expecting to have going to 2030. They're not expecting to turn a profit until then. So, again, it highlights exactly what you're talking about. A sort of gap in balance sheet logic.
Losses picking up this morning. We're down by 0.9% on the S&P 500, down lower even more on the Nasdaq 100 so far this morning. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Verizon is discussing plans to announce job cuts that could downsize the company by as much as 20%. The planned cuts could impact up to 20,000 workers and are part of an aggressive strategy to reclaim market share. The Wall Street Journal reporting the company is also planning to convert 200 company-owned stores to franchises. Meanwhile, Minneapolis Fed President Neel Kashkari joins other Fed officials who have expressed skepticism over the need for another cut in December. Kashkari said he didn't support the last interest rate cut. Some Fed officials are arguing for holding rates steady to balance inflation and weaker hiring in the labor market. And Blue Origin launched its New Glenn rocket to space and successfully deployed 2 Mars-bound NASA spacecraft yesterday. The rocket's booster separated from its upper stage, descended back to Earth, and landed on a barge in the Atlantic Ocean after firing engines to slow itself down. The successful mission puts Blue Origin on track to challenge SpaceX's grip on the launch industry. That's your Bloomberg Brief. John?
Yahara, thank you. Very cool. I will always be impressed by that. Thank you. More from Yahara in about 30 minutes' time. Up next on the program, Making America Affordable.
Affordability, they call it, was a con job by the Democrats. My administration and our partners in Congress will continue our work to lower the cost of living, grow our economy, and make America affordable again.
Up next, Sarah Bianchi of Evercore, live from New York City this morning. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Session lows right now. We're down by 0.9% on the S&P 500, down by more than that on the Nasdaq 100, negative by 1.3. A snapshot of some of the tech players in the pre-market. Nvidia not having a good morning, down by about 3%. Palantir down by something like 4%. Lisa, these losses are building.
Yeah, and we're building more aggressively, and some of them more speculative and highly levered to the AI trade. As you go and you see some of the ones that are the most speculative in terms of how much they're borrowing and how much they plan to invest in the future, this is the pushback that people have been talking about. So now the question is, how much is this just simply vibes, and how much is this real with respect to a changing structure of the entire tech stack, given the fact that their hopes and dreams have a price tag?
It's fair to say this morning the vibes aren't good as the losses pick up, just teasing out a bond market rally, just a little bit of one. At the front end of the curve, we're down by 2 basis points on 2s. On 10s, now down by 2 to about 410.18. That's a fresh development in the last 20 minutes or so.
Yeah, right now people still looking for a haven and some kind of income. This is the conundrum. How much can U.S. government bonds continue to provide a haven, given the fact that 30-year bonds still are priced at giving you a 4.7% yield? So some people might say, well, clip your coupon and be happy.
The 10-year and 30-year yield just falling just at the moment, coming back in off the back of those losses in the equity market. Under surveillance this morning, making America affordable.
Affordability, they call it, was a con job by the Democrats. We did a great job on groceries and affordability. The only problem is the fake news. You people don't want to report it. My administration and our partners in Congress will continue our work to lower the cost of living, restore public safety, grow our economy, and make America affordable again.
So here's the latest this morning. President Donald Trump pivoting to affordability after boasting about his administration's economic accomplishments. The White House now making a push for a tariff deal, announcing new deals with countries in Latin America and potentially elsewhere. Bloomberg's Mika Solner joins us now for more. Mika, welcome to the program. Welcome back, I should say. Can you describe the agreements that have been struck over the last day or so?
Yeah, absolutely. I mean, the White House is really looking to push new tariff deals in order to collect some of the revenue that they think is going to basically explode from their deals from all around the world. And with that, they are pitching the idea of sending $2,000 dividend checks to Americans. That's very much in line with the idea to distract from cost of living, give people hope, while Democrats continue to hammer the message of, quote unquote, affordability to people.
Mika, we're talking about coffee and food stuff coming from places like Brazil, Colombia, Vietnam. Have we heard from the administration about how much they're willing to do to bring tariffs down on some of those goods?
You know, the White House has been very guarded on this issue, and I think that they're still hammering out the details. But I do know that one thing that they're really trying to do is ensure that looking at the long-term effects of tariffs rather than potentially the short-term economic pain that Americans might feel when it comes to the uptick of cost of living. But I know that they're looking for solutions long-term and saying that this is overall going to be better for the country. So that's the message we're hearing right now, with details still hammering out.
Look for the details into the weekend. Mika, thank you. Mika Solner down in Washington, D.C. Let's build on the conversation. Sarah Bianchi of Evercore writing this. A White House pivot back to the issue of affordability won't be perfectly disciplined or linear, and some things will run counter as tariffs remain a favourite policy tool. Sarah joins us now for more. Sarah, Lisa and I were talking about the messaging of all of this. How do you massage the message of all of this? That you talk about affordability and the first thing you consider is to bring down tariffs, which you also simultaneously don't believe push up costs.
Well, it's complicated. Look, this is complicated. President Biden had some of the same challenges. It's just really hard to reduce costs in a lot of ways. But obviously, this administration has a tool that he didn't have, which is to bring down some of their own tariffs. I do think the deals with some of the Latin American countries give you a signal of somewhere where they're going. They did put, not to get too wonky, but Annex 3, a list of food goods that were supposed to be eligible to be tariff-free for countries that had a final trade arrangement with the administration. Obviously, they're just kind of lowering the standards of who gets that deal and really trying to put some relief in the food space. Again, an area where a lot of Americans notice when things aren't as cheap as they want.
Sarah, a lot of the rhetoric seems to push back against a number of the policy prescriptions that we heard from President Trump earlier this year. And I just wonder, it sounds like you're skeptical that this truly is a wholesale pivot point. Nonetheless, how much are you looking for different types of policies, whether it's reducing some of the tariffs or potentially a $2,000 check at the beginning of next year? How much are you expecting these types of policy prescriptions in the face of midterm elections?
Oh, I think it's very serious. I think he's very serious about a rebate check. I think, we saw at first Secretary Bessent push back pretty hard on the concept on Sunday. And since then, he's kind of softened his tone a little bit. I think it's very much a space where they will look. They're going to have to size it, get it through the Congress and reconciliation, a lot of steps to happen. And then, try to figure out, are they really going to spend all, particularly in the wake of what might be an unhelpful court case on tariffs. But I think on the tariff rates themselves, I think they're going to find places for relief, like we're seeing in food. I don't expect them to say, oh, forget it, sorry about the steel tariffs, we didn't mean to do that, or something like that. I think they're going to look for relief valves in particularly sensitive areas.
Just to underscore the point, how much was an inflection point with the elections that we just saw, the sort of midterm elections that did point to pretty big Democratic wins? How much does this really mark a change in the president's policies going forward?
I think it was very real. It's not that these first year after elections they were blue states, et cetera, but the scope and the size of the win and the voters who Trump just won 12 months ago in, New Jersey was an undercovered story in how close it was in 2024. So these voters coming back clearly and so central, even at a time when the Democratic Party is having its own historic set of challenges, still voters were willing to vote for these candidates. So I think you've watched the president kind of, all over the place a little bit rhetorically, saying it's fake news, but also exploring, a lot of ideas. I think it's a very big pivot moment for the White House.
So there are a number of different inputs to CPI, and one of them, and has been a good contributor to the disinflation that we've seen, has been energy prices. How much do you expect some of the policies around the data center build out in the United States to start shifting or potentially encourage deregulation of the energy sector even further in order to cushion some of the price increases that we're seeing in certain areas that are closer in proximity to data centers?
It's a huge issue. The president, you're right, has always been focused on low energy costs, but he's always really been about gas and oil. And this is a different issue. This is electricity. And it's a very hard issue to get at. It's largely state regulated. FERC does have some oversight, but it's going to have to be sorted with the states. And there are ways to solve it. We've seen places where, some of these data center builders have pretty deep pockets, and so they can actually help fund rather than passing on costs. But we saw this as an issue in Virginia. We saw it in New Jersey, and I expect you're going to see it even more around the country. For the president, it's a little bit challenging because the policy tools are a bit more long dated, but and they do come, part of the solutions or one of the pieces is more wind and solar, never a favorite topic of his, but I expect they'll pivot in this space as well.
Sarah, thank you. Sarah Bianchi of Evercore. That's a lot of pivots. With these kind of things, you can see into the future, and you can already see that we're already behind. You can see into the future because there is a duration mismatch. You can dig a hole and build the building very, very quickly to get the energy that supports it. You need to have built that a long time ago, or at least started to build it. We're already behind.
Yeah, which really goes to the question of who's going to bear the brunt of this. We are seeing certain sectors, certain regions in the United States where people are paying higher costs for electricity. Will some of the hyperscalers be forced to bear the brunt of this and actually pick up the bill? And that point that Sarah Bianchi made, I think, is a really important one.
We can, of course, change the future. But, there's a lot of work to do. Let's put it that way. Up next on the programme, Alejandra Grindal of Ned Davis Research as Verizon weighs up to 20,000 job cuts. That's next.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks are down across the board. We're negative by 0.8% on the S&P. On the Nasdaq 100, we're down by 1.3%. The losses are building up. It includes the small caps, the Russell, down by 0.88%. So a risk-off posture so far this morning, now backed up by developments in the bond market. Yields starting to fall across the curve. 2s out to 30s, 2s, 10s, 30s, now down by about 4 basis points at the front end and on the 10-year as well. Let's call this a break of 4.1%. in about the last 10 minutes.
Yeah, and you could say that this is just showing how much the risk aversion is broadening and the knee-jerk response to buy bonds is prevalent. At the same time, the Verizon news that you cited earlier, to me, highlights how much we see a disinflationary tilt from some of the efficiencies from companies. They'd rather cut jobs than try to raise prices substantially and lose customers. That is a Fed story, and that is a bond story.
So that takes the temperature of the U.S. story and maybe the global backdrop for risk this morning. Let's take the temperature of the UK right now. We've talked about the price of chaos, volatility. This market's been wild so far today. Yields are up on a 10-year gilt by 9 basis points. We're up by double digits at 1 point. Sterling. You want the range on sterling today? The low, 131. The high, 132. This morning, 131.52, somewhere in between.
Honestly, this is such a tricky story because at what point will the UK have to raise taxes as gilt yields go up? Essentially, the higher yields go, the more they're going to have to try to plug the gap that they have imposed on themselves with certain fiscal caps. So it raises this question. And Geeta Gopinath, formerly of the IMF, currently of Harvard, I keep going back to this op-ed she wrote in the Financial Times where she said, this fiscal instability has created a crisis of its own making. The fact that investors don't understand the fiscal response mechanism to any kind of increase in bond yields. You know, it just creates this real cycle of doom, and that seems to be what's taking place in the UK.
Really, really bad communication. The marketing from this Labour government has been absolutely abysmal. Every step of the way, it's just scaring people. When they came in, first of all, and said there's this massive black hole, and then they started spending loads of money on public sector pay rises and then had to increase taxes aggressively and then said, we won't do that again. And we've spent the whole summer. Think about the message you're sending to the British consumer over the summer. We spent the whole summer coming right into the fall telling people that this tax might go up, that tax might go up. Oh, if you're super wealthy, there might be an exit tax. That tax is going to go up. This tax is going to go up. What are you going to do in between? I've got a good idea. I'm going to invest lots of money in the British economy. I'm going to make a 5-year, 10-year, 15, 20-year trade on the UK right now. Who, in their right mind, would make that kind of decision if this is your backdrop for taking risk in the UK?
No, what they're doing is they're buying real estate in other countries, and that's actually what's happening in a broader specter. At the same time, the fact that they're benchmarking a lot of their projections to the market and to bond yields and how much that increases their fiscal gap highlights how much they are in this sort of cycle where they have to plug a gap at some point because they're going to have to raise taxes to pay for the bond yields that are going up in respect to their fiscal discussion.
Sterling right now, 131.53. We're down by about a third of 1%. As we count you down to the opening bell, about 2 hours away, let's get you some morning movers with Yahira. Hey, Yahira.
Hi, John. We start with Warner Brothers Discovery. Shares are rising 2.8% on growing conviction a buyout is coming. That's because the Wall Street Journal is reporting that Paramount, Skydance, Comcast, and Netflix are all preparing bids ahead of a November 20th deadline. Meanwhile, here are the stocks getting hit this morning, the tech stocks getting hit this morning as markets remain on edge. Tesla, Nvidia, and Alphabet yet are the biggest decliners among the Mag 7. This is coming as hopes fade for a December rate cut. And without that, it's tough to justify these tech stocks' high valuations. But NVIDIA could report spectacular results this next week, and then we're off to the races once again. And we end on some M&A action. We are seeing Cidara Therapeutics shares rising 100%. Merck is buying the company in a $9.2 billion deal. And we've seen a lot of
ओके गाइस, ये क्रूड ऑयल में यहाँ पर हाफ प्रॉफिट बुक कर लेना, ठीक है, अप्रॉक्सीमेटली बुक द हाफ प्रॉफिट इन क्रूड ऑयल देन ट्रेल, क्योंकि अगर अब ये वापस यहाँ से रिटर्न किया, इवन दो यहाँ पर कोई सपोर्ट तो नहीं है, बट इवन दो अगर ये रिटर्न करता है तो फिर डे हाई को भी ब्रेक करके 5370 को हिट करने जाएगा, वहाँ से भी नीचे ही आएगा, बट बेटर ये है कि यहाँ से हाफ प्रॉफिट बुक करके ट्रेल कर लो, ठीक है, बुक द हाफ प्रॉफिट एंड ट्रेल द एसएल इन क्रूड ऑयल। बाकी यूएस मार्केट ओपन होने वाला है, तो अब सीधा यूएस मार्केट के बाई देखते हैं क्या करता है। ये गिरता रहे तो बेटर ही है, पुल बैक आया तो फिर दोबारा सेल कर देंगे, नहीं तो ठीक है। बाकी नेचुरल गैस भी ठीक ही चल रहा है, बट इसमें ऊपर रेजिस्टेंस बहुत है नेचुरल गैस में, इस चीज़ का ध्यान रखना। ऐसा नहीं है कि यहाँ पर ये ऊपर सीधा ही चला जाएगा, ऊपर देयर आर मल्टीपल रेजिस्टेंस जोन एज वेल, बट मैं एक्सपेक्ट कर रहा हूँ कि ये थोड़ा सा अगर ऊपर चला जाए तो ऊपर से सेल करना भी सही रहेगा, ऊपर रेजिस्टेंस भी है बिकॉज, बट थोड़ा सा उसके लिए एटलीस्ट जाए ऊपर। बाकी मैं एक्सपेक्ट नहीं कर रहा हूँ 405 के ऊपर आज जाएगा, नीचे क्लोजिंग भी मुश्किल लग रही है, 389 के नीचे क्लोजिंग भी नहीं आने वाली, वेरी रेयर चांसेस। एक रेंज आप कह सकते हो ओवरऑल 390 से 403 के बीच में है रेंज, 10 से 12 पॉइंट की रेंज है, स्ट्रॉन्ग रेंज है, मल्टीपल रेजिस्टेंस एंड सपोर्ट तो ये एक ही बना हुआ है, खैर बट है एक ही। पाँच मिनट है यूएस मार्केट ओपनिंग, ध्यान रखना थोड़ा सा। देखते हैं यूएस मार्केट के बाद कितना और मोमेंटम आता है इसमें। स्टक हो रहा है यहाँ पर क्रूड ऑयल। अगर देखो यूएस मार्केट में नहीं आया, सेल ऑफ हो गया ओपन यूएस मार्केट, अगर स्टक नहीं सेल ऑफ नहीं आता है तो फिर मुझे लग रहा है शायद थोड़ा सा पॉज कर सकता है वापस से सेम लेवल पे। नेचुरल गैस भी यहीं पर रुकेगा क्या? ठीक है, नेचुरल गैस बहुत ट्रैप्ड हो गया है इस रेंज के अंदर, ध्यान रखना। ये बहुत ही स्मॉल सी रेंज है, यहाँ से ऊपर भी जाएगा तो यहाँ कोई ब्रेकआउट नहीं है, यहाँ पर भी रेजिस्टेंस ही है एक, तो ये बहुत ही ज़्यादा रेजिस्टेंस के बीच में फंसा हुआ है 15 मिनट टाइम फ्रेम पे एटलीस्ट। थोड़ा सा बायर ध्यान रखिए, अननेसेसरी होल्ड करके मत बैठना बायर्स। मैं सेलिंग वैसे इवन दो यहाँ पर भी हम सेलिंग कर सकते हैं, यहाँ पर एक रेजिस्टेंस है, ये भी रेजिस्टेंस ब्लैक वाला लगाया हुआ है, इसके ऊपर भी एक रेजिस्टेंस है, तीन तीन रेजिस्टेंस बने हुए हैं, बट मैं एक्सपेक्ट कर रहा हूँ कि थोड़ा बिल्कुल टॉप वाले से सेल ऑफ आए तो एटलीस्ट टारगेट बड़ा बने, क्योंकि यहीं से सेल करेंगे फिर नीचे आ जाएगा, यहीं से वापस बाइंग आ जाएगी, रेंज इतनी छोटी है। कहीं कहीं तो उसको निकलना पड़ेगा अभी बड़ी रेंज को, और एक और रेजिस्टेंस बना दिया, चार रेजिस्टेंस एक के ऊपर एक 15 मिनट में। लेट्स सी क्या होता है, ये सपोर्ट ब्रेक करके निकलता है या रेजिस्टेंस। बहुत जब पास पास बन जाते हैं ना सपोर्ट रेजिस्टेंस, तो फिर तो या तो अवॉइड ही करो या फिर थोड़ा दूर दूर के सपोर्ट रेजिस्टेंस पे ही बाई सेल करो। सपोर्ट एक ही है फिलहाल अभी इस लेवल पे, रेजिस्टेंस आर मल्टीपल। ये सपोर्ट, ये रेजिस्टेंस, ये भी रेजिस्टेंस रेजिस्टेंस रेजिस्टेंस, ये रेजिस्टेंस मल्टीपल टाइम टेस्ट हो गया, ये रिमेनिंग है, ये भी एक बार टेस्ट हो गया। कैंडल ओपन इक्वल टू लो। बाकी यूएस मार्केट को भी देखोगे तो हल्का सा गैप डाउन ओपन हुआ है, रिकवरी कर तो रहा है, लेट्स सी कितना रिकवर करता है। यूएस मार्केट हल्का सा गैप डाउन, देन रिकवरी। एंड नैस्डैक को देखोगे, नैस्डैक में भी प्राइस फिलहाल के लिए, ठीक है। नैस्डैक भी ओपन होते ही थोड़ा सा रिकवरी किया है, ओपन हुआ and just recovered from lower end. नैस्डैक भी हुआ वैसे गैप डाउन ही ओपन था, बट एज आई सेड रिकवर किया है, एज स्ट्रांगली रिकवर कर रहा है एज कंपेयर टू डाउ जोन्स। 143 पॉइंट के अराउंड गैप डाउन ओपन हुआ था, हल्का सा नीचे गया एंड देन रिकवर्ड हो गया है, ऑलमोस्ट आ गया उसी लेवल पे, क्लोजिंग के लेवल पे आ चुका है, स्ट्रांग रिकवरी। सपोर्ट पाया नहीं था वो। रेजिस्टेंस को क्या रिकवरी किया है नैस्डैक ने, बैंक निफ्टी से भी स्ट्रांग। ठीक है, रेजिस्टेंस को हिट करने वाला है 15 मिनट में नैस्डैक, US 100 capital.com ब्रोकर में। तो रेजिस्टेंस बहुत पास पास में ही है, लेट्स सी क्या रिजेक्शन लेता है या नहीं। 25,100 से 160 एंड देन 25,250 से 260 एंड नीचे सपोर्ट आपका 24,570 से 24,670। ये कल गिरा था वहां से सेल ऑफ में आया है, एक बार सेलिंग यहाँ से आई थी तो वही पेंडिंग है। अगर ऊपर वाली रेजिस्टेंस पे आता है नेचुरल गैस तो इसमें एक सेल प्लान करेंगे। ओपन इक्वल टू लो बनी है कैंडल, नहीं ओपन इक्वल टू लो नहीं है शायद, ओपन इक्वल टू लो नहीं है, काइंड ऑफ 0.1 से रह गई है वैसे, तो एक रेजिस्टेंस से सेलिंग का प्लान करेंगे इसमें। बाकी यहाँ पर बुक करना चाहो तो कर सकते हो, थोड़ा सा और ऊपर आ जाए तो बेटर ही है। एक सेलिंग यहाँ से प्लान रहेगी इन नेचुरल गैस एज वेल। ऊपर वाले में सोच रहा हूँ तो पास में सपोर्ट है। रेजिस्टेंस है, इसके ऊपर भी रेजिस्टेंस है, बट ये टेस्ट हो गया तो लेट्स होप ये रुके ना। उसको 50% में कर लेना इसमें भी बुक, नेचुरल गैस में वैसे करना चाहो तो। याद रखना प्राइस ऑलरेडी 400 के काफ़ी नियर बाई ही ट्रेड कर रहा है, तो मोमेंटम बहुत ज़्यादा बड़े हो रहे हैं, उस वजह से एसएल भी बड़े हैं, टारगेट भी बड़े हैं। ठीक है, जहाँ कहीं एक बार में हम 5-6 पॉइंट का टारगेट देखते थे, 1-2 पॉइंट का एसएल देखते थे, अब टारगेट 10-15 पॉइंट के नॉर्मल टारगेट लो रहे हैं। उस हिसाब से एसएल भी कम से कम 2-3 पॉइंट का नॉर्मल हो गया, 2 से 4 पॉइंट का कह सकते हो। थोड़ा सा ध्यान रखियो क्वांटिटी का उस हिसाब से। ठीक है, इसमें भी चाहो तो पूरा बुक कर लो, ये तो हाफ प्रॉफिट बुक करके ट्रेल कर सकते हो। यहाँ पर जैसा मैंने बताया कि रेजिस्टेंस है अभी भी, मैंने तो रिमूव कर दिया, बट है अभी भी, वो ब्रेक नहीं हुआ है, तो देयर इज हाई चांसेस कि प्राइस वहाँ पर फिर से रोकने की कोशिश ना करे। ओके अगर आ ही जाए तो ऊपर बेटर ही है, थोड़ा टारगेट बड़ा मिल जाएगा। यहाँ से सेल करेंगे, कोई टारगेट बचा नहीं है, नीचे फंस जाएंगे। क्रूड ऑयल ऊपर आता है तो वापस सेल कर सकते हैं क्रूड ऑयल में भी, अभी भी वो रेजिस्टेंस ठीक ही है।
I think it's all part of a cooling in relations between the US and Russia. ironically enough, since the Alaska summit. We've already seen, for example, that President Trump imposed pretty high tariffs on India, and he said that that was in part due to India's continued purchases of Russian oil, and we saw India at least announce that it was going to ratchet back some of those purchases. China is the other big purchaser, and there's a big question mark there, I think, because Trump and Xi Jinping have only just really overcome some of their differences in their trade relationship, and if the US were now to go after China with big tariffs related to Russian oil, that risk, of course, ratcheting up those tensions again.
What sort of damage could this do potentially to Russia's economy?
Oh, really quite serious damage. I mean, the Russian government relies on oil and gas sales for something like, I think, 25% of their income now. We've already seen that some of that income is beginning to decline in recent weeks, and the Russian budget is already in deficit. So anything that deprives the Russian government of more income is going to be immediately felt on the bottom line and felt further down the line on Putin's ability to wage war.
You've been in Ukraine just in the past few days. In terms of what their priorities are now and how they are managing the war that is almost 4 years old now.
Yes, it's dragging on, and obviously that impacts on resilience and their ability to resist. But they seem quite determined, and when we met President Zelensky, he was making the point that what they really need is more air defense. They really need European confirmation of funding so that they can support purchases of weapons, support the economy. They're determined to get through the winter, but to be able to do that, they have to be able to resist Russian strikes on their energy infrastructure, which are causing regular power cuts in Kiev and elsewhere throughout Ukraine.
And this is, I suppose, an interesting strand of Ukraine's strategy, as well as the continuing attacks on Russia's energy infrastructure as well. How significant are they, and how should we see them in the broader efforts that Ukraine is trying to make at this stage of the war?
Yes, I mean, Ukraine is very directly targeting Russian energy assets like refineries, precisely to do what the sanctions are also aimed at doing, which is to deprive Russia of the ability to generate income. They're very clear that they want to continue these actions. They're developing long-range domestic missiles which will allow them to target more deeply into Russia. And there's something of an energy war going on, really. We see Ukraine striking at refineries, and we see Russia striking at energy infrastructure to try and freeze Ukraine into submission. So it's going to be a long and intense winter, and who prevails will largely be determined, I think, by how much Ukraine can get defences for their own infrastructure.
In terms of the progress then of the legislation in the US and how quickly all of this might happen, as you say, if it is all about the winter and getting through the winter, I think the EU has 19, if not 20 packages of sanctions against Russia. So it's also about the speed and how effective it is in delivering these sanctions.
Yes, I mean, there's no doubt sanctions are having an effect on the Russian economy, but it's a slow burn, right? It takes time to have an impact for each set of sanctions. But the key package for Ukraine in terms of financing is the decision next month whether to provide loan funding based on frozen Russian assets. That decision was put off last month. President Zelensky was very clear in our interview that that's crucial for Ukraine to get through the winter, so they need a clear decision next month.
Prime Infra is really about doing the hard stuff across three primary market segments: water, sustainable energy, and waste management. That DNA comes from the owner, and we're built on the DNA to create a very successful company.
President Donald Trump has said proposed Senate legislation to sanction Russia's trading partners would be, quote, okay with me. Joining me now is Bloomberg's chief Asia correspondent, Ros Madsen. Ros, at moments like this, I always have to question how much weight we should put on these comments from the US president, how much conviction he has behind them. What is your take as to whether or not this is a significant adjustment in terms of the position from the US president?
Well, that's right. He can be quite changeable on this issue, depending really on where his mood is at with the Russian President Vladimir Putin, because he's swung quite a lot on that question, but he does seem to be in a mood of frustration still at the moment with the Russian leader. Clearly that Vladimir Putin is dragging the chain on any kind of push towards a ceasefire, let alone a proper peace deal in the war against Ukraine, that Putin shows no inclination really to try and end his war and no desire to do so. So perhaps a sense of frustration coming in there. And we know that Donald Trump has been okay, for example, penalising India for its purchases of Russian energy. Now is indicating perhaps other countries as well, including Iran. But the big one in all of this would be China. And there he has another thing to keep in his mind, which is his desire to have that slightly warmer relationship with China, have the trade relationship on a better footing. So he's been quite reluctant to look at China when it comes to purchases of Russian energy. He's been willing to ding India, at least that's for sure. So that's also a really big question. How broad would he be willing to go with this? And is he willing to take on China with this issue? Again, it depends just how frustrated he is with Vladimir Putin. I mean, obviously the economy in Russia is on a war footing. Production has been helping it keep going. But underneath all of that, the economy in Russia is quite fragile and certainly has taken a big hit from this war and all the sanctions, and cutting off the income for Russia from the energy side, again, particularly a big buyer like China, could have an impact on Vladimir Putin. Whether it would persuade him to change course on Ukraine is another thing entirely, because he has shown himself to be very willing to tolerate a lot of pain for the Russian economy in order to continue his war.
So, Ros, when could this legislation that appears to be getting some backing from President Trump, when could it likely go through Congress, go through the House, the Senate, and finally get to the President's desk? What kind of time frame are we looking at?
Well, that is the ultimate question, because it's been sitting there for a while. I mean, the Senate Majority Leader said last month the legislation is ready to go, although he himself said he's not pushing necessarily to get a hard date for it. Again, it depends really on Donald Trump. Does Donald Trump give the green light and say, I'm now willing to sign off on this legislation and put it through? Does he say, I won't object to it if you do put it through? How strong is his endorsement? But we haven't heard from Donald Trump either any sense of a date to vote on it. He gets a bit close and then he seems to waver again, because does he really want to go that far with Vladimir Putin? What happens if he does? Does he still want to leave open the option of continuing to have dialogue with the Russian president, perhaps claim that he can bring an end to the war in Ukraine? So there's no set date for this as yet. It does seem to be ready to go when that date is given, but it's been sitting in the drawer already for quite some time.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
A rebound rally confronts market malaise. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking off to the closing bell here in the U.S. on this Friday. And actually, we have some gains to talk about. Totally different photo from what we were looking at this time yesterday. The S&P 500 higher by about 0.4%. Big tech was your drag lower yesterday. It's your boost higher. Right now, the Nasdaq 100 higher by about 0.6%. Take a look at what's going on in the bond market, specifically with the 10-year Treasury yield, because we started the day lower. About 8 a.m., we got actually closer to 4.06% on the 10-year Treasury yield. You can see that we've totally reversed and then some. Now taking a look at yields about 3 basis points higher on the day, sitting at 4.14. So some really interesting swings going on there. And I also wanted to highlight Bitcoin, Romaine, because this is really interesting. We broke through 100,000 and we have just continued to fall. Bitcoin now under $96,000 a coin, down about 3% on this Friday.
Yeah, the price action today really intriguing. Think about yesterday, that market momentum factor, that strategy that focuses on buying recent gainers and shorting some of the laggards. Well, that was a big loser on Thursday, as that crowded AI trade did get just a little less crowded. But the buy the dippers today, trying to flip the script, and well, they're going to have to try just a little bit harder. You saw the price action on Katie's screen. Conviction behind the buying into the close, sparse, to say the least. The question is why? And well, why not? What's really changed over the last 24 hours? Volatility spiked Thursday, still remains higher today. The S&P's trading range on a peak to trough basis this Friday, not only wider than yesterday, but the second widest since April. Then you look at the Fed rate cut uncertainty that underpinned the sell-off yesterday, and you see that fog far from dissipating. A 43-day government shutdown delaying at least 43 economic data reports, and as of right now, only 4 of those reports have been rescheduled so far.
People are jittery, people are nervous. Prices and valuations have moved very aggressively higher, particularly in the third and fourth quarter, which means that the markets are fragile to any bad news. And that fragility is what's being seen right now.
Yeah, and that fragility, a byproduct as well of positioning and flows now so skewed to the bullish upside, they've actually come out the back end as a headwind. And that's not just about the economic data and the Fed's next rate decision 3.5 weeks from now, but it's also about a meaningful test for the market rally in 5 days, Katie, when NVIDIA releases results.
Absolutely going to be extremely important, especially in an environment where we're still not getting that economic data. But I wanted to go back to what Romaine mentioned about yesterday's sell-off, that repricing of Fed expectations. Let's take a look at what the market is saying as to what we're actually going to get in 3.5 weeks' time, because right now you have just about 11 basis points of easing priced in. I don't need to tell you that that is far fewer than 25 basis points. And think about where we were just a month ago. We actually had 28 basis points priced in around mid-October. So more than one single 25 basis points cut had been expected. You can see that has been pretty much taken out. And Romaine could explain why you're seeing some of this nervousness come back into markets, that maybe this Fed isn't going to ease policy by quite as much as expected, at least for the remainder of 2025.
Let's kick things off with Tony Roth, Wilmington Trust Chief Investment Officer. And Tony, a lot of eyes right now on the economic data that should start to materialize over the next few days, how that feeds into the Fed's December 9th meeting, and the so-called third rail out there that you referred to, Tony, yes. The idea of a softening economy that maybe we just haven't come to terms with.
Yeah, I think that you guys hit on all the key themes in your intro here today, which is the markets are reacting to the Fed. The markets are in a pause relative to the incoming earnings data from the AI companies, with the big one hitting next week. So we had most of them last week, and then we've got this pause with the rest of them hitting next week, or NVIDIA. And so there's a bit of an opportunity for the markets to take a breather there. And then we have the dissipation of the data fog, Romaine, which you just referenced. And so when we look at the environment, we have seen a very persistent disinflation all year. So we're not worried that the onslaught of inflation data, if you will, when it starts to hit, is going to show a different picture. And we have, in fact, a lot of secondary information around the labor market. So, for example, we look at the ADP and we see significant drops in private payroll creation. We look at the Challenger series and we see significant increases in layoffs. Yeah. And so we also believe that the labor market continues to deteriorate. We don't necessarily believe that the unemployment rate is spiking yet. Yeah. Of course, we're not going to know that for a while, because we're going to get for October. Yeah. We're going to get the enterprise, but not the household survey. So we'll see how many new jobs have been created, but not how many people are in the labor force. Yeah. But the key with all this is going to be to understand the real economy. Yeah. And when we look at the real economy, we see we haven't gotten third quarter GDP. That's also been blacked out. Yeah. But when we get third quarter GDP and fourth quarter GDP, we think we're looking at economy growing around 1%. And that's probably weaker than the markets actually anticipate.
Just on that jobs front, we are getting some breaking news right now, Tony. The BLS now starting to update its schedule for updating us on those missed data releases. That September jobs report that was supposed to come out on October 3rd will now be released on November 20th. The BLS also updating some of its other dates for releasing that data. But to your point, though, Tony, you kind of talk about this idea. Some of the data we're going to get is going to be incomplete. So I am curious as to whether you anticipate we will have more clarity within the next 3.5 weeks before the next Fed meeting, any real clarity from official government data, or is it still going to be this muddiness, this fog, if you will?
No, I do think we're going to get a lot more clarity. I think that First of all, the numerator or the enterprise part of the labor information as opposed to the household information is more important. It tells us how many new private payrolls are created. So that's the numerator of the unemployment rate. So that'll come for the month of October. We will get a full, complete November, we believe, labor report in the beginning of December before the Fed meets. And then we'll get the inflation data certainly for all of the months that we've missed it prior to the time that the Fed meets. So all of that will come in, and I believe all of it will continue to show what we've seen all year, which is that persistent disinflation along with a very consistently weakening labor market. And then the question will be the third rail, which is how weak is the economy really? And so we'll have to see when the government provides the third quarter view on GDP to see how weak we were coming into the fourth quarter. Now, earnings have shown that the big companies in this country are holding up reasonably well. We don't think we're in a recession now. We don't think we've fallen that badly. But we'll have to see what that data shows.
Right. Well, to that point, Tony, you think about what we have just next week in terms of the corporate earnings slate. We have Walmart, for example. We also have BJ's Wholesale as well. So some interesting reads when it comes to the consumer. Home Depot, what are you going to be looking for there, especially because there's going to be questions about the quality of the data, the delayed releases that we're finally going to get?
Yeah, Katie, I think we're going to be really looking at the guides, frankly, because when we looked at, for example, the financials that have already reported, some of the B2C software companies that have reported, they've provided good guidance for consumer activity on a go-forward basis. And so same thing when we look at these companies that are in the retail space, it's going to be the guides that we're going to be looking at very much. The other thing I'll mention is that I do think that the administration may have gotten the memo on pricing pressures that consumers are feeling, because we're seeing a lot of different areas now where the four Central American countries with regard to food, the news today with Switzerland, there's rumblings around maybe actually making some progress with Mexico and Canada, so that goods beyond the existing trade agreement exclusions start to get some better rates, et cetera. And so we could be in an environment where we actually get some relief now relative to baseline from the tariff standpoint. That'll help us too going forward. So there's a lot in the mix here for sure.
All right, Tony, I have to leave it there. Always great to catch up with you. Tony Roth, Wilmington Trust Chief Investment Officer, kicking us off to the close here on this Friday afternoon. A close eye on what's going on in the crypto sector. Big changes there from a legislative standpoint, and we're going to talk to a woman who's helping some of those companies get through it. From dollars to digital assets, BNY launching a new money market fund for stablecoin issuers. Stephanie Pierce, Deputy Head of BNY Investments, coming up in a bit.
Plus, the shutdown showdown may be over, but its impact continues to linger. The former director of the National Economic Council, Gene Sperling, will share his economic outlook.
And it's electric. The CEO of Commonwealth Edison in the fourth largest data center market out there in Illinois. He's going to join us to talk about how his utility company is trying to meet the rising demand for power. All that and more coming up in a bit. This is The Close on Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, recent Bloomberg intelligence analysis estimates that stablecoins could account for more than $50 trillion in annual payment flow by 2030. And BNY Mellon is positioning itself to be next up to bat. The firm launching a money market fund for stablecoin issuers, another peg in the digital asset growth story that stems from the passing of the Genius Act earlier this year. Joining us live in studio right now, I'm pleased to say, is Stephanie Pierce. She is Deputy Head of BNY Investments. Great to see you, Stephanie. So let's start with just what this is, a money market fund for stablecoin issuers. What exactly does that mean?
Sure. So as you said, the Genius Act was a landmark legislation that really removed a key barrier to the growth of stablecoins and issuance in the U.S., which was really creating that regulatory framework that everyone's been needing and wanting to understand how to structure these. And with the passage of the Genius Act, what we've launched with the BNY Dreyfus Stablecoin Reserves Fund, which was actually went live yesterday, is essentially a way for stablecoin issuers to access the same liquidity, resiliency, and stability of our money funds, and also comply with the reserve requirements in the Genius Act. And while it hasn't gone, the Genius Act will take a little while to go into effect, we do expect that we'll see migration sooner than later. And just to be specific, the difference between this money fund and the traditional money fund is that the maturity of the securities, the U.S. Treasury repo and Treasury securities, must be 93 days or less, which is a little bit shorter than a traditional money fund.
It's really interesting. And you think about the stablecoin environment, and I think a lot of people at this point know about Tether, they know about Circle, but you think about the variety of stablecoin issuers out there. Theoretically, this money market fund is for any number of them?
Yes, and we do believe there will be many more of them. In fact, BNY just published I'll call it a primer or an outlook on the digital asset industry and what we think will happen. And in that, we talk a little bit about this space, not just tokenized money funds, but the sort of what we call programmable money complex, right? So tokenized money funds, stable coins, tokenized deposits. And our projection is that we could see that entire sort of set of programmable money and cash equivalents grow to as much as $3.6 trillion in 5 years. That's 2030.
And you have a sense here that the people that are coming into this, they're going to be comfortable with the return on that cash. They're not going to be seeking something a little bit greater, something maybe with a little bit more leverage. They're fine.
Well, again, there's requirements that if you think about what the Genius Act actually says, it's pretty prescriptive in terms of the reserve requirement that a stablecoin issuer has to use.
Okay.
So if you think about it, right, they have the choice of either investing in these types of securities themselves,
right,
or actually using a money fund. And so if you think of what the core business of a stablecoin issuer is,
right,
it's probably not to invest in the securities themselves, so they'd much rather use a proven and trusted.
Are you surprised by this? I mean, I think about, you think about what the crypto industry is, and then you think about BNY, which is kind of like the oldest of the oldest banks out there, and it's safe. I mean, I don't mean this disparaging, but you guys are like kind of like the vanilla ice cream of the financial markets. And meanwhile, crypto is like, I don't know, what we want to call that. And so the kind of the melding of these worlds, and you see that deepening, that relationship deepening between the two?
I would say it a little bit differently, right? So cash and liquidity are the lifeblood of a custody bank. It's what runs through the arteries and veins of our ecosystem at BNY. And I'm sure you've heard us talk about the 20% of global capital market assets that traffic through BNY's infrastructure every single day. So what we're doing as BNY is trying to bridge the traditional infrastructure that the whole financial industry traffics on to the digital infrastructure. And cash is the cornerstone of the digital ecosystem that allows you to move from one to the other. So as you think about a world where we're moving from traditional, where there's market hours and there's all these frictions in the market, right, to move toward a 24/7 environment, we won't get there tomorrow. You're going to have to bridge from one to the other. And cash, which is the lifeblood of our bank, is what gets us there. I will say, since I've promised Katie I would give her a better term.
Lay it on me.
Go ahead. I like to think of both structurally and cyclically. Cash is kind of where the cool kids are hanging out these days, right?
Yeah.
Katie teases me about saying cash is sexy.
I found it. You said that in July of 2022, which is pretty amazing because you think about money market funds, where we were then, there was about $4.6 trillion in money market funds, July 2022. That felt like a lot. Then you think about where we are right now, 7.5 trillion. I mean, how do you explain just this insatiable and building demand for money market funds?
So there's a couple things, right? From a cyclical perspective, cash is pretty attractive right now, right? In a money market fund, you're getting almost a 4% yield, notwithstanding what the Fed may or may not do in December. And relative to both the volatility and predictability and sort of safety and soundness of other asset classes, it looks still pretty attractive. What's probably even more interesting when you think about it is if you think about the Fed's neutral rate, we could debate, is it 2.5%, is it 3%, right? What that tells you, though, if that's where that rate is, that this allocation that you see in money funds in a given portfolio is probably here to stay for a while. I would say, though, that what's really most exciting about it is cash is really at the vortex of all of this change. It's facilitating and enabling the rails of today to become the rails of tomorrow and to be able to go back and forth. And that's really where BNY, as you said, is the oldest bank in this country, the first ever listed on the New York Stock Exchange. We're really proud to be kind of leading the way for our clients.
And apparently full of all the cool kids as well, too. Stephanie, great to have you. Stephanie Pierce is deputy head of BNY Investments. All right, when we come back, we're going to talk about the earnings season. More than $50 trillion worth of stocks in the S&P 500 have reported earnings. Other than the biggest one in there, NVIDIA. They're scheduled to report in just about 5 days. We're going to catch up with Joseph Moore at Morgan Stanley and get his thoughts on some of the estimates and whether they actually might be still conservative. That's coming up next here on The Close. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
When you're one frag away from winning the round, super low ping matters. Deliver it with differentiated connectivity.
Let's get right to our top calls. The big movers on the back of analyst recommendations. And we start off today with Home Depot. Stiefel downgrading to hold from buy. The price target to $370 from $440. The analysts calling the home improvement category stagnant at best, with risk of deterioration into the holiday season. Those shares now at their lowest level since July. Next up, Gap. Jefferies upgrading the stock to buy with a fresh $30 price target. Analysts citing encouraging and sustainable trends and tipping their hats to CEO Richard Dickinson's structural revamp since he took the helm in 2023. Those shares nevertheless down fractionally on the day, 2 straight days of declines. Remember, they report earnings next week. And finally, Microsoft. Baird breaking into the bullish camp, initiating coverage with an outperform and a $600 target. The analyst calling Microsoft a core long-term AI holding and expects further double-digit revenue growth. Those shares up about 1% on the day, and those are some of our top calls. Another tech behemoth that we're watching closely is NVIDIA. Those shares closing out a tough week on a positive note ahead of the chip maker's earnings report next Wednesday. Our next guest has an outperform on the stock and says even his estimates may be too conservative. Joseph Moore joins us right now, managing director at Morgan Stanley. And it's kind of hard to look at expectations around NVIDIA, Joseph, and think that they're conservative, but kind of explain that. I mean, you think that maybe we're under sort of maybe anticipating what this company can deliver?
Yeah, well, we've seen remarkable strength in AI infrastructure spending. And I do think that even with sort of high expectations, they guided for $7 billion of sequential growth, which is bigger than all but 3 companies in our coverage. And that's incremental revenue in one quarter. We have them doing $8 billion of sequential growth again in January. But if you go back to their comments from the technology conference in Washington, D.C. a couple of weeks ago, they talked about a $500 billion 2-year spend on Blackwell Rubin. That would point to upside to even the new estimates that we put out this morning. So how quickly you can deploy that, there are various bottlenecks, as we've seen. That's part of what's held back the stock. But I think it should be a very strong earnings report with upward revisions to numbers coming from that. And yeah, I do think that the numbers as they lay out for 2026 are quite conservative.
Is there any sense here that when we start to talk about refresh cycles, there's been just some discussion that new entrants into this space are actually looking at chips other than Blackwell, the idea that you can maybe do some of the inferences and other AI tasks without necessarily having to spend on Blackwell?
Yeah, so NVIDIA from a revenue share standpoint is about 85%, right? And the alternatives are custom silicon from Broadcom, AMD as a merchant competitor, and there are others. There is a lot of effort to make sure that there are alternatives to NVIDIA. NVIDIA chips are expensive and allocation is difficult. Everybody's vying for more compute as we sort of look at this. And there are different workloads, as you said. Inference is going to have different requirements than training has had. But we feel like NVIDIA is still in a very strong position from a market share standpoint. A lot of these technologies seem compelling, but as you deploy it, you start to feel like, okay, but my highest ROI is on the thing I've been using all along. And we're actually seeing these workloads evolve such that, workloads like inference that we thought needed to be inexpensive are really requiring quite a bit of compute as well. As you start doing these, reasoning models and the tokens are exploding in length, There's a lot of demand on the inference side that seems to be gravitating to even NVIDIA had lower end inference chips, lower price chips. A lot of that demand is moving to the high end. So, that 85%, I think they'll remain in that rough range. We certainly have enthusiasm for some of the competing solutions as well, because it's just a great market right now. But I think NVIDIA, while the stock has done fine, has underperformed some of the direct peers. Right. And I think this quarter is one where they can really remind people that, hey, most of the spending is still coming towards us.
Well, it's going to be fascinating to see the reception, because it feels like if you take a look over the past several quarters that it's turned into a bit of a sell the news event, Joseph. But I do want to talk a little bit about China, because you mentioned potential alternatives, and there's an existential fear out there that China is going to develop chips homegrown that can compete with NVIDIA's offerings. And you heard from Jensen Huang actually earlier this month telling the FT that China is going to win the AI race. I wonder, where you fall on that question.
Yeah, I think what he's saying is that there is a lot of software expertise in the AI space in China, and that if you don't allow NVIDIA to sell at least some solutions into that market, that it can be something that can spur the development of the domestic ecosystem in China. I think all that's fair. It's what we should do from a policy perspective is above my pay grade, but there is a trade-off there of, do we slow down their software effort by enabling a software ecosystem? But the U.S. companies are in a very strong position, have developed very strong models, and I think that the Chinese companies actually would very much like to use some form of NVIDIA silicon. And right now there's nothing in the model coming from China, and I'm not anticipating that that'll change anytime soon, because you have two governments that are sort of blocking those sales. But I think there's a lot of opportunity if you can make that work. And I do think, we have regular meetings with some of the Chinese hyperscalers. They do want this technology, even if they can't get the latest and greatest. They do want technology, and I think that's all that can drive upside for NVIDIA.
All right, Joseph, great to get some time with you. Have a great weekend when you get there. That is Joseph Moore, Managing Director over at Morgan Stanley. Now, coming up, the shutdown may be over, but data delays and questions around reliability loom large. Gene Sperling, the president of Sperling Economic Strategies and former national economic advisor to President Clinton and President Obama, joins us next. This is The Close.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld, just a few hours away from the weekend. I don't know. It's hard to focus, but there is a lot to focus on, especially when you think about the headlines that we're getting about this slow trickle of when we're finally going to get these data releases.
I went and actually counted how many data releases we missed.
Yeah.
It was 43, and that was just the ones I could find. I'm sure I probably missed a couple.
Wild.
So we're going to start to get a trickle of that. They've only confirmed so far 3 or 4 reports that are going to be updated, including the September jobs report, which is supposed to release October 3rd, that will release November 20th. The October jobs report, which I think we were supposed to get last Friday.
Right.
They have not updated us on when we'll get that. And there's an issue of whether the data is even going to be complete, that we're only going to get maybe some part of the survey, but not at all. So I'm so confused.
Unclear what the collection efforts actually looked like during the shutdown. So still a lot of questions, even as we get this trickle.
No one called me during the shutdown.
No.
So how do I know?
I don't pick up the phone, so I don't know. Well, that's the other question, right?
I know, check your phone.
We've been talking about
20
the
missed calls
quality
from Romaine Bostick.
From Romaine Bostick. We've been talking about quality of data even before the shutdown. So let's keep the conversation going now, because the aftermath of the longest government shutdown in U.S. history is slowly beginning to play out. And here with his perspective is Gene Sperling. He is president of Sperling Economic Strategies, former senior advisor to President Biden, and former national economic advisor to President Clinton and to President Obama. Gene, fantastic to have you with us. So we've been talking about this fog that we're in when it comes to the economic data, the fact that we're not getting it. Now, as we start to get these very delayed releases, a lot of questions about quality, a lot of questions about reliability. And I wonder, in your view, is the fog going to clear at all?
You know, great question. And I don't totally know the answer. So, for example, I was National Economic Advisor during the last long shutdown in 2013. And at that time as well, the data did not come out on time, but it came out about as many days as the shutdown lasted. Now you have the situation on the jobs numbers where the person in my former job, Kevin Hassett, is suggesting that maybe we will get the payroll and establishment jobs, but maybe we will never get the household survey, which tells us what the unemployment rate is going to be. And I do think it's difficult looking at the private data, because if you look at ADP, they tell you that we probably gained 40-some thousand jobs in October. Not great, not horrible. But now they have a new weekly index that suggests by the end of October, we might have actually been losing 10,000 jobs. Now, you heard Chairman Powell say when you're in a fog, you drive slower. And so I think that's why people are not as confident about this cut in December. And then I think the other thing is that, I think the administration has hurt itself by kind of doing things that are essentially stagflationary. So immigration and the tariffs, they're harder than a lot of things for the Fed because they both have negative inflationary effects and they tend to hurt growth at the same time, which makes you have to weigh which is the worst. And again, I think that the tariffs are more likely to keep having inflationary pressures. I think the big retail stores are doing it more slowly, so we haven't had the big boom. But you still have an economy that was projected last January to be at 2% inflation, and it's at 3%, and you don't know what's going to happen with the Supreme Court, and you have a lot of reason to think that big stores are going to continue to gradually raise prices for maybe the next several months.
Right. Well, when it comes to inflation and just the lived experience of Americans, the case could be made that one of the reasons why the Democrats lost the presidential election was that they downplayed those cost of living pressures. And you could make the argument that that is what the Trump administration might also be doing here, falling into the same sort of trap. And Gene, I wonder from where you're sitting, what the White House could actually do at this point to alleviate some of those cost of living pressures, which are still very high.
Well, you're right. And I think for many of us in the Biden White House, we've been very surprised by how, not even how much they haven't seemed to care about connecting with people on inflation, but doing something like the kind of erratic tariff policy, which a stunning number of Americans know about, will report in the University of Michigan Consumer Confidence Survey and will say they're raising their prices. I mean, in fairness, Joe Biden had an economy where you had booming job growth, you had booming GDP, inflation was coming down, and even still, people were so upset that the price levels were so much higher than they remembered before the pandemic. Now you have a economy that's not doing that great. You have a job market that's not that great. This would be a time where you think you'd be very focused on connecting with people. And I think they're just stuck. The president is pushing certain policies that are somewhat inflationary. And, the best I've heard is Secretary Bessent say, hey, we'll pull back on coffee and bananas because we don't make them here. And that's kind of admitting that wasn't a very smart policy. And yes, it was raising prices.
Yeah, I mean, the bananas, coffee, and tomato thing, probably one of the most ridiculous walkbacks I've seen by this administration. But on a more serious note, it gets to this idea of those inflationary pressures, which have never really dissipated. To a certain extent, they've been exacerbated. And that kind of segues into this idea, Gene, of going into the next year with people not only focused on food costs, but also energy costs. We saw those prices go up significantly, primarily because of the AI data center build out. And we saw that become issues in at least 2 campaigns this year in Virginia and in New Jersey. How does either party address that, if at all?
Well, so that's interesting because that in some ways does connect more with the Biden White House experience. Because as I said, we had a lot of things to brag about with jobs and GDP, but people didn't care as much if the price levels were still higher than they remember. Now you have the administration, they have kind of one positive surprise that's happened in 2025, and that has been the GDP impact of AI. And yet, if they may be missing the fact that that is putting greater pressure on, as you say, electricity prices. And, then you combine that with health costs likely to go up. And then you combine that with, Moody's and Bank of America thinking some costs will go up because of inflation. I think it puts you in a difficult situation. I think if I were in the White House, I would not, learning from the Biden experience, you wouldn't be just bragging about the AI, the $1 billion, but you would let people know, hey, we want to lead in AI. We want to beat China. We want to do it in a way that's more humane, pro jobs, but we also want to do it in a way that, you're not seeing people make hundreds of millions of dollars while your electricity costs are going up.
Well, that's what I'm curious, and I'm not really seeing that being articulated by either side. And as you know, as somebody who's been in the White House, most people, rank and file people, they don't know what GDP is. You can say, okay, you're contributing to GDP. They don't care. They don't care about those high-level numbers. They care about what they can see on a day-to-day basis. On a day-to-day basis, they're still struggling, Gene. They look at AI, or they at least look at the media coverage, and they see stories about job losses and all the negative effects of it. So we're basically in an election cycle now, Gene. So it gets to this idea as to then, if at all, how do you change that narrative so that it's more palatable to regular folks, not just, people on Wall Street?
Yeah, no, it's a great point, and they put themselves in a trap. And so I actually do think rolling back the tariffs, particularly on consumer goods, on things that will never be number one on or compete on, I really don't think there's a lot of, if Nike Air Jordans go up $40, I don't think people are going to go, great, they're, encouraging more production to shift back. They're just going to be angry. So, I think that we always knew that gas prices had a very negative effect on presidents and politicians. But it turns out it's not gas prices per se. It's what you just said. It's everyday prices that you see every day. And what happens is when your job market's great, that's helping some people. But when your prices are high, that's hitting everyone. So but I think the hard part is, the best thing the president can do is roll back the things he's done. That means admitting that wasn't a good idea. That means admitting that, yes, tariffs are a tax on consumers and raise prices. So they may face a little bit of a choice of how much do they want to connect with everyday people, and is that worth perhaps stepping back on some of the claims that most economists had never accepted about the idea that tariffs on ordinary goods were not going to hit people's pocketbooks.
All right, Gene, got to leave it there. Really appreciate you taking time. Gene Sperling there, president of Sperling Economic Strategies and former senior advisor to President Biden. When we come back, we're going to talk about Walmart and a changing of the guard. This is The Close on Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
All right, keep an eye on shares of Walmart today after investors got news that longtime CEO Doug McMillon is going to retire in February. Now, he's going to be replaced by another veteran, the head of the company's U.S. division, John Furner. He will take over for Macmillan as a big box retailer now transitions from the e-commerce age to the AI age. Nora Melinda joins us right now, Bloomberg Markets correspondent. Talk a little bit about this. Look, Macmillan's been there for over a decade. He's kind of lauded as one of the better CEOs that we've had of this era. So maybe his time was coming. Investors, though, I guess a little on the fence here about what to make of it.
Investors are still trying to figure out how they feel about this. But if you look at Wall Street, analysts are saying that this is good news. This is nothing to fret about. They do expect some near-term weakness here, but they ultimately don't see this as any sort of pullback. They see this as a good transfer of power here, and they do see that the bench here in terms of the executive space at Walmart is very strong. So they're not concerned at all.
It's interesting, Macmillan, only 59 years old. Ferner is 51 years old. Just a little bit of trivia there. So this is also interesting, this change of the guard, but also because they report earnings next week,
Right.
Nora, and in just 30 seconds, I have to imagine that this will be a topic of conversation.
Most definitely, this will be a topic of conversation, but also on the mind of investors will be tariff concerns and how they do in terms of sales performance. Back to school season, we did see last quarter, so that's definitely going to be something that a lot of investors are parsing during this time.
All right, Nora, great reporting. That is Bloomberg's Nora Melinda. She is our markets correspondent. And
now, are you a Walmart person?
You know,
you live
I
out
love,
in the hinterlands.
I know. Well, that's the thing. I love Walmart.
Yeah.
There was one near my parents' house, and I remember doing like college shopping there, but then it shut down, and now it is a marijuana grower.
All right. Coming up here on the close.
We're going to take you to the closing bell with Veronica Willis. She is global investment strategist over at Wells Fargo Investment Institute. That conversation up next. This is the close.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
When we look at the environment, we have seen a very persistent disinflation all year. So we're not worried that the onslaught of inflation data, if you will, when it starts to hit, is going to show a different picture. And we have, in fact, a lot of secondary information around the labor market.
Tony Roth kicking us off to the close just about 50 minutes ago. A conversation here about the reopening of the government and, more importantly, the redissemination of all that data that we missed.
Yeah, absolutely. Looking forward to getting those very delayed reports. Maybe there's going to be some numbers missing there. Let's take a look at what the equity market is doing with about 10 minutes until the closing bells. The S&P 500 giving up its gains. It is still very slightly positive on the week. I can't say the same for the NASDAQ 100. And if it finishes in the red for the week, Romaine, this will actually be the second straight week of losses for the big tech index, which feels a little bit surprising.
A little surprising, but when you consider how high valuations are, and then this, I think it's funny, we keep talking about the Fed overhang. I feel like there's this NVIDIA overhang too, right? Like, I think expectations are high, but it's like almost like, are they too high going into this print on next Wednesday, the 19th?
Well, it's one of my favorite jokes that NVIDIA earnings are the new Fed decisions. So, you know, of almost equal import.
How does Jay Powell feel about that?
I haven't told it to him yet.
All right, let's see how our next guest feels about that. Joining us here in studio, too, is Veronica Willis, global investment strategist at Wells Fargo Investment Institute, counting us down to those closing bells. And this has been one of those strange weeks, Veronica, where I think, you know, people are focused on earnings, but they're also focused on the Fed and whatever the heck's going on in Washington with the reopening. And it gets to this idea of the rotation and the repositioning in this market. Are we going to see a meaningful rotation out of some of those big cap tech names into something else, or do people just kind of revert back to what's got us here so far?
I think what we're going to see is maybe a little bit of softness in some of those bigger names, and the smaller names, maybe some other sectors outside of tech, are going to start performing a little better and pull a little bit more of their weight in the index.
Is that going to be based, though, on the corporate fundamentals? Meaning people just looking at the revenue growth and the earnings growth in those big names? Or is there more of a, I don't know, an economic story that also folds into all of this?
I think there's a little bit of a concern around valuations. And so some of those valuations in tech and some of those bigger names in communication services are a little bit stretched. And so investors are looking for a little bit more attractively priced assets to put some money to work.
Yeah, it's interesting. I remember that was one of the narratives around Cisco reporting earlier this week, that even though Cisco is on this amazing run, that compared to maybe some of the other AI names, the valuations don't look quite as expensive. So when you take a look at the landscape holistically here, I mean, where can you find relative bargains at this point, maybe even at a sector level?
Yeah, I think so. Thinking about large cap within the sectors, we like financials, industrials, and utilities. We think that those three sectors are really good ways to play the AI theme without going directly to tech, without going directly to comm services, because those industrials and those utilities are going to be needed for that infrastructure that's going to be behind those data centers for AI, and financials are going to kind of be key for financing those.
Yeah, I was going to ask how financials wrap in, because it's been interesting watching, these different companies sort of go back and forth between the public and private markets when it comes to funding some of these AI hopes and dreams.
That's right. So we see a lot of attractive opportunities in the private space as well to play that AI theme. So in private credit and in private equity, some of those ways where you can kind of play specialized AI themes. But the public markets are going to be really important as well for that financing. So it's one of the reasons that we really like financials right now.
And also with financials, I mean, we were talking earlier this week, obviously, about all the volatility in markets, how that's been a boon, at least for the businesses that have a markets business. But is there a sort of a broader sense here, too, that if the financials hold up, in terms of whatever they're doing with regards to AI, the lack of delinquencies, or if you will, to a certain extent on the lending front, and then whatever pickup you're seeing in the capital markets business, can that act? Do you see the potential for outperformance by financials relative, maybe potentially, to tech going forward?
Yeah, absolutely.
Yeah.
And so I think thinking about the economy, one thing that's really interesting with the government reopening, we think we're going to see that resurgence of economic growth in the first quarter. We're not expecting any kind of recession or anything, and we think the consumer is going to hold up really well, and that's going to bode well for financials when it comes to how consumers are spending. We're not expecting any kind of alarms that are rising on the credit side.
In terms of trying to extend the equity rally, there's been a lot of talk about all of the money on the sidelines, if you will. I mean, you still have money markets sitting either at or near record highs. We had a guest on earlier saying that all the cool kids are in cash, which may or may not be true. But it gets to this idea that there are a lot of people that aren't fully invested in this market by choice.
That's right. And I think part of it is, cash has had very impressive yields. People don't want to give that up with the kind of capital preservation you have built in there in those money market funds. But also the market has really rallied, and it's not left a lot of opportunities to buy in. Yeah. And so we always encourage investors, whenever we get these pullbacks, these moments of volatility, use that as the opportunity to get back invested in the markets, because you don't want to be stuck in cash for a long time.
Well, to that end, I mean, are you surprised that we're not seeing a stronger buying impulse today? You think about the decline we saw yesterday in the S&P 500, 1.6% thereabout. Not an enormous dip, but certainly more than we've seen in a while. And today we're, barely positive on the S&P 500, might even be lower at this moment.
Yeah, I think what we're seeing yesterday and today are still some concerns around Fed policy. It's been a really sharp shift from the market pretty much being certain that there's going to be a cut in December, and now, we're less than 50% odds that the Fed might cut in December. And that's a bit of a shock for the market. The market wants to see cuts. That's kind of what it had built in, and I think we're seeing some repricing of those expectations in the stock market right now.
Well, this is something we were actually talking about in our show meeting today, that it's been interesting seeing the Fed speakers come out this week and really pour cold water on the idea that there's going to be a rate cut next month. And it's interesting that there seems to be that building consensus among the Fed members that maybe they're going to stay put in December, given that it's not like we've gotten any economic data to chew in. So I wonder what you make of that. What has changed since the last Fed decision?
I think what we've heard from the Fed speakers this week is that they are still concerned about inflation. So we haven't seen inflation moving higher, but what we haven't seen is it moving closer to the Fed's 2% target. And they're not, leaving that 2% target behind. They're committed to it. And so I think with inflation at current levels, they're still concerned, and they are wanting to get the market ready in case they decide not to cut, because they're still concerned about the inflation side of their dual mandate.
All right, Veronica, great to have you. Veronica Willis is Global Investment Strategist at Wells Fargo Investment Institute, helping us count you down to the closing bells. That's her. Live television. You got to love it. Veronica, have a wonderful weekend here as we get you set up here for the final couple minutes of trading, and more importantly, kind of pushing beyond to next week. Katie, there's going to be a lot going on. Of course, we've got a lot more earnings. primarily from NVIDIA, a couple of retailers as well, Walmart, Home Depot, Lowe's.
Yeah, absolutely. Yeah. It's going to be an interesting cross-sector read there. And you think about the importance, the urgency around these corporate reports in the fog that we've been talking about that we're living in when it comes to the lack of economic data.
Yeah.
Some of those names you mentioned, Home Depot, Walmart being the largest retailer out there. I mean, these are really important signals on where this consumer actually is and where they're going.
Kind of interesting, too. I mean, you made a good point here. When you had that big sell-off yesterday, you would expect that dip buyers to come in. To a certain extent, we did. We opened lower in the S&P, but we did see a kind of battle back into the green. And now, as you get closer to the bills, Katie, we're basically unchanged on the S&P, down significantly on the Dow by about 0.7%, and the Russell. That's your relative bright spot, only up about 0.1%.
And who would have thought it? The Russell 2000 being the lone bright spot here. Yeah. It'll be interesting to see, what is the next catalyst. I know I was joking about, NVIDIA being as important as a Fed decision, but in terms of what could determine the near-term narrative, NVIDIA earnings on Wednesday, hearing from Jensen Huang himself, that could be it.
All right, as we count you down to the closing bells, full coverage of everything that happened on the day. And, of course, I'll put you ahead to what might happen coming next week. Let's bring into the conversation right now Jess Menton and Nora Melinda, our markets correspondents, here to help us break down some of what we've been seeing here on this day. And I'm going to start with you, Jess, because this was a very strange week in terms of market activity. You had some AI optimism. You had some AI pessimism after, Michael Burry comes out and throws some cold water.
Right.
You had a government reopening that, based on the columns you wrote, I thought we were supposed to, we're in for the massive rally, but apparently, I guess we have to wait a few more months before we see that.
Well, what's interesting from a technical perspective is, once again, the S&P 500 dipped below that 50-day moving average. And I know people like to joke about those round numbers around 6,700, but it's a real thing, too, because when you're thinking about how actually it's been 138 trading sessions that the S&P's remained above that shorter-term moving average. So that's the second longest streak this century. And so it just kind of shows you from a technical perspective kind of what's going on here. But obviously that's more shorter term. But again, next week, that's going to be big with NVIDIA coming, because that implied move is a little bit above 6% in either direction for that swing after the closing bell next Wednesday. And so that's the highest implied move for that stock in about a year.
Yesterday, we had a massive drop in equity markets that I guess if you're an optimist, well, I guess that opened up the potential for dip buyers to come in and maybe find some bargains. We did see some bottom fishing today, but not enough conviction all around to push the markets materially higher on an aggregate basis. The Dow is going to close lower by about 300 points or 0.7%. The S&P down 3 points, recall it, basically unchanged on the day. The NASDAQ eking out a modest gain of about 0.1%. And Katie, the Russell 2000, that's your relative outperformer, up about 5.5 points or 0.2%.
Yeah, the Russell 2000, those small caps really fighting to stay green. You think about the S&P 500, 182 names finishing in the green, more than 300 in the red. Certainly helps explain why the S&P 500 wasn't able to hold on to those gains.
And we talk about some of the big gainers and decliners out there.
Well, shall we also talk about sectors, perhaps?
Oh, I forgot. This is where you talk to the circle.
This is where I talk to the circle.
Okay.
It's like the bright spot of my
Sarah,
day.
quiet, everyone.
Please, I'm grabbing the mic here. You can see tech managing to finish in the green right now, but it was energy that sort of ran away with it. Energy, your best performing sector when it comes to percentage, up 1.4%. There's a lot of red to talk about, though. Materials having a terrible day. So, too, were the financials, communication services, healthcare. The list goes on. Certainly more losers than winners here, Jess Menton.
Yeah, and especially when you're thinking about also with DoorDash. That's one of my first stocks I wanted to point out for today. So it's actually up 6%. Best day since April 9th there. So
wait, that's the biggest gainer in the S&P today?
Right, if you look at that dash. Surprising when you look at these. Also ahead of the NASDAQ 100, too. So actually, its shares gained, if you're looking at that. So Needham was defending the stock after that earnings-induced decline that we saw earlier this week. So they're still saying that their price target lowered to $275 from $300, but they're still maintaining that buy rating, too, after the big sell that we had there. And then, of course, if you want to look at another one, Micron Technology, that's the second biggest gainer today in the S&P 500. So MU is the ticker symbol on that. It's actually up 4%. That is its best day since not too long ago, November 10th, so earlier this week. But actually, Reuters had put out a report. So you're seeing some of those companies move relative to what they're doing in the chip type space. So SanDisk was another one in addition to that moving higher. So Reuters reporting that Samsung has hiked rates on its memory chips up to 60% since September. So looking at that, kind of giving a boost there to some of those different names there. And then lastly, I wanted to point out what's happening with Warner Brothers. So looking at those shares too that are higher, up also about 4% today. So they actually amended their CEO contract to protect pay in a sale. So that's why you're seeing that supported. And of course, I know Romain always asks me about the weekly.
Yeah, I was about to give you your pop.
Of course, I thought you were going to do kind of a pop quiz here.
I was.
So Albemarle. That's looking. So actually, this is a company that produces specialty chemicals and additives to those types of medicines. So you're seeing analysts raising those targets with lithium prices, but up double digits. So that's more in a different type of space, not necessarily the tech space there, but that's above the leaderboard here for a weekly basis.
There you go.
All right, a lot moving to the downside, of course, today, Nora. You had a lot to pick from.
A lot to pick from, a lot to sift through, really. I was looking at shares of StubHub, the stock really in focus here. We did see the stock fall about 21% at the closing bell. And this is really after the company failed to provide a fourth quarter forecast. That forecast disappointed, but they also didn't provide a forecast for the current quarter. This is a company that just IPO'd just back in September. So you are really seeing Wall Street grappling with, what is the outlook looking like moving forward, especially for a company that just recently debuted? So you are really seeing that weighing on shares in the trade today as it ended on this Friday. And we should point out,
I mean, look at that price, $15. This debuted at 34. So it's lost half its value in what, 2 months time? Roughly?
Something like that.
Just a couple weeks, it feels like. Also looking at shares of Walmart, this is a stock, of course, that we've been talking about all day throughout the trade. It just ended just a touch lower, down about 0.1%, just eking out a decline there. So we did see the CEO change. Of course, this has really been in focus for this company. We do know that McMillan, he retired. He'd been CEO since 2014, and we do have John Furner coming in as the replacement. While you did see a little bit of uncertainty, specifically in the market and how investors were thinking about this company, you do have a lot of traders, a lot of analysts on Wall Street that are saying that this actually shouldn't be that much of a negative here. Maybe near term, you may see some weakness for the stock, but long term, this should be a positive, a good transfer of power here. So you definitely are seeing this company in focus. Shares up about 13% on the year. And lastly, I'm looking at Aero Group. This is the company that actually isn't doing too well. This is an aftermarket supplier for a lot of the aerospace companies. I used to cover aerospace on the equities team, so had to point out one of those. We did see this one dropping below.
Were they involved in all the flight delays that I got stuck in?
Hopefully not, right? There were too many to count, honestly. But we did see Aero Group dropping below its IPO price for the first time. This is after its third quarter revenue missed expectations. We saw shares of Aero Group down about 21% to end the trading day today.
All right. Nice roundup here, too. And we talk about, of course, what has been a wild week, and that could change in a big way next week. Of course, keep an eye on yields, because as we start to get more economic data, that might put the yields into a little bit more perspective into the direction that they might go. They are higher on the day, but it was a mixed bag on a weekly basis, all heading into a big Fed meeting just about 3.5 weeks from today. A lot of Fed members speaking right now. Basically, no real consensus out there. And Raphael Bostic, the outgoing member of the Fed, Atlanta Fed, now speaking, saying that basically the data is moving in opposite directions of both of their mandates.
Yeah, it's really interesting to see that mandate basically come into conflict. It's going to be a very fun Fed decision in December, at least for those who follow those sorts of things. Anyway, great roundup, you guys. Closing the markets on this Friday. That is Bloomberg's Jess Menton and Nora Melinda helping us break it all down. And speaking of breaking, let's turn to some breaking news out of Alphabet right now, investing $40 billion in new data centers down in Texas. Let's head there now and bring in Bloomberg's Julie Fine. So, Julie, give us the details here. What exactly do we know about this planned spend so far?
So we know that they will be spending, again, $40 billion in Texas. That will be for 3 data centers. They will be in the Panhandle. One, I believe, will be in the Panhandle. 2 will be in West Texas. That is near Abilene. By the way, this is an addition to what Alphabet Google already has here in Texas. They already have a $2.7 billion investment around Dallas. They have 2 data centers in the surrounding suburbs. So a big announcement for Texas. The governor is with the CEO of Alphabet Google right now making this announcement.
Are they building power to go along with these data centers, Julie?
What one of them they are going to have is one of the Haskell facilities actually will be co-located with a new solar and battery energy storage plant designed to ease the data center's impact on the power grid. As you know, and we have discussed this, Texas power grid has been a problem in the past, although for the past couple of years we have not had any issues during storms. So that definitely is part of one of those data centers.
And Alphabet is just one of several of these AI-focused companies investing in Texas. Talk to us about what exactly is going on in the state, who they're competing with here.
Well, there's also, we have to talk about the first data center being built. That's the Stargate venture. That's backed by ChatGPT AI, Oracle, and SoftBank Group Corp. That's also in Abilene, Texas. That is a big deal there. Meta Platforms is also building a new gigawatt-sized data center in Texas. So Texas is getting an abundance of these here in the state, which is very interesting because, as you know, the power grid has been in the forefront in many cases here. The Texas legislature, however, did put some guardrails in place during their past session and clearly signaled they are open for business when it comes to data centers.
All right, Julie Fine down there in Dallas, Texas. The headlines crossing the wire right now. Alphabet's Google planning to invest $40 billion in 3 new Texas data centers through 2027. A lot more coming up here on The Close, including some big moves in the ETF world. That's coming up next here on The Close. This is Bloomberg.
The countdown is
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romaine Bostic. An interesting end to what has been a relatively volatile week. The VIX elevated here on this Friday afternoon after spiking yesterday. That big downdraft that we saw in stocks on Thursday. A lot of concerns right now about tech valuations, a lot of concerns about the state of the economy. Nevertheless, despite some of the pullback that we saw yesterday, the dip buyers did come back in today and did try to put a floor under that market. The S&P finished the day unchanged, but finished the week in the green. The Russell 2000 also in the green as well. Indicative here that there is some optimism out there for some asset classes. We'll just have to exclude Bitcoin from that conversation right now, Katie Greifeld, as it still sits perched below 95 grand.
It'll be interesting to see how low it can go, but let's get to some of the single name movers on this Friday. I wanted to talk about DoorDash. Of course, it had a pretty ugly earnings reception, though, but Needham coming out defending the stock, sending shares up about 6%. Also highlighting Warner Brothers Discovery. We know that the sharks are circling this company, a bidding deadline coming up next week. Shares up about 4%. And then MicroStrategy, related to what Romaine was just telling us about what's going on with Bitcoin. MicroStrategy, of course, sort of a leveraged way to get exposure there, down about 4% on the day. Our top story this hour, though, is that 2025 is shaping up to be another record-setting year for actively managed ETFs. But there's an important asterisk. If we take a closer look at the fund flows, it looks less like a grand upswell of demand for active managers and more like a migration from mutual funds to ETFs. Let's take a look at the chart right here. And you can see that in white, you have your active ETFs. And the past 2 years actually have been records for active ETF inflows. Then you take a look at active mutual fund outflows. Those are your orange or yellow bars. And you can see that it's not exactly a perfect offset, that we've been seeing a lot of money exit active mutual funds. So let's bring in Jack Shannon. He is principal of equity strategies over at Morningstar. And Jack, I think this is a really important conversation because if you took a look just at what's going on in the ETF industry, you could say, okay, we're seeing a lot of demand for active management. Totally different story if you include those mutual fund outflows in the conversation as well.
Absolutely. It depends on what you call active, right? So if you group active as anything that deviates from any sort of market weighting, there's lots of things that get thrown into active. So you have like these systematic investors like Dimensional Fund Advisors, Avantis Investors. They've been very successful in the ETF space, but I wouldn't really consider them truly active. And then you have also these income-oriented option income ETFs that are getting a lot of inflows. I also wouldn't necessarily call that, really true active management in the sense of like picking a stock portfolio to beat the index. And if you look at just those, like the true stock picking mutual funds and the ETFs, it's a big, big difference in terms of flows. You have a lot of outflows in the mutual funds and relatively few going into these newly launched ETFs.
Yeah, and you can include the leveraged single stock ETFs in that grouping as well, because they do technically count as actively managed here, Jack. So when you think about, though, just the traditional view of active management, you have in bottoms up fundamental active manager picking stocks, picking bonds. It seems like that has totally fallen out of favor. And I wonder if we ever see that demand come back.
The performance has to come back. Before the flows come the performance, right? And, investors are notorious for chasing good performance and for fleeing bad performance. So if active management wants to make a comeback, they need to perform better, quite simply. Part of that could be, lowering their fees. And so that might be one angle that the ETFs have a positive impact, is that they're generally priced at like the lowest end of the mutual funds out there. So maybe you'll get a little bit of better performance through that. But overall, until they improve their performance, you're going to keep seeing outflows.
Talk to me, Jack, a little bit about the ETF share class transition and the idea of how that either helps this situation or exacerbates it.
It's a little early days to see how it'll truly impact things. So, a lot of asset managers got in line to put their hands up and say, hey, we want to do this. I think there's a whole lot of operational sort of back-end infrastructure items that need to get resolved. There's still some sort of unopened tax questions, like if the mutual fund has a bunch of unrealized gains and they realize them, does a new ETF share class have to eat those gains? And so basically, are you going to lose the tax efficiency in the ETF when you do that? So I think asset managers that we've been talking to are being very deliberate about how they're sort of rolling that out in terms of the share class. I think we will see it become quite popular. I just think it'll take a little time as some of the infrastructure build gets done.
But I'm curious, when you look at kind of the maturity of this of the ETF industry, and I am just curious as to where the innovation is, if at all. And this isn't a knock on Katie, because I know she covers this all the time. She loves this stuff. She talks about it every day. But sometimes I have trouble seeing like what's really new out there. It just seems like it's just different iterations of the same thing.
Well, there's a lot that they're trying to do, right? You have these, public-private ETFs that are coming to market where they're trying to combine some very illiquid assets into the ETF wrapper. We at Morningstar are not super fond of those strategies. We think there's some serious liquidity issues that may come. But you are seeing some innovation there, right? You're seeing, this democratization of private assets is certainly coming to the top of the funnel via the ETF structure. So. And then you have all the leverage stuff that Katie mentioned, right? Mm-hmm. You have all these, yield-generating ETFs that people love, right? People love yield.
I was going to say, Romaine, does the idea of a 5 times leveraged single stock ETF not excite you?
It scares me, Katie Greifeld.
That honestly is probably a pretty good response. Jack, before we let you go, let's talk a little bit about the pace of launches here. Because you think about active ETFs, they're ballooning in assets. They're also ballooning in just the sheer number of funds here. When do we see that pendulum sort of swing back around and potentially lead to fund closures?
I think we will see that, maybe in a year or two. So a lot of these firms are going to be deliberately patient with these, right? They might be more patient with an ETF than they would with a new mutual fund, just because, it is, in their eyes, a growth area. But if you look at most asset managers say, if I don't have $100 million in this fund, in this ETF, it's not profitable, I'll probably close it. If you use that as the barometer, about half of the ETFs are below that sort of break-even point. And so, again, I think they'll be a little patient with these, maybe more so than they would with mutual funds, but certainly a very large percentage of these will probably not be around in 2 or 3 years.
All right, Jack, great to get some time with you. Happy Friday. That is Jack Shannon. He is Principal of Equity Strategies over at Morningstar. And for more ETF insights, be sure to check out my ETF IQ newsletter. That is Bloomberg.com/ETF IQ newsletter. This week's edition actually features part of our conversation with the CEO of SEBI and basically what their plans, their future plans for their ETF business are.
That was a great conversation, Katie Greifeld.
I enjoyed it.
We also had a great conversation a little bit earlier about what's going on in the AI space. We were just talking with Julie Fine, of course, about that big data center project down in Texas. But did you know Illinois? It's actually like the 3rd largest data center market. And the guy on your screen, Gil Quinones, he runs the utility that's in charge of trying to keep up with all of that power demand. Some clips from that conversation when we come back after the break. This is The Close on Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
All right, data centers account for about 3 to 4% of U.S. electricity demand, but that is actually expected to quadruple over the next few years. Utility provider ComEd seeing part of that boom and trying to figure out how exactly various industries will harness that power grid and how to adapt. One way it's doing is what you're looking there at your screen. That is actually the former Chicago Board of Trade building. It's now being converted into a power center. We had a chance to check in with the CEO of ComEd, which oversees the utility that in the Chicago area, Gil Quinones, to talk a little bit about how his company is evolving in this new era. Take a listen.
Well, we are working diligently to meet that load growth. You know, for the last 10, 15 years, our load has been flat, and we're now seeing our load growing between 2 and 4% over the next 5 to 10 years. And so we are building our infrastructure as quickly as possible to meet that growth.
With regards to building out that infrastructure, I mean, you've recently taken on a big project right in the middle of downtown Chicago, a place where you wouldn't necessarily think you would have a major electricity substation. But you chose that spot for a reason. And I'm curious as to why you would locate something of that size there and what type of demand that you've already seen for the future power generation coming out of it.
Well, you know, it was really fortunate that we were able to acquire the former Board of Trade building. It's so appropriate for many, many reasons. You know, load is growing in our central business district, and we need to bring power into that area to meet that load growth. And we should be able to create a little bit over 200 megawatts of extra capacity once we build that substation between 2027 and 2030.
When it comes to this surge that we're seeing in power demand, specifically from AI, one of the hot button issues here is whether or not consumers are actually footing the bill, whether they're paying for that. And from where you're sitting, I wonder what your perspective is.
Yeah. Well, here in Illinois, we actually have a tariff modification that we submitted to our regulators to make sure that costs are not shifted to our other customers should those data centers do not materialize or their load are not going to be what they expected them to be. So we are laser focused on make sure that we not shift the cost, and also we protect our customers from stranded investment risk.
Well, with regards to the increased costs, I mean, how are you mitigating that? Because we've seen in other jurisdictions outside of Commonwealth Edison's reign have to deal with this issue of wholesale prices going up and having to pass some of that on to the individual consumer. Are you thinking about potentially raising the prices that you would charge some of your industrial and technology customers as a way to blunt the impact on your residential and small business customers?
No, you know, we belong to the PJM grid operator, which is the 13 mid-Atlantic states, and they're actually the ones that determine the supply cost for our customers. So that portion of the bill, the supply cost, is really just a complete pass-through, and we do have an imbalance right now of supply and demand, and that's what's causing the upward pressure on rates. And so we are advocating for the right market reforms. Unfortunately, PJM is not working as expected, and their reforms are not coming as fast as they should. But, you know, we want to make sure that if the markets do not work, that we are also ready to step in. And that's what we're telling our regulators. in terms of increasing supply right here in Illinois.
But how much discussion have you had about the structure of those PJM auctions? And I understand on a legacy basis they made sense. But when you're talking about future power needs, which is essentially what these auctions are auctioning off, and you don't necessarily know exactly what those needs are, you get distortions in price, you get distortions in what's available. Have you had meaningful discussions either with PJM, federal regulators, or local regulators about maybe addressing that auction process?
All of the above. We always advocate for our customers, make sure that our supply costs are affordable here in Illinois, and also our sister utilities on the East Coast as part of the Exelon family. But at the same time, what we are now saying is that if those reforms are not enough, if the private sector is not entering, we would like to have the opportunity to step in and provide that solution of additional generation, because then states can have more control over cost and over the certainty of managing affordability for all of our customers.
You're asking for the developers to actually put down deposits. We were talking a little bit about phantom data centers and the idea that some of them aren't even getting built. And I was hoping you could just walk us through that logic a little bit more, requiring deposits.
Yeah, what we're basically saying is before we upgrade our grid to accommodate and interconnect these very large loads like AI data centers, we will project our revenues over the next 10 years and basically ask them to post either a letter of credit or cash or a combination of both to make sure that if those revenues do not materialize over the next 10 years, that we can protect all of our other customers.
That was ComEd CEO Gil Quinones, and we should note that Gil ran the New York Power Authority during the mayoral term of our founder and majority owner, Mike Bloomberg.
Some quick breaking news down coming out of Washington. This on the price of food. The Trump administration says it's actually going to cut tariffs on beef, coffee, tomatoes, bananas, basically things that can't be grown at scale here in the United States. Remember, he imposed those tariffs earlier this year, which sent prices on a lot of those goods higher. Today, we're learning he's exempting hundreds of those products from tariffs. This is The Close.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
What physical places give us are the ability to support the things around work that actually make work better. And that's what I think a lot of executives are missing, is they're putting the burden on the employee via mandates instead of shouldering the burden of creating spaces and places that actually add value to people's lives and that actually accelerate the outcomes that they're trying to see in the marketplace.
And that is Phil Gilbert, a legend over at IBM, who led basically their design team and really talking about the way he thinks about design, more than just the physical, as a lot of people talk about the return to office, but more so about the culture, design of that culture. Our next guest spent almost a decade at the helm of Jamba Juice, spearheading a total turnaround at that company. And he's out with a new book about his management style called Culture Design: How to Build a High-Performing, Resilient Organization with Purpose. Pleased to say joining us right now is James D. White, right here in Studio 2. Great to see you.
Good to see you. Thanks for having me.
I want to start off with this idea of what design really is, because we were speaking with Phil Gilbert earlier this week, and he really kind of hit home this idea that it really isn't always about the aesthetic. It is about trying to create a culture within a company, particularly when you're trying to turn around a company and motivate the employees to go along with whatever that top-line vision is.
So the way we think about culture, you have companies have culture by design or default. That's kind of the thesis of the book. All companies have culture. You might as well build the one that you want.
How hard is it to come into an organization where you know that there needs a lot of change and going to your hundreds, or in this case, thousands of employees, and trying to sort of articulate not only what you want from them, but having the confidence that they're going to follow? We
have a very disciplined process that we talk about in the book, knowing what matters, doing what matters and then measuring what matters. So if I just think about my own Jamba experience, as I came in kind of the first week, what I wanted to do is really spend time with the stakeholders. And the first place we started was in the support center. And I had just 4 basic questions. What are the things that I should stop doing in the organization? What are the things we should start doing, and what things should be continued? And then the final bonus question is, what advice do you have for me as CEO? Mm-hmm. So listening is the first place we start. And then for me, what I think of as an archaeological day, where you're literally looking at all the things that we say we stand for, documenting those, and then laying out a future vision for what the ambition is, and then what's the gap between what we say and what we do, and then kind of marching forward from there.
And how do you balance building trust with making hard decisions that I have to imagine that a chief executive has to make when they come into a company, when they come into a role where they're expected to execute a turnaround? Because I have to imagine for a lot of CEOs coming into that sort of role, it involves laying people off. It involves cutting out new businesses. It involves, bringing in new ones. And I have to imagine it's difficult to thread that needle with also building trust with your employees.
Well, the main way you build trust is by, really good communication, good listening skills. We talk about listening with heart. And one of the core capabilities that we believe leaders are going to need to have more of is empathy. So if I look at what's happening in the world today, this acceleration of AI, one of the things that we're missing is we're leaving the people out of that entire conversation.
Sorry, but not to be pedantic, but haven't we kind of left empathy behind? I mean, I feel like corporate America kind of went through that empathetic phase, and then at some point they decided it just wasn't worth doing it anymore.
What I would say is the best leaders absolutely haven't done that. The leaders that we interviewed for this book and talked about, they actually lead with the humans first, people first. And I'll give maybe 2 examples. So I'm just flying in from Wisconsin. Actually, the last chapter of the book, we talk about regional supermarkets, Snook supermarkets, my hometown, 86-year-old company, literally 4 generations of leadership in that company, and we just made the biggest acquisition in the history of this company, Festival in Wisconsin. So one of the ways that CEO, Todd Snook, prioritizes really building empathy and understanding culture is he flew the entire board. We went to Wisconsin, and the deal just closed 3 weeks ago to meet all the employees, to walk the stores and really get to feel the culture. The one surprising thing on that visit for me, and it's appropriate for this discussion, Festival actually brings culture to life. And I'll give an example. They have a daily huddle at 9:35, 9:40, every one of their 40 stores, where they huddle up, and it's just 10 minutes where they set the direction. And that's the best illustrative example I can give you of leaders that really bring culture to life as an example.
Well, it's a really interesting illustration, because you think about big acquisitions, you're not just integrating products or different services into an existing company, you're also integrating a whole other workforce and trying to make those 2 cultures fit together. And you think about these big combinations, sometimes, it's not smooth sailing exactly.
Yeah, you start with the people. The other example I give you is a lifestyle fitness company, Bay Club, on the West Coast. They're literally acquiring another lifestyle fitness company a month over the last 15 months. So they're constantly adding new employees and trying to integrate culture. And the couple points that I'd make here, their CEO, Matthew Stevens, really started as a frontline worker in this industry 40 years ago. So that's where he starts as he's building culture. One of the resets they did kind of post-COVID is they hadn't touched their culture and vision in about a dozen years. So they came back and really did a huge refresh, and it really has unlocked the full potential of this company. On an annual basis, they have an event that they describe as Polaris, where they literally do a renewal around strategy and culture to keep driving the company forward. But those are 2 examples.
All right, James, got to leave it there. Really enjoyed this conversation. That is James D. White. He is the former CEO of Jamba Juice and the author of Culture Design, How to Build a High-Performing, Resilient Organization with Purpose, co-authored with his daughter, Krista White. Now, let's switch gears here because we're also going to be talking about how it takes a lot to bring a consumer product brand to a multi-billion-dollar valuation. But our next guest has done just that. It's a 10 Hair Care is one of the few beauty brands without any outside backers, boasting roughly $500 million in gross annual sales, despite what some have characterized as a more selective consumer. The company just rolled out its first ever U.S. college campus activation, providing over 400,000 students with free samples of its products. Joining us live in studio, I'm pleased to say we have It's a 10 Hair Care founder and CEO, Carolyn Aronson. Carolyn, great to see you in person.
Pleasure. Thank you for having me.
So let's talk about the consumer and what It's a 10 Hair Care is sort of bringing here, because some have characterized it as a more selective consumer. Others have characterized it as a consumer that just doesn't want to pay up in the same way that they have been for the past several years. So talk to us about how you're navigating some of those different cross currents.
I think there's a lot of different ways that we're navigating it. We're connecting with them in different ways, but we're also really speaking to the consumer in a way that's very direct through that navigation, through social media, through hands-on activation, pop-ups, things like that. And what we're really, our message is that we understand what you're going through. We understand that expensive hair care isn't for anyone anymore. And so for instance, we made an announcement that due to tariffs, we're not raising our prices. So we are a very nimble, self-owned, indie-owned brand that really kind of goes where they don't go. We connect in really different ways with the consumer. We're about to turn 20 years old. So we're also connecting with our college tour with a younger consumer.
Yeah.
But we're also speaking to the pains of our society. We understand. At the same time, they're also demanding more, better quality ingredients and different types of products. So it's really about being able to move, pivot, and be nimble as an indie-owned company.
Well, let's talk a little bit more about the college tour, the push here to get your product in the hands of younger consumers, because I always am curious, when you see these sort of sample giveaways, those types of campaigns, what does the ROI on that look like if folks actually have a chance to try out your products without committing to buying?
Can I tell you, it's incredibly high. This company was built on our Miracle Leave-In product. We now have 11 different variants of that product with collections built around each one. We sell 11 million bottles of that product just in the United States, and we're now in over 130 countries worldwide. I started this company with $80,000. Wow. We didn't have big marketing budgets, and we built it by giving out free samples of our Miracle Leave-In product. So it's really, to me, it's the entryway. And it's interesting. I was just at the University of Miami this weekend. My daughter goes there. I was at the pop-up handing out product, and I can't believe how many young people came up and like, oh my God, I know this product. Give me one, give me one. Yeah. So although we're 20 years old, we might have been their mother's hair care, we are still loved and embraced by the younger generation.
I'm fascinated, Carolyn, by the idea that you haven't taken on major outside investors. You basically stayed indie, as you say here. But as you continue to grow and get bigger, do you see maybe the need at some point to bring in outside investors?
I don't, thank God.
Yeah.
And I'm kind of old school when it comes to all of that.
Yeah.
I know there's a lot of brands that bring in venture or maybe sell a portion of it. We actually have created It's a 10 Enterprises, which now has 5 other additional brands underneath it. Be a 10 Makeup, Rewind at 10 Men's Beard and Hair Color. We created Cloud, a retail brand. So we're actually expanding. More beauty needs are being met by our brands. And so we're actually building more.
Do you find that that's necessary, particularly in the consumer product space, to maybe do that? I mean, I know there's been a lot of talk about how even a lot of CPG products can't even really attract venture capital the way, say, I don't know, an AI or something that's hot in the zeitgeist. Is that so for the next sort of entrepreneur out there who's watching this? Is he or she, is that kind of the path forward for a CPG brand?
I think so. You know, if you can't, listen, I'm a strong believer in starting small, especially when you have social media like TikTok. I've seen some brands blow up overnight. And really funding yourself, starting off with that hot one product like I did, that Miracle Leave-In product, and letting it kind of build and grow on itself. There's nothing wrong with that. Everything doesn't have to be instant and having, the big investors coming in, spending the big bucks. There's a lot of ways to success in today's society. So, I believe in doing it that way as well.
All right. So what's next?
What's next? 2026, as I mentioned, we're 20 years old. My book is coming out, and we're expanding. We continue to expand as far as additional brands, but we have a lot to celebrate next year, and we are going to be rebranding as well. So we have a lot of really excited things to announce through 2026.
Intriguing. And I forgot about Rewind. We had
Fat
Joe on a couple times talking about it.
That's right.
Carolyn, great to have you.
Thank you.
It's been a long time
Thank you for
coming. Just a fascinating story here, from being a hairdresser to building a company with hundreds of millions of dollars in sale. It's a 10 hair care. All right, Katie.
Yeah, let's take a look at how these markets closed. It is Friday.
It is Friday.
Trading
Can we go?
Is over. No, not yet. Not until I tell you how we performed on the day. You're taking a look at the S&P 500.
That's a scintillating board I'm looking at.
Didn't exactly manage to finish in the green. Barely down, but still the color is red. The Russell 2000, as you mentioned, Romaine, that was your outperformer on the day, but just barely. You take a look at the VIX. Below 20, but just so. And then Bitcoin continuing to fall, now below $95,000 a coin. This is the close on Bloomberg.
College sports taking center stage with football selection Sunday less than a month away. Basketball season tipping off earlier this month. This is universities under a lot of pressure right now to find new ways to raise revenue after the landmark settlement over student athletes' name, image, and likenesses. A recent survey of Division I leaders shows 75% say the settlement terms will have a negative impact. Joining us right now to talk about this is one of the people helping conduct that survey. Amy Prevet-Perko is CEO of the Knight Commission on Intercollegiate Athletics, a college sports reform group that prioritizes the education, health, and safety of our college athletes. Amy, great to have you here. When we found out you were coming on, we were kind of having this discussion and just talking about everything that's changed with college sports, particularly college football, primarily because of, I think, what for years had been just an understanding that there wasn't sort of an equitable share of the revenue that college sports was generating. But since we've had these lawsuits and decisions, it's kind of upended the whole apple cart. And I feel like we have not reached some sort of equilibrium as to what this is all supposed to look like. Do you think we're going to see that equilibrium anytime soon?
Anytime soon is a key question. We are in a major moment of disruption, historic changes in college sports. For the first time ever this year, universities were allowed to provide athletes with direct NIL compensation. And so universities, Division I, are going through major changes, trying to, balance these new financial costs. Certainly athletes benefiting in new ways. But as the survey showed, there's a lot of concerns about what the results could be for Division I as a whole. I think on an individual basis, certain individual athletes certainly will benefit greatly. But there's concerns, and we want to make sure that regulations are put in place so that there can be more stability, so that we can continue to provide these just incredible experiences that college sports provide to young people.
But how do you sort of rein that in? Because it's not just the name, image, and likeness. Obviously, the transfer portal is just on fire. The college the buyouts that we've seen in some of these college football coaches, I think the latest stat I saw were basically at unprecedented record highs in terms of the payouts that we're having there. For something that's not necessarily supposed to be big business, it sounds a lot like big business.
Yeah, absolutely. Let's take a couple of those points you just made with the transfer regulations. Right now, college athletes can transfer an unlimited number of times and be immediately eligible. And the survey we conducted with Elon University poll showed that presidents, athletic directors, the campus leaders more than 80% of them favor some change to the transfer rules to still allow some freedoms for the athletes, but for to be some greater regulation to it. Ultimately, we want to make sure that athletes continue to graduate, and we know that retention and staying in school and making progress toward a degree is the best predictor of graduation. Some of the federal legislation being proposed, there's two different proposed bills right now, one in Congress in the House that's called the SCORE Act, and it does put some potential regulations in on transfers, as well as the SAFE Act that Senator Cantwell introduced in the Senate. So over the next couple months, we'll see lawmakers debating unprecedented federal legislation for college sports. And on the buyout, college football buyouts, we just hit a new record. There were 11 football coaches fired just earlier this season, and the severance obligations are $184 million just for 11 football coaches. When the college football playoffs started just 10 seasons ago, the severance pay was $30 million for the head and assistant football coaches. So we've seen just, and I see you're showing the graphic there, just tremendous growth, obviously, with the severance pay. It's really exploded. And to us, it's a clear symptom of a broken financial model in big revenue football. In nearly every state in the U.S., the most highly paid public official is the head football coach at one of the state universities. And now in a few states, unfortunately, the most highly paid public official will be the fired football coach being paid not to coach. So, I bring up that example to say while Congress is looking at unprecedented legislation that could put in some new regulations around the athlete compensation and some more regulations, it may be time for Congress to look at the conditions that allow the continued growth of these excessive compensation and severance packages for football coaches.
All right, Amy, unfortunately, we have to leave it there. Great to get some time with you on this Friday. That is Amy Prevett-Perko, CEO of the Knight Commission on Intercollegiate Athletics. Meanwhile, we do have some breaking news crossing the wire. This coming from an FAA notice. The U.S. dropping flight reductions to 3% from 6% starting November 15th. Tomorrow, that is starting, and that starts at 6 a.m., Romaine Bostic.
Oh, okay, well, let's hope it helps me out this weekend as it goes to last weekend. We'll be back in a moment. This is The Close on Bloomberg.
Some of Wall Street's biggest names offering a public snapshot of their portfolios as we approach the deadline to file 13Fs. Joining us now is Hema Parmar, who covers hedge funds for Bloomberg News. So you've had a chance to go through the different filings here. What's hot? What's not?
Yes. So as we look at the aggregate data across the thousands of funds that have reported, we are still missing a lot of big names. Hedge funds do tend to procrastinate to the last minute. But from what we've seen so far, some of the popular buys, Apple, NVIDIA, and Alphabet. Okay. And then on the flip side, some of the most common sells, Netflix, Philip Morris, and Intuitive Surgical. So some of these you'll see the stock has gone down on the common sells. If you take a look at the chart right here, and this looks like the most popular buys. So NVIDIA, Apple.
Well, as far as the buys, I guess that makes sense. Apple, certainly NVIDIA, and I guess Alphabet to an extent. With some of the more tech-focused hedge funds, like I guess like Tiger Global and a couple others, give me a sense here of kind of like, are they also chasing the same big tech names?
So kind of. Yeah. We did see a little bit of a buying of Netflix from Tiger Global. Yeah. But the most interesting thing with them is a big sell. So they sold 63% of their stake in Meta. Now, we don't typically see big moves of every now and then it does happen. Oftentimes we see buying and selling on the margins of the tech stocks. This is what they play in. But this was a sizable slashing of their position. It was its biggest holding. It's now its sixth biggest holding. Still worth over $2 billion. You'll see how the stock performed. It looks like they might have gotten out. It's down about 17% in the third quarter, so it might have saved them from some of that risk. It is a bit of a volatile stock, as you've seen.
Fascinating. Meta has been a really interesting story this year. We only have 30 seconds. Tell us quickly about the family offices, what we're seeing there.
Yeah, so a bit of a split opinion on Oracle. Some of the family offices bought, some of them sold. David Tepper ditched it entirely. People do care a lot about what he thinks with his Appaloosa.
We do, yeah.
Yes, he also boosted his stake in Whirlpool and ditched Intel.
Whirlpool?
Yeah.
All right, I have to check that. This is why I love the 13F filing, so you kind of get a sneak peek into what these people really think about. Backwards looking, but it's definitely helpful. Hema Parmer, who covers this for us here at Bloomberg, as we wrap up our coverage here on the close. Katie Greifeld, a wild week here. I think we should go out, get some drinks, and get some nose piercings.
Yeah, maybe get a tattoo or two. Anything could happen.
Sure thing. All right, thanks for joining us here on the close. We'll have all your market moving coverage next week. A busy week up ahead with the release of economic data, more Fed speak, and more earnings, including out of Netflix. Out of NVIDIA, excuse me. Sorry. This is the close on Bloomberg.
News when you want it with Bloomberg News Now. I'm Nathan Hager. President Trump may be trying to reclaim the narrative when it comes to the Jeffrey Epstein files. The president posted on social media last night that House Republicans should vote for the bill that would force the Justice Department to release its documents on the late sex offender. We get more from Bloomberg's Alexander Pearson.
There's always been this tension on the Epstein story in terms of Trump's resistance to releasing those files and many of his, so-called MAGA supporters. And it does appear that, this might be an attempt by the administration to control this narrative, not to create too much of a division with that part of the base.
That's Bloomberg's Alex Pearson. The Epstein bill is set for a vote in the House tomorrow. Republican supporters hope it will pass with a veto-proof majority. Democratic Senator Mark Warner says that would put more pressure on Senate Majority Leader John Thune to bring it to a vote in their chamber.
End of the day, the American people deserve to see this. Trump's MAGA base said they want this. And it is more than a little weird that the president is so obsessed about this.
Democratic Senator Mark Warner of Virginia spoke on Bloomberg's Balance of Power. You'll get to hear the full conversation on the next Balance of Power podcast. The European Union is getting ready for trade talks next week with Commerce Secretary Howard Lutnick. Bloomberg News has learned EU officials plan to come to him with a warning that adding to the list of products that are subject to higher steel and aluminum tariffs could violate the spirit of the deal they struck last summer. The EU still faces 50% duties on steel and aluminum, as well as many products that contain those metals. The list right now has more than 400 items. This comes after President Trump moved to cut tariffs on products like beef, tomatoes, bananas, and coffee to address voters' affordability concerns. National Economic Council Director Kevin Hassett says many of those items aren't made in the U.S.
Onshoring that production really doesn't make sense. It's not part of our strategy. And what the president just did with food is decide to make like a blanket movement so that we weren't going through each deal and picking this and that.
White House economic advisor Kevin Hassett also says the U.S. is close to a trade deal with India. After months of negotiations, Hassett appeared on CNBC. Treasury Secretary Scott Bessent has reportedly spoken with the chairman of UBS, Colm Kelleher, about relocating the Swiss megabank's headquarters to the U.S. That's according to a report from the Financial Times, which says it comes ahead of capital that UBS is called extreme. We get more from Bloomberg.
नेचुरल गैस में अगर बुक करना चाहो तो इसमें भी बुक कर सकते हो वैसे थोड़ा सा और नीचे आ सकता है प्रोबेबिलिटी थोड़ा और नीचे आने की है बट इफ़ यू वांट टू बुक द प्रॉफिट बुक इट ठीक है बाकी ट्रेल कर रहे हो तो फिर थोड़ा सा और वेट कर सकते हो ट्रेलिंग एसएल के साथ 389 के टारगेट के लिए बाकी बुक करना है तो बुक भी किया जा सकता है बाकी क्रूड ऑयल थोड़ा सा स्टक हो गया वॉल्यूम ही डाउन हो गया बिल्कुल आज एक्सपायरी है मॉर्निंग पे थोड़ा बहुत मोमेंटम आया यहाँ से आप कह सकते हो इसके बाद से देखोगे बिल्कुल ही साइडवेज हो गया मोमेंटम नहीं आ रहा बिल्कुल भी
Bloomberg's Sri Natarajan.
UBS is the Union Bank of Switzerland, goes back to 1862. It's synonymous with the expansion, the industrial expansion of Switzerland over the last century and a half. And what modern day Switzerland today has been financed with banks like UBS and Credit Suisse. And UBS and Credit Suisse today are one bank, UBS. So if such a move were to happen, it would be dramatic.
Bloomberg's Sri Natarajan reports any vote on bank reforms in Switzerland probably wouldn't happen until 2027 at the earliest. UBS shares traded in the U.S. are down nearly 1%. As for the broader market, it's moving lower ahead of earnings this week from NVIDIA and the first official data on the economy in a month and a half now that the government is back open. Regulatory filings show Peter Thiel's hedge fund sold its entire stake in NVIDIA in the third quarter, following a similar move from Japan's SoftBank. Bloomberg hedge fund reporter Hema Parmar has more.
It was worth about $100 million at the end of the third quarter. Now, it's not that much when you look at hedge funds broadly and how much money they have in some of these stocks, but it's notable because he ditched it entirely. Amid a lot of these concerns we've seen over AI valuations, the money that's being pushed into this space, and concerns about the risk that lies ahead.
Bloomberg's Hema Parmar reporting. NVIDIA reports earnings Wednesday. Right now, the shares are down more than 2%. Fed Vice Chair Philip Jefferson says he sees risks to the labor market skewed to the downside compared to upside risks on inflation. He's not saying whether he'd support another interest rate cut next month. We get the first official data on the labor market on Thursday in the government shutdown delayed September jobs report. Ahead of all that, the S&P 500, Dow Jones Industrial Average, and NASDAQ Composite are all down 0.5%. Bond king Jeffrey Gundlach is warning about the risks from sky-high stock valuations.
The health of the equity market in the United States it's among the least healthy in my entire career in terms of the PE ratio, the CAPE ratio. All the classic valuation metrics are off the charts.
Double Line Capital founder Jeffrey Gundlach says the next big crisis for markets is in private credit. He says he'd keep 20% in cash to hedge against a market implosion. Gundlach spoke on a 10th anniversary episode of the Odd Lots podcast. Find it wherever you get your podcasts. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence.
Your state has been looking to attract a lot of investment. Some very big numbers are being thrown around, including $1 trillion you mentioned. How do you plan to do it?
Now today, economy of India is matured and funds are available all over the world. We need people to transform. Technologies are matured. I have seen IT. To promote IT, I started iTech City. That is late 90s story. Today you are seeing AI, data center, and quantum computers. Leapfrog development. And also, Government of India wanted to go in a big way, technology breakthroughs. Government of India announced quantum machine. I took an advantage. First quantum computer is coming to Amravati. After that I called people. What is our next goal? Within 2 years we are going to produce quantum computers. There we are going to export it. Now we are focusing on green energy. Today in Visakhapatnam and Andhra Pradesh, it is going to become global hub for data centers. How it happened? It is ecosystem. If you create something, automatically something will come. Because of our tariff, cost effective power, and also green energy, people are coming to India to set up data centers.
Google has announced a $15 billion investment.
Yeah.
You expect them to do even more, maybe double that?
It is a win-win situation. To start with 15 billion US dollars within 5 years' time. Then we are having human resources also to work AI. Now we are very strong in information technology. Now we are changing our gear for AI. Tomorrow we are going to change again quantum computers. This is where everybody is saying America is having Silicon Valley. We are having Quantum Valley.
Quantum Valley.
We want to speed it up, everything quantum speed, thinking process, everything. Tomorrow, if you can imagine quantum computing, personal medicine, agriculture at micro level, decision at micro level, communication at micro level. Tomorrow, all offices will become, corporate offices will become redundant. Reason is, data center will compute everything, keep everything, communicate everything.
What other companies are coming into Andhra Pradesh?
You name any companies, national, international, all companies are coming. No exemption. That is what I am. Now, data center, nearly 5 gigawatt data centers are going to come. Backward integration, again, I have to do green energy.
And you have enough energy to facilitate all of these companies?
No, we are very strong in one way, green energy, and also wind energy. Wind hours are different, green energy our production is different. Now we are going to match this pumped storage. We are having very good advantage of reservoirs and also terrain benefit. Again, today battery rates are falling. That is another advantage. Now I am planning rooftop solar. Under KUSUM, every farmer can generate power. He will use surplus, he will get grid. Now every substation I am going micro management. That means local generation, local distribution. Any deficit, I will go for battery.
And you're building
0% losses.
You're building a new city from the ground up, Amaravati. How soon can we expect that to be functional?
Amaravati is a greenfield city. It is a wonderful project. Hyderabad was brownfield city. 2 cities, I added 1 more city. Today, best livable city is Hyderabad. Highest per capita income is Telangana. You name that outer ring road, any city is having, you can go through now. No other city is having. Greenery, IT, pharma, insurance, biotechnology, airport, widening of roads, everything we have done. Today here, this is greenfield city. I want to go to the next level.
It's a tough global environment right now. India's been hit by tariffs from the U.S., Donald Trump. Your state has been affected. How do you manage those challenges?
These are all always challenges, opportunities. When you don't have any production, no need to depend on global community. Today we are producing shrimp, aqua. National exports 60% are from Andhra Pradesh, 60-65%. 2/3 are from Andhra Pradesh. Naturally we will have this type of problems. One is alternative markets. With my strength, I have to move forward. And also they are negotiating Government of India. They may sort it out.
Do you expect a deal soon?
Very soon I am expecting something.
There's a lot of students here too who are engineers and they get H-1B visas into the U.S. Those are now being restricted. How do you cope with that?
No, what I'm saying, in knowledge economy, location is not important. Knowledge is important, leadership is important. I can start a company here to service Americans, cost effective way, in a service sector. There are manufacturing, I have to go there. There are some sectors where physical presence is important, then they have to move. Otherwise, so many services you can provide online by having proper knowledge and leadership quality. That is going to happen. If all intelligent people are going to America, because of that they are doing the best. Now some people are returned in India. That will help us further.
We're seeing youth unemployment globally, particularly with AI coming on, these challenges of how do you give young people jobs. We've seen protests all over the world from the Gen Z generation. Can you provide enough jobs here for those people?
Knowledge, technology. Always technology will create new challenges. Either job or economy, everything. And at the same time, government should create new opportunities. Now in Andhra, agriculture we are going agri-tech. Because there are some problems, we are not getting labor. What is the way forward? Modernization, mechanization. If you do mechanization, I will have an advantage in agriculture. Second, tourism is one sector where white collar jobs you can create to the maximum extent. Hotels, MICE tourism. Even you can see the places in Andhra Pradesh, excellent beaches, excellent forest areas, ecotourism, water, and also temples. My Gandikota, you have to see there, it is better than Grand Canal. That is hill. This is two sides in between water. So these are all very good. Even our Balaji temple, Tirupati, if you can go, 85% green cover. Even Sri Salem, one of the beautiful place, temple tourism.
Yeah. So you're often described as India's kingmaker. You've joined up with the Prime Minister in a coalition. There was a big win for a coalition partner in Bihar. What does that mean for government stability through 2029?
No, I'm very happy. India got, after a long time, one extraordinary leader. From 2002, if you can go through history, Narendra Modi ji is winning all elections. That is where I told India got right leader, right time, right place. What is the benefit? 25 years he has won. All our policies are consistent. Stability in economy. And also, today Bihar winning the election is a message for the global community and also local people. Local people will move very fast because of stability. Global community will have a message, there is strong leader in India. People are backing him.
So investors don't need to worry that you'll go anywhere, the government will fall?
Yeah, that is the benefit. Then we'll increase now with policies some refinement. We can grow next level, 8% or 9%.
The country?
Country as such. Some states will go 10, 12%. I am planning around 14-15%.
Are you getting everything you need from the central government?
What all possible, they are helping me. But at the end of the day, I have to perform. Or otherwise I will perish. Even they give me some money, it is not productive. How many days they will give money? That is my theory. Always I want to create wealth. I want to generate revenues. Thereby, I want to empower people continuously. India is one country. Now we have to think what type of society we are going to make. 2047, India will be number one. Indians globally number one. In India, what type of society we are aiming? That is what we are working now. This is where I am saying inclusive, not only inclusive. P3 is public-private partnership. People are creating wealth through entrepreneurship. Now I am promoting, society has given this benefit to you. Why can't you give back to the society? That is where I am promoting P4, public-private people's partnership. People as capital. Mentor, short term, medium term, long term, handhold, timely assistance, guidance. Bring them along with us, if not, at least reasonable scale.
You're seeking a lot of investment from overseas. India's relations with China have been improving of late. Would you accept Chinese investment into Andhra Pradesh?
No, from the beginning, our Prime Minister's stand is very clear. Vasudhaiva Kutumbam. What it means? World is one family. We won't come to anybody's way. You don't come to our way. It is mutual benefit, we'll work together. Communal harmony among countries, give and take policies. They should not intervene in our sovereign powers. We should not involve in their sovereign powers. Sentiments, respect that country. And at the same time, wherever it is possible, help each other for common good, global good.
Are you speaking with any Chinese companies?
So many companies we are working. They are also showing interest.
BYD?
Yeah, it all depends upon Government of India. We will work it out.
You have had a storied career building cities, developing cities. What do you see as your main legacy going forward?
No, we are having very beautiful places. Visakhapatnam, very pleasant city. No city is comparable in India to Visakhapatnam. Beautiful beaches, opposite to that beautiful hills. People are very good, highly ethical. That is another advantage. So with all these things, I want to make Visakhapatnam as a hub for development. Either IT, data centers, pharma, logistics hub, and also tourism. These are all various issues I am working with them. Same thing Amravati, it is a new capital, new city, future city. I can make it that city one of the best in the world, most livable. There I can promote knowledge economy, education, quantum computers, health, futuristic, all technologies will take there. Tirupati is a spiritual city. I wanted to make wedding destination, MICE tourism, and also spiritual religious tourism. So many temples are located in Rayalaseema. For all these things, what you need? Logistics. Connect properly, create infrastructure, create best hotels, then automatically things will happen. That is where I am planning. You are all expecting IT will create job losses because of efficiency gain. Now I am promoting work smart, not hard.
How long do you plan to keep going? I mean, you've outlined this vision for years to build 3 new cities.
It is a continuous process, upgradation, development, new things will come, I have to adapt it. Earlier I adopted only IT, after that AI has come. Earlier all these things are reserved in public sector, space, all these things. Now all these are opened up. So it is a continuous process. Opportunities are abundant.
And you personally will want to keep going for a while.
Which one?
You personally, you plan to keep running for elections and seeing this vision through.
Yeah. Our party is for the last 45 years. Now, party is a permanent thing. It will continue for us.
Your son is a rising star in Indian politics. Do you see him carrying on this legacy of yours?
No, that is where I'm saying legacies we will leave. Adoption or shining, it depends upon individuals. You cannot push people to do better. If they are having intention, they will do better. And automatically it is a win-win for the country. What he is having family business, he selected politics. Why politics? To serve the people. As long as serve the people, serve the nation, people will bless him.
So ultimately you're optimistic about where India is heading?
Which one?
Where India is heading overall. Do you think India can compete with China and hit those big 8% growth rates?
No, we are ahead of anybody now. 8% growth rate, minimum. We can achieve it. Only highest growth rate is achieving India. It will continue. There are inherent advantages. I can tell you 3-4. Economic reform started 1991. It has opened up opportunities and thinking process. Mid-90s, IT revolution, first mover advantage Indians. Demographic dividend as a windfall gain. No other country is having, including China. Only India enjoys this. Now I am promoting population management, not population control. If now all countries are facing problem, they are depending on India for human resources. That is another biggest opportunity for us. Now with all these things, what I am saying, again, very strong leader. With all these things, Indians will be number one. It is going to happen.
What are the risks to that, do you see?
No, always, if you do something, there is some risk. Plan systematically, less risk, more opportunities. Take forward. You want to travel, there will 1 or 2 accidents will happen. If you think there is an accident, then stop the travel. No. That is how we have to cautiously have to try.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Monday. These are the stories that set your agenda. US stock futures point to gains at the start of a week, which will see results from Nvidia and long-delayed updates on the US economy. Bitcoin steadies after wiping out all of its gains for the year. President Trump ramps up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. Plus, Boeing says getting it right at pace is better than going fast as it looks to ramp up 737 production next year. We are live at the Dubai Air Show, where we will be speaking with the CEO of Boeing Defense. So it was a choppy week last week for equity markets. Ultimately, you ended up with very modest gains on US stocks and European stocks by the end of the week. On Friday, you did see losses of around 1% for European stocks. But again, by the end of the week, for the full week as a whole, you did see very modest gains for European stocks. Today, futures in Europe pointing lower by about 0.1%. Here in the UK, the FTSE 100 is down just 10 points, pointing lower by 10 points. Of course, the politics and the uncertainty around the budget continues to be in focus, and the gilt markets as well, on any new lines being floated ahead of November the 26th. US futures currently pointing up by 0.4%. Nasdaq 100 futures looking to add 155 points. Of course, the big one when it comes to the earnings story is Nvidia, dropping, of course, on Wednesday, those earnings. Let's flip the board and have a look cross asset markets now, fading their bets for a December rate cut from the Federal Reserve. Mixed messages, of course, from Fed officials, and currently traders pricing in less than 50% chance that the Fed goes in December. The 10-year currently at 4.14, largely unchanged. Stability across the Treasury markets in the session today. Euro dollar at 1.16, down 0.2%, and dollar strength in the session today as part of that story. But the single currency under a bit of pressure so far in the session. Oil falling as well, down 0.9% on Brent at $63.83 on reports that there is a port reopening over in Russia. Maybe some more oil on the markets. And Bitcoin then, after having lost all of the gains year to date in the session today, modest upside of around 1.8%, but in the context, of course, that the gains for the year have been wiped out. 95,000 right now on the biggest cryptocurrency by market cap. It's red on the screen over in Asia. Let's cross over to Winnie Su in Hong Kong. Winnie.
Morning, Tom. Like you said, not the best way to start our week here in Asia, as we see MSCI Asia down a bit, slightly less than 0.5%. And the losses were mainly dragged by stocks in Hong Kong and China, as you can see here, mainly because of that lower sentiment as the escalating tensions between China and Japan continues to roll. And we can see that it really translates into what's going on in the Japanese markets today. You see that the overall benchmarks are both lower with the topics, the broader index topics actually even lower. And that's because how China has cautioned its citizens not to travel to Japan and its students in Japan to continue to monitor the security problems going on in Japan. And that is coming after how the Prime Minister of Japan, Takaichi, said that, commented about the issues around Taiwan. So the tensions are really escalating and ramping up pretty quickly. Now you've got China's state media actually saying that China is ready for any substantial countermeasures, and Japan is actually sending its senior diplomat to the country. Now you can take a look at some of the stocks that were really under pressure, for example, the retail names and the travel names, because China really accounts for a big portion of Japanese tourism. And here you can see that the department stores Iseta Mitsukoshi down more than 12%. Oriental Land, the operator of Tokyo Disneyland, also down more than 5%. On the other hand, also for some of the names outside of Japan, the travel stocks in China were lower, and also the defense names in China were stronger just because of the escalating tensions between the two countries.
OK, tensions between Japan and China, a story to continue to monitor. Winnie Su in Hong Kong with a check on the Asian markets as well, and how that geopolitical story is feeding into the equity moves. Meanwhile, Boeing factory workers in the St. Louis area voted to accept the company's latest 5-year contract offer, ending the longest strike at the plane maker since 1948. This as the company has recently started production of the F-47 stealth fighter for the US Air Force. Bloomberg's opening trade anchor, Guy Johnson, is at the air show in Dubai for us. Guy.
Good morning, Tom. Yeah, things are warming up nicely here. It's going to be a really interesting show in terms of what we are likely to get out in terms of orders. But what you are probably going to see at this show as well is a bigger focus on defence, probably a much bigger focus on defence than we've seen over the last few years. And on that note, we're joined by Steve Parker. He is the head of Boeing Defence Space and Security, and he's now got the job on a full-time basis. You were interim for 9 months. Fantastic to get that under your belt, so congratulations on that.
Thank you.
Steve, the workers are back. They're coming back, I understand, overnight. The strike is over, the 15-week strike is over. Tell me a little bit about kind of the process of getting that factory up and running again? Kind of what is the timeline? How quickly does it happen?
Thanks, guys. Well, first off, look, it's just great to have the team back. They're the best in the business, building our fighter aircraft in St. Louis. So it's really, as they come back in today, going back through recertification work, making sure we've got all the quality standards right, and then we'll get them back on the job. But really, really pleased the strike's over with, the dispute. And just excited to get the workforce back in and get them doing what they do best, which is building some of our most advanced systems in the world.
Is there a kind of, when we've seen other strikes finishing, there's a kind of long recertification process that has been an issue and has slowed things down. Any issues with that kind of thing?
No. It's again just a very measured approach. Nothing is more important than safety and quality. So just making sure people are refreshed, we're good to go, and then we'll get them back onto the job. So take a couple of weeks, but no impacts there.
You've had a couple of clean quarters now. You've got a strike that's over, you've got a big order under your belt. It's starting to feel like a different Boeing defense business.
Well, it's early days. Pleased with the progress so far. It's very simple from my perspective. It's really about our customers. So driving discipline back into program management, our engineering resources, making sure we're looking at risks, looking around corners. So it's been a good year. The team's stepping up.
But do you feel the last few years have been difficult? You must feel that this business is on the front foot now.
Well, definitely, to use a bit of a cricket term, definitely on the front foot. And again, I think you're seeing some confidence come back in, but again, just discipline, making sure we're for the new work that we're winning, we're bidding it the right way, so we can execute with schedule margin, technical margin. But I like the progress, and I think there's going to be more to come.
More to come. Okay, let's talk about more to come and what comes next. You've got the F-47. So where is the F-47 now? I'm told you're building it.
Well, that's what the Air Force have said, so I guess I can confirm that now. But the F-47, this is the F-22 Raptor replacement for the United States Air Force, which is, Boeing, Lockheed products, amazing aircraft. This is the next generation of stealth, performance, survivability. Highly classified, so not a lot that I can say. But what I will tell you is that we invested in advance of this win. We're building new facilities in our St. Louis, Missouri and Mesa, Arizona areas. Billions of dollars of capital going in here to position us to be able to execute, and it's just head down execution right now, working very closely with our customers.
Was the Super Hornet the last kind of ground-up aircraft that Boeing new aircraft built?
From a fighter perspective, yeah. So again, this is just the next generation. We do a lot of work in the classified spaces that people don't see, and again, we've got our T-7 Red Hawk, which is really a clean sheet training aircraft, which will train every U.S. Air Force fighter and bomber pilots. I think F-22, the F-47, B-21 and so forth.
So the learning curve in terms of building a new aircraft, I haven't done it for a while though, how steep has it been?
No, I think this is just what we do. So you think about the T-7, the MQ-25 Stingray, both new aircraft that we're building right now in St. Louis. At the same time, we developed the F-15EX, a major modernization effort on the F-15. Actually, developed a lot from Saudi and Qatar with their investments on the F-15 over time. Same with our Block 3 Super Hornet. So it's just what we do. And our heritage in St. Louis is we've had 2 or 3 production lines going at all times from a fighter perspective. So, again, not taking anything for granted, but a really good, strong start.
I'm sure you probably know where this conversation is going next, which is FA-18 replacements, which is kind of the next one on the block, as it were. Have you got the capacity to do both?
Yeah, it's a great question. We get that question a lot in the US. Yeah. So what I've told folks is, look, when we bid both these programs back in the day, it was with the ability to execute both. So our capital facilitization we put in place is for both programs and other programs as well. We're already staffed up. And again, Boeing has been investing in digital engineering and digital manufacturing, so we're going to design and build much differently. The very fact that the F-47 award was in March of this year, and we're now building the first aircraft that the Air Force has revealed is unheard of. That would normally be 3 to 5 years.
Sure.
So I feel very confident. We're not going to bid things if we can't execute them. So
is there any overlap between the programs? Like, is there an advantage in doing both?
I'm sure there is, but nothing that I can talk about on the TV at the moment.
Okay. You talk about kind of how things are evolving and the pace, the cadence at which things are moving at the moment. Is the ecosystem changing? Is the nature of what you do changing in terms of the speed at which things need to happen? We're certainly seeing that coming out of some of the conflicts that are live right now. The pace of evolution is much quicker.
Yeah, I think it's a great question. It's really about how do you take what we're learning from as the threat changes, how do you get that back into our systems and then push them back out? The war in Ukraine, the unfortunate war, we're seeing a lot of that learning coming in. And again, from a Boeing perspective, we're doing a lot of work with non-traditionals at the moment.
Yeah.
So I would tell you,
by that you mean kind of companies like Palantir and people like that are coming into the space.
Palantir, so we're teamed with Palantir. We just made that announcement recently, using their Foundry system. So again, taking what they do best on the AI perspective, getting to our legacy systems. We're also working with folks like Anduril on our ground launch small diameter bomb. They're making the solid rocket motor for our supplier Saab. So we're having lots of these conversations. As my perspective here really is that I want to see what is out there. What's the best of the ecosystem? Small to medium enterprises, non-traditionals, large traditional primes. Bring it all together, because at the end of the day, it's really about satisfying our customers' most pressing problems.
But is the nature of it changing? There's a lot of companies coming out of Ukraine now. The pace of evolution there is dramatic. Drone companies, anti-drone companies. This kind of technology that is evolving super fast. Are you thinking about the way you are going to evolve the business differently as a result of the pace change?
Absolutely, yeah, absolutely. It's a great point. And that's where digital engineering comes in. We're able to iterate designs real time right now, pushing software into the products real time, through the air, over the air system. So again, we have to change along with, as the threat changes. But at the end of the day, it's really about promises made, promises kept at the end of the day. So that's my big focus.
In terms of resources, have you got everything you need? Patriot systems, let's just talk about those. You built the seekers for those.
I do.
Huge demand. Over the last year, and a massive pickup. Can you keep up with that kind of demand? Is there anything you're short of? I talk to the civil guys, they are constantly talking about supply chain concerns. Is that represented in the military side of things as well?
Yeah, that's, the Seeker which we build is kind of like the brains of the Patriot missile. And, a great example here is last year we built a new facility, 40,000 square feet additional facility, because we saw a demand coming well before the customer talked to us about it. So this is the difference the Boeing company can make. The scale, 170,000 people. We build large facilities. We come up in rate into very, very high rates. So this Seeker is going to triple in terms of our deliveries. So it's really about capitalization, facilities, tooling, the supply base, to your point, making sure we bring the supply base with us. Then it's people. And we're already starting to train folks up. So I feel really comfortable here. We're going to be asked to stretch, and we're going to be ready for it.
Okay, I think we've done security. I think we've done defence. Let's just quickly wrap things up on space. Tick all the boxes.
You got me.
where is the space business going? We're starting to see consolidation. It's happening in Europe. What do you think the future of the Boeing sort of space side of things looks like? Not now, but in 5 years' time. Is the business going to evolve and change? Do you see other partners coming in? Do you see yourself working with different partners? What's the future of crude, the crude cabin stuff, and all that? It feels like, again, things are moving fairly fast.
Well, you get me excited just talking about this, the way you're talking about it, guy. I would say it's already evolving. If I looked at national security space, which we're a market leader, I think we're right up there. We've got the large satellite space covered. A lot of that's commercial. A lot of it's defense, highly classified. But we've gone to a small sat through our Millennium Space Systems business, where we can put out large numbers of these small sats, different price point, capability. So we're already starting to think through where's the market going to go in the future. On the civil side, with our work with NASA, our Starliner, we're getting ready right now for another flight next year. NASA's manifest suggests April. And we're just coming through all of our testing, making sure all the fixes we put in place are good to go, working very closely with NASA. And we've got the Space Launch System coming up, Artemis 2 flight, looks like February. Again, just going through that whole process. What we're thinking about now is, if NASA wants us to go, do we do more than one a year? Could we go to two? Where would we take it?
Can you see that?
We can do that. So it's really just a conversation and making sure that we lay the timeline in, we work out what people, resources we need, and bring the supply base. It's really a question of the supply base and how we put the demand signals in and how we help the supply base come up to speed.
Great to catch up, Steve. Thanks for your time this morning.
Pleasure.
Genuine pleasure.
Absolutely.
Nice to see you. Steve Parker, the CEO of Boeing Defence, Security and Space, joining us here at the Dubai Air Show. Tom, back in London, over to you.
Okay, really interesting conversation around defence and space tech. Guy Johnson at the Dubai Air Show. Guy, thank you. Got plenty more, of course, in terms of interviews that Guy will be bringing to us throughout today and tomorrow. Next hour, we're going to be joined by Joby Aviation's CEO, Joban Bevir. So stay tuned for that conversation as well from the Dubai Air Show. Here's what else to think about the week ahead, though. Wednesday, it is the big one on the earnings front, dominating, of course, the tech space, but the broader markets as well. NVIDIA earnings coming out on Wednesday. We'll preview those for you and break them, of course, on the day and get reaction to that significant earnings story from NVIDIA. And also on Wednesday, on the macroeconomic data front for the UK, inflation data, so UK CPI dropping on Wednesday as markets increasingly bet that the Bank of England will go with a rate cut in December. We'll see how the inflation story ties in to those forecasts and assumptions. And on Thursday, we get the delayed non-farm payroll jobs print from the US for the month of September. So significant in terms of the data front on the labour market of the US and how that ties into expectations around the Fed and whether or not it can go with a cut in December. Coming up, Donald Trump signals he will back a Senate bill that could impose 500% tariffs on buyers of Russian oil. We will have the details for you next. Plus, as Bitcoin erases gains for the year, we're going to discuss all things crypto with Elliptic CEO Simone Maney. We're going to have that interview for you later on in the show. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, in his strongest indication yet, President Donald Trump has said proposed Senate legislation to sanction Russia's trading partners would be, quote, OK with me. Joining me now is Bloomberg's chief Asia correspondent, Ros Madsen. Ros, at moments like this, I always have to question how much weight we should put on these comments from the US president, how much conviction he has behind them. What is your take as to whether or not this is a significant adjustment in terms of the position from the US president?
Well, that's right. He can be quite changeable on this issue, depending really on where his mood is at with the Russian President Vladimir Putin, because he's swung quite a lot on that question. But he does seem to be in a mood of frustration still at the moment with the Russian leader. Clearly that Vladimir Putin is dragging the chain on any kind of push towards a ceasefire, let alone a proper peace deal in the war against Ukraine, that Putin shows no inclination really to try and end his war and no desire to do so. So perhaps a sense of frustration coming in there. And we know that Donald Trump has been OK, for example, penalising India for its purchases of Russian energy. Now is indicating perhaps other countries as well, including Iran. But the big one in all of this would be China. And there he has another thing to keep in his mind, which is his desire to have that slightly warmer relationship with China, have the trade relationship on a better footing. So he's been quite reluctant to look at China when it comes to purchases of Russian energy. He's been willing to ding India, at least that's for sure. So that's also a really big question. How broad would he be willing to go with this? And is he willing to take on China with this issue? Again, it depends just how frustrated he is with Vladimir Putin. I mean, obviously the economy in Russia is on a war footing. Production has been helping it keep going. But underneath all of that, the economy in Russia is quite fragile and certainly has taken a big hit from this war and all the sanctions, and cutting off the income for Russia from the energy side, again, particularly a big buyer like China, could have an impact on Vladimir Putin. Whether it would persuade him to change course on Ukraine is another thing entirely, because he has shown himself to be very willing to tolerate a lot of pain for the Russian economy in order to continue his war.
So, Ros, when could this legislation that appears to be getting some backing from President Trump, when could it likely go through Congress, go through the House, the Senate, and finally get to the president's desk? What kind of time frame are we looking at?
Well, that is the ultimate question, because it's been sitting there for a while. I mean, the Senate Majority Leader said last month the legislation is ready to go, although he himself said he's not pushing necessarily to get a hard date for it. Again, it depends really on Donald Trump. Does Donald Trump give the green light and say, I'm now willing to sign off on this legislation and put it through? Does he say, I won't object to it if you do put it through? How strong is his endorsement? But we haven't heard from Donald Trump either any sense of a date to vote on it. He gets a bit close and then he seems to waver again, because does he really want to go that far with Vladimir Putin? What happens if he does? Does he still want to leave open the option of continuing to have dialogue with the Russian president, perhaps claim that he can bring an end to the war in Ukraine? So there's no set date for this as yet. It does seem to be ready to go when that date is given, but it's been sitting in the drawer already for quite some time.
OK, Bloomberg's chief Asia correspondent Ros Mattson, thank you for that update. Now to the markets, where Bitcoin is finding a floor after hitting its lowest level this year amid a sell-off in risk assets. Let's bring in Bloomberg's Valerie Teitel right now. What is happening with Bitcoin then?
Well, look, speculative assets, frankly, have not had a good few weeks. Even the NASDAQ is down some 5% from all-time highs just in late October. Now we have Bitcoin really leading the charge here, down 25%, Tom, from its highs on October 6th. It went from 125K to now trading sub 95K, and it's lost 600 billion in market cap over that time. Now, it has been a hard time for these more speculative assets. Some are tying this more to macro themes. We've had a hawkish Fed decision, some rebellion from some more hawkish leaders really wanting to put the Fed cut in December in doubt. That obviously leading to some struggle when it comes to tech stocks and when it comes to Bitcoin. The other thing I want to tie in here, though, as well, is we've had a creep higher in funding rates, in repo rates. And we've had a Fed on the sidelines not really wanting to intervene. And again, that is just not a backdrop where you see speculative assets like Bitcoin perform. However, there is another risk event on the horizon. We do have those NVIDIA earnings coming after the bell on Wednesday. It would be very interesting to see whether NVIDIA comes out with a beat, because that could put some of this fears around tech stocks and Bitcoin to rest, at least for now. OK, Val, thank you very much indeed. Bloomberg's Valerie Teitel on Bitcoin and the lead up to NVIDIA. Later this week, coming up, how global protectionism is challenging the rise of clean technology, but could actually help poorer nations make the transition. Details next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, the global rise in protectionism is having a big impact on the energy transition as trade barriers go up. With me now is Matthew Hales, a trade and supply chains analyst at Bloomberg NEF. So, Matthew, great to get you around the set. Just talk to us about what the US trade change in terms of trade policy, what that is having, the impact it's having, particularly on importers of green energy.
So, I mean, tariffs are really a two-pronged thorn in the side of anybody trying to import clean energy equipment into the US this year. And the first thing you have to consider is the cost. Mm-hmm. So if you're importing a solar panel, on average, you're now hit with a 15 times higher tariff bill than you were last year. The second thing to consider is that the kind of tariff that you pay is made up of a bunch of individual measures, all of which have been shifting, and there have been setbacks and changes from the government, the Trump administration, which means that there's a lot of volatility and uncertainty for project developers. All in all, that's going to be a knock-on for the amount of clean energy that could be deployed this year.
What else is happening beyond the tariff impact that is grabbing your attention right now in this space?
The other kind of thing that we're looking at in the US specifically is ramifications from kind of China's export controls, what that impact will be, and kind of the control around rare earths is something we're taking a look at.
OK, so the rare earth impact as well as China modifies some of its exports controls on the back of that, at least for 12 months, and we'll see how that changes. Matthew Hales, thank you very much indeed in terms of some of the adjustments made as to the impact of trade barriers, of course, in terms of the clean energy sector from our Bloomberg NEF team and analysts there focused on trade and supply chains. Coming up, UK home sales slumping at the top end. We get the details. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Monday. These are the stories that set your agenda. US stock futures point to gains at the start of a week which will see results from Nvidia and long-delayed updates on the American economy. Bitcoin steadies after wiping out all of its gains for this year. President Trump ramps up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. Plus, new data finds that sales of the UK's most expensive homes plummeted last month in the wake of speculation about higher taxes in the government's budget. We're going to bring you the details. Let's get to the markets, though, right now. Bit of a choppy week last week for stocks, which ended broadly in positive territory, modestly so. European markets were down 1% on Friday, but for the week, eked out some very modest gains. Today, European futures pointing lower, just by 1/10 of a percent. FTSE 100 futures off by 9 points. US futures, as we mentioned in the headlines, pointing to gains of 0.4 of a percent. The countdown to Nvidia earnings that drop on Wednesday, and the macro data as well, with jobs and inflation out of the UK. Nasdaq 100 futures pointing to gains of 169 points. Let's flip the board and have a look cross asset. Treasuries largely unmoved in the session today. Markets pairing some of their bets around whether the Fed will go with a cut in December. 4.15 right now in the US benchmark 10-year. Euro dollar at 116. The single currency down 0.2 of a percent. Brent and WTI under pressure in the session today. 1% move or lower for Brent at $63.76. So watch the energy sector at the open at 8 a.m. UK time. And Bitcoin, as we mentioned, stabilising up 1.6%, but pairing all of its gains a year to date. Just below 95,000 right now for Bitcoin. Now to the UK, where sales of UK homes worth at least £2 million plunged 13% in October, year on year. It's the sharpest drop in 2025. This according to data from property website Rightmove. The moves and the numbers come as speculation builds, of course, about the introduction of a mansion tax, a so-called mansion tax on high-value properties in next week's budget. Let's bring in Bloomberg's Kit Rees then for the details on this. So, Kit, just put us into context. 13% drop in terms of the monthly numbers out of Rightmove. How significant, how much pain are we seeing at the top end of the housing market here in the UK?
Well, we're seeing quite a lot of pain, to be honest. There's a lot of caution in the market, and this is especially true in London, given in the capital there's a high amount of very expensive homes. And it also adds to growing evidence of a sort of cooling. So our colleagues have previously reported, as an example, that one luxury apartment was sold at a 50% discount.
Wow.
So, yeah, there's a lot of pain, there's a lot of caution. So as we saw last week, it's very important for Chancellor Rachel Reeves to keep MPs on side, and that's what we saw with the U-turn on the planned increase in income tax hikes. So it's politically more palatable to tax wealthier individuals. So this is what we're seeing with the mansion house tax that's been reported as one of the measures that she is considering. Also, another measure is a charge on wealthy individuals exiting the UK. So taken all together, this isn't surprising that there's a lot of pain at the top end of the market, especially, but it's also been widespread, and it's something that we've seen all year. But with a budget just next week, it's looking particularly sort of nervy.
OK, so the budget is a major factor in this story. And you talked about the broader market. What is happening? This is not isolated just to the tippy top of the UK market. This is a broader phenomenon as well in terms of lower prices.
Yes, definitely. So the Rightmove data also show that there's been a broader slowdown, and it's something that we've seen in all year. We had higher stamp duty charges which have hit buyers. They're dealing with a cost of living crisis which squeezes affordability, and of course with the budget there's lots of nerves over what taxes could be introduced. Going to get higher taxes, so it's kind of keeping sellers, they're not sure whether to sell now, sell later. Buyers also not really sure whether to, go now or go later too. So overall, there's just a lot of caution. There's caution over interest rates as well. We don't know what's going to happen with the Bank of England, and interest rates are quite high in the UK compared with other places. So overall, it shows that there's a lot of caution, there's a lot of uncertainty, and this is being played out in the UK housing market.
OK, excellent. Kit Rees, thank you very much indeed. Co-editor of Bloomberg Markets today. Staying in the UK then, the government is set to announce an immigration overhaul which could curb asylum seekers' access to housing and financial support. The wait for permanent settlement is likely to be extended to up to 20 years, with status reviews every 30 months. The tougher rules come with the Reform UK party continuing to hold a commanding lead over Labour as immigration pressures remain at the forefront of public concerns. And investors are getting new insights into the holdings of the world's biggest stock pickers with the latest 13F disclosures to the SEC, the Securities Exchange Commission. Charlie Wells has been digging through the data, as he does every time these drop, and is here with the latest. Charlie, what do we know about the filings then? What do they tell us about big investors and some of their moves?
Good morning, Tom. So this really is all about positioning in tech. If you look at the heaviest weighting that we're seeing in these 13F filings, you see about 25% to tech, followed by about 8% for financials, healthcare, consumer discretionary. And what we know with these filings is that investors who manage more than $100 million are required to file them to the SEC 45 days after the end of the quarter. So this is for the third quarter. If you look at the NASDAQ, if you look at some of these tech stocks over this period, you see that upward trajectory. But again, that period was really marred by questions about how much room this rally had to run. We see questions like that showing up in these 13F filings.
Charlie, what about some of the themes emerging when it comes to individual stock names in these investor holdings?
Yeah, well, Tom, I've got some winners and some losers for you. Bloomberg has gone through some 909 filings for hedge funds in particular. We've seen some big increases in allocations as far as market value. You look at NVIDIA up $11 billion in that third quarter. Other tech names, including Alphabet and Apple. Let's bring up some of the losers, however. Losers as far as market value in that third quarter. You've got CoreWeave, that sales software provider, down some $6 billion, followed by other tech names. And so the fact that the winners are tech names, the losers are tech names, gives a sense of how this market, how the questions about this market's trajectory have been going. Let's look at an individual portfolio. We'll end there with Berkshire Hathaway, of course, headed by Warren Buffett. You can see again here that similar theme. So building up almost a $5 billion stake in Alphabet, but then trimming Apple by some 15%.
OK, Bloomberg's Charlie Wells on those 13F filings and the stories that they tell. Charlie, thank you very much indeed for breaking that down for us. Now to some of the stories making the news. This Monday, US President Donald Trump has continued making sizable bond purchases this autumn, including debt from companies affected by his administration's policies. New ethics disclosures show at least $82 million in transactions, including from Netflix, Boeing and Meta, along with bonds from US cities, school districts and hospitals. No sales were reported in the disclosures. And President Trump says House Republicans should vote for the Justice Department to release its files on Jeffrey Epstein, effectively reversing a position he'd held for months. Trump has been under increasing pressure from some of his own Republican Party members to release the investigation materials on the disgraced financier who ran an underage sex ring and died in prison in 2019. Trump posted on social media, "We have nothing to hide and it's time to move on." Switching focus, German Finance Minister Lars Klingbeil is heading to Asia, pushing for, quote, open, rules-based trade as tensions rise between the US, China and Europe. He's going to take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore and press for fair competition along with better market access for German firms. And the chief executive of Deutsche Bank, talking of Germany, is set to unveil his strategy for the next 3 years this afternoon. Analysts are expecting new financial targets, but few changes to the overall strategy. Let's get more on what to expect with Tom Metcalf, Bloomberg's managing editor for EMEA Finance. Tom, what are investors, what are you and the team interested in?
Yeah, I think it's probably going to be tweaks on the margins, so some improvement in those returns targets, and looking to get into more sort of high revenue, high margin businesses like wealth. But broadly speaking, stay in the course. So the last 3 years has simplified Deutsche Bank. They've managed to avoid too many missteps. The shares are really up. But it's not like it's a brave new world for them. Their price to book is just about coming up to 1, and that's probably going to stop them doing anything sort of too bold in terms of looking at M&A or jumping into massive new business areas.
And you've talked about the relative success then the leadership and the bank has had over the last 3 years, and essentially this is just going to keep doing what they're doing with some of those tweaks. What are the key, if you were to point out and underscore the key challenges still facing Deutsche Bank, what would they be?
Yeah, I think it probably comes to the retail bank, which has long been a problem. And there, it's just struggled with margins, but also IT integration issues and stuff like that. And that has just been a perennial problem for Deutsche Bank. So I think that's going to be one of the big things is, can they effectively just clear through those problems and, again, find ways of boosting returns of that big unit. And then, intriguingly, there will be a management change. The current CFO is heading off, and the new CFO, Raja Akram, who used to be at Morgan Stanley, Citigroup, he is basically taking over and will be kind of overseeing this 3-year strategy from about next year.
OK, Tom Metcalf, thank you very much indeed. Bloomberg's managing editor for EMEA Finance, looking ahead, of course, to a big day for Deutsche Bank and what to zero in on. Meanwhile, S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005, citing the nation's improving growth and fiscal trajectory. The company upgraded its assessment by 1 level to BB, 2 steps below investment grade. Bloomberg's chief Africa correspondent Jennifer Dabasaja joins us from Johannesburg. Jen, what did we hear from the agency? This is a big move, first time since 2005.
Yeah, really big move for the country, Tom. If we take a look at what we've seen over the past few years, there obviously has been stunted growth in this economy, especially when you think about what this country really should be growing at. But still, it seems like many analysts are pointing to the fact that at least it seems like S&P has a bit of a positive tilt when it comes to this assessment of where the country is headed. And they point to a number of factors. Of course, they look at this coalition government that's now just about 18 months into being here, their tenure here in South Africa. And a lot of what they point to are some of the structural reforms that we have seen this government move forward on, notably the state-owned power utility Eskom, which of course has been very detrimental to the economy over the past few years. They're saying that it's causing less of a burden for government revenue. And so it's seeming like at least this is a bit of a vote of confidence as far as some of the reforms are going with this coalition government. But still, many analysts that I've spoken to say that it might be a bit too early to at least cheer that this is, a fully operational and clear path ahead for the country. There still are a number of issues that South Africa is facing. There is corruption that has been a challenge. There has been not as fast as many analysts should expect as far as accelerating some of the economic reforms, and still infrastructure is not performing optimally in order to boost growth in the manner at which economy of South Africa's side should be performing at. And also we should point to the fact that unemployment is one of the highest in the world at just about 31.9%. So yes, this is a vote of confidence. Perhaps we do see other ratings agencies like Fitch and Moody's to follow soon. But still, many people are pointing to the fact that perhaps this lifts investor sentiment on South Africa and some of the reforms that we are seeing. And perhaps then we do see a bit of an acceleration from the government and from private operators here to continue on as far as some of the reforms that we've already seen instituted over the past year or so.
OK, Bloomberg's chief Africa correspondent Jen Dabasaja. Jennifer, thank you very much indeed. And ahead of this week's G20 meeting in Johannesburg, we're going to be hosting global business leaders at the Bloomberg Africa Business Summit. Among our guests tomorrow, JP Morgan's Daniel Pinto and the CEOs of the Johannesburg Stock Exchange and 91. So do stay tuned for those conversations. Coming up, as Bitcoin erases gains for the year, we're going to discuss all things crypto with Elliptic's CEO, Simone Maney. We're going to have that interview for you next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back to Bloomberg Daybreak Europe. Now, after topping $126,000 in October, Bitcoin has fallen pretty sharply, briefly wiping out its 2025 gains. Bitcoin's total market value has plunged by about $600 billion from an October high. That is according to data compiled by Bloomberg. At this point, let's bring in the CEO of Elliptic. It's a British blockchain analytics firm for financial crime risk management. The CEO, Simone Maini, joins me now. It's a company that's backed by the likes of HSBC, JP Morgan, Santander, Wells Fargo, and Simone was previously at Deutsche Bank and Kroll, so with a rich experience in the financial sector. Simone, thank you for your time. I want to get into regulation. I want to get into what's happening in terms of stablecoin and financial fraud as well, which is what you focus on. But on the sell-off, what do you make of this? I mean, we've seen this story before. Is this just a repeat, or is this something more substantial that's happening when it comes to the crypto space that in the early part of this year had benefited from ETF inflows and expectations that there'd be regulatory benefits from the Trump administration?
Yeah, good morning, Tom. Great to be here. And yes, not great to see where Bitcoin is right now. But, you know, we've seen this, as you said, many, many times, and we will see it again in the future. I think for us, the key takeaway here is that price action in Bitcoin is no longer the thing that really tells us what's happening in digital assets. It's a much bigger story than that now. Of course, you know, headlines are often about the Bitcoin price. We're much more interested in the institutionalization of the space. We're looking at a number of different metrics, from stablecoin usage, tokenization, number of transactions, number of wallets, that kind of thing. Bitcoin is really now just one component of the full digital asset story.
OK, so you have to take a wider lens to get a more accurate view in terms of what is happening. So for you, just to be clear, Simone, you don't think this significantly dents that more widespread and mature adoption of crypto as an asset class?
No, absolutely not. Of course, you know, we do look at other metrics, as I said. So we're looking at M&A. We've seen a significant M&A activity in the digital asset space this year. We've seen a number of extremely positive IPOs and continue for that trajectory into the next 6 to 12 months. So, yes, looking at the Bitcoin price, that's one component, but let's look at the bigger picture.
And clearly, a key part of what you guys do and what you offer to some of those big financial names is transparency and monitoring for fraud within the crypto space. When you talk about stablecoin, Simone, how do you think about focusing on the risks around stablecoin to the broader financial system, the broader financial markets? What can you bring to play on that level?
So at Elliptic, really what we're helping financial institutions do is understand what's their risk exposure when it comes to interacting with digital assets like stablecoins, like tokenized assets. How do they make sure that when they are participating in those asset classes that they are not exposing themselves to undue risks, and if they are exposed, that they can do something about that? So that's the role that we're playing. It is critical infrastructure, and it's essential infrastructure for the ongoing adoption. What we're seeing, because of that trust and transparency that we're able to bring to the space, is that financial institutions are no longer treating this like an experiment, no longer just running pilots. We're seeing real infrastructure being built. We're seeing new payments rails being built on stablecoins. And I think it's fundamentally as a result of both regulatory clarity, but also that use case application of stablecoins really demonstrating improved efficiency, improved effectiveness in things like cross-border payments.
What are the implications then for those who do not have exposure and who aren't dabbling in cryptocurrencies, aren't investing, don't have a wallet, aren't thinking about DeFi in terms of some of the structural changes? Are there broader implications for people longer term as a result of some of these changes?
Look, I think essentially this is no longer an experimental technology or an experimental asset class. And I think that's why we're seeing so many of the large financial institutions participating in the space. As you mentioned, Tom, HSBC recently invested in Elliptic alongside previous investors, JP Morgan, Wells Fargo and Santander. And so those not participating really are at risk of being left behind. Standard Chartered CEO Bill Winters said a couple of weeks ago, all transactions will settle on blockchains eventually, and all money will be digital. The CEOs of Citi and JP Morgan have both said something very similar in recent weeks, and I think those not paying attention to that are seriously at risk of falling behind.
Well, where is the UK on the regulatory front? Are we at risk of falling behind?
We are certainly at risk of falling behind. We've seen some promising developments in the last few months coming from the Bank of England, but still overly cautious. I think what we have seen in the United States has been this real balancing of innovation and safely enabling financial institutions to participate in that space. And that's been a huge catalyst. It's been like rocket fuel for the industry. And we need to see the same happening in the UK. As I said, some initial positive developments, particularly around stablecoins, but some big caveats baked into what they're proposing. The crypto industry has been pushing back hard on those because we don't want to see the UK being left behind. You know, we've been such leaders when it comes to things like fintech, and it really would be such a shame to see the UK miss out, particularly as a UK company.
OK, Simone Maney, CEO of Elliptic. Timely as we look at what's happening in the crypto space and the opportunities that could be afforded and the regulatory questions as well. We appreciate your insights. Thank you very much indeed. There's a lot more coming up. We're going to give you a preview in terms of the market moves that we've seen historically around the earnings story from Nvidia. We've got, of course, economic data out as well of the US through this week. Stay with us. What's coming up? This is Bloomberg. Welcome back. Well, with traders pairing some of their bets around expectations for December as a cutting period for the Federal Reserve, a reminder of some of the dissent that is brewing in the hallowed halls of the Fed amongst the governors. And you have seen, and that's the bar, the very thin white bars that you can see at the bottom of this chart right here, the number of dissents coming through from Fed governors at a time when we do have split opinions. We know that in terms of Fed officials. Rates are at 4%. The expectation that you could go in December is now just below 50% in terms of the traders' pricing around that. Of course, that could adjust on the data that we get out later this week. Non-farm payrolls dropping on Thursday as those Fed officials continue to be rather divided around how far and how fast the Fed should go from here and whether or not December is live. Let's flip the board and have a look at the earnings story when it comes to Nvidia. This is the big one for the markets, dropping on Wednesday US time, of course, and a reminder that despite the fact you've had a 40% run up, this is a $4.6 trillion market cap stock. Typically, shortly after the earnings, you actually get a drop in the share price. And this is the historical context then. On average, you see an almost 3% decline in the stock price 1 month after the earnings for Nvidia, even after a strong run-up. Those earnings dropping on Wednesday. Let's flip the board and have a look at the US consumer. You have the likes of Home Depot and Walmart earnings out later this week. So that gives us an opportunity to touch on the spending and the health coming through from the US consumer. And you have seen those gauges edge lower. So the US consumer does feel more challenged, according to the surveys and the data that we're seeing. We'll see how that reflects in terms of the earnings of Home Depot dropping on Tuesday and Walmart, of course, on the consumer on Thursday. Now, ahead of this week's G20, Bloomberg is hosting global business leaders in Johannesburg at the Bloomberg Africa Business Summit. Our TV coverage starts tomorrow. We're going to hear from the likes of JP Morgan's Daniel Pinto and the CEOs of the Johannesburg Stock Exchange and 91. Now, the opening trade is up next. This is Bloomberg.
CEOs are focused on AI like never before, but most are still wrestling with the technology. That's according to the CEO Radar podcast.
You've got about 5% of CEOs that are really at the cutting edge about how to embed AI into their core business. You've got another 30 or 40% of CEOs that are well on that journey, and you've got about 60% of CEOs that are really struggling.
Learn more about what topics matter most to CEOs at Bloomberg.com/CEO Radar.
It's a big week, but certainly there's a lot of questions about the AI trade, which started off very positive the start of the year, and now it seems like things are just getting more negative. How should I assess the rest of the year?
Well, I guess overall, I think it all depends on the Fed particular. So I do think that if the Fed keeps on cutting, or at least signaling that there's more interest rate coming, the equity market definitely has more upside. Overall, fundamentally, I think actually market is very healthy. Earnings have been very, very strong in the third quarter. I do believe that a lot of people are positioned, so there's a little bit of profit taking from time to time. Depends on the macro data. Now, this week we will get a lot of macro data since the U.S. has reopened up. We get FOMC minutes as well.
That's right.
I do believe that the Fed still has potential to cut in December, but that brings volatility. But overall, we actually do think the market is quite healthy and could actually go further up from here.
It's still a liquidity-driven rally, you think? That's still the most important component, to your point?
Well, I believe, there's a lot of fundamental behind that. The earnings are really, really strong.
Right. But we need the Fed, as you point out, though.
I do believe, but for me, the Fed actually, the overall story on the Fed is really about their neutral rates are around 300 basis points. We're still at 400 basis points. So if there's negative news coming through, they have a lot of potential to cut. In their own thinking, they actually have to cut below 300 basis points to really become stimulative and dovish. And I think that's sort of the Fed put is very much on, and that will help the market. And if we don't get the cuts, then because we get strong macro data, and that should be positive for earnings overall.
It seems like this year was, I don't want to say easy, but it seemed like there was everything that was rallying, right? And for someone that watches multi-assets, I'm just wondering, can we see similar success next year, where correlations are actually positive, or have those correlations and relationships actually flip back to normal now?
I actually think it was a very difficult year on one hand, and very easy on the other hand. Yes, you just put your money at work at the beginning of the year, you don't touch, you're most likely up quite significantly. But actually, there was a lot of rotation shifts coming in. U.S. massively underperformed first quarter, then we had the sell-off in April, then suddenly we had the AI rally back on, we had the dollar declining 10%, and since everybody speaks about a weaker dollar, it's actually flat. So you could also do a lot of things wrong. But overall, I actually think for next year, the outlook remains very, very healthy. We probably see a reacceleration of growth with lower interest rates. We see earnings still coming through. And actually, correlation between bonds and equities started to flip. So we actually see these negative correlations, perfect for the environment for a multi-asset class portfolio. And as I said, with the Fed probably at least on the fence and be able, with a lot of ammunition, to help if something goes wrong, we actually should get a positive year. Vol will stay high, maybe even go up, the higher valuation is. But I'm actually remaining very, very positive, particularly for multi-asset class.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. The top stories this hour. Asian traders awaiting a deluge of data for clues on how quickly the Fed will continue interest rate cuts, with a delayed U.S. jobs report now due Thursday. Nvidia's earnings this week also set to be a major test for the AI trade. Bitcoin erasing its gains for the year just over a month after hitting an all-time high as risk appetite wanes. And China-Japan tensions rise over a diplomatic dispute, with Beijing issuing warnings to students and travelers.
All right, we've just opened for trade here in Australia, kicking off a new trading week. A little bit soft in the early going for the ASX, off by about 0.5% at the moment. Those two big sectors, the financials and materials sector, both weaker. Materials, the worst performing right now, we're off by about 1.2%. If we take a look at Nikkei futures, they're looking pretty flat today. We've got a couple of things to watch out for in Japan today. There will be a partial reading for third quarter GDP numbers. That's not expected to make terrific reading either. We are anticipating a contraction there. We'll also be watching travel names in Japan as well. China is warning students that are studying Japan about heightened risk. This is after Prime Minister Takaichi says any Chinese use of force in Taiwan would be a survival-threatening situation. So some tension increasing between Japan and China. We'll also be looking into how the banks perform in Japan as well after they boosted their profit targets as well and announced some share buybacks. The yen still pretty weak there at 154 at the moment, April.
Yeah, Paul, take a look at how futures are shaping up at the start of the trading week. Of course, this week is going to be about NVIDIA earnings. That could test the AI rally. That's already in doubt because investors have been pricing in a lower chance of a Fed rate cut for next month. At least we'll be getting the September jobs report. So says the BLS. We are seeing that risk off playing out in cryptos. Bitcoin, as we mentioned earlier, has erased its gains for the year. But also interesting how we saw a bit of a bounce on the SPX or the S&P 500 from Thursday's steep declines. This is the setup going into this week. Let's get more on what investors need to be watching. Asia Markets Executive Editor Paul Dobson joins us now, along with our tech correspondent Annabelle Jolas. Paul, let's start with you. I mean, we have the NVIDIA earnings. I think that's the main focus for this week for Asia investors as well. We know it's a sell the fact event, or typically has been the case in the past couple of earnings reports. What is the consequence that you're watching out for?
Yeah, morning, April. And you're absolutely right. It matters as much for us in this region as it does for those in the US because of the big buying power that NVIDIA has for the likes of Samsung, SK Hynix, TSMC, of course, as well. And that has spillover effects for the rest of the region as well. I think, as you say, NVIDIA, you get me on here every 3 months. I say, big lofty expectations. How are they ever going to beat? And they still manage to beat. And the market always seems to fall afterwards all the same. You know, a bit of profit taking and people recalibrating their expectations. But longer term, it goes up again. Right now, we're in a little bit of a quandary, aren't we, when it comes to AI and valuations? The market is more worried, I think, now than it has been for some time about that narrative having a little bit of a test. So we've had about 2 weeks of ebb and flow up and down now. Without really getting any firm conviction either way. I was kind of thinking to myself about this, because we've got this big spending rollout going on, and there's nothing that's less sexy, really, than a big AI data center, right? It's a huge building with stuff like kind of just big, rows and rows and rows of servers inside it and not a lot else. So AI, I think, needs to tell a good story again soon. We need to see something impressive about what they're doing, what's being delivered, so that people can continue to be enthusiastic about this future narrative, because that's what people have been buying into all along, this technological revolution, this, new big step forwards. And so any signs that that's going on, not just in the numbers and in the earnings, but something that, people can grasp and enjoy, I think that would be a good catalyst for another leg higher.
End up with the wrong kind of exciting, Paul. But I want to get to Bell now to talk a little bit about NVIDIA numbers a little bit more deeply, the market reaction aside. What are you expecting to hear in terms of CapEx and demand for some of those new chips?
Yeah, well, I think to Paul's point there, Paul Dobson, it's certainly a stock where every quarter we come in, there's very lofty expectations. NVIDIA clears those and investors still end up being disappointed. But actually, the results are expected to be strong yet again. So the company is set to beat Wall Street estimates on its sales, its next quarter outlook, even though you do have those concerns about the scale, the sustainability of AI spending instead. That's the view of Citi, who's also going to be looking at shipments of Blackwell, the new Rubin GPUs as well, that Citi also says are moving faster than expected. What else could be a really focal point from the earnings is certainly the impact that higher component costs are having on gross margins. But again, just in aggregate here, what we're expecting in terms of the guidance of revenue for the quarter in progress, that could be as high as nearly $66 billion. Now, at $66 billion, you've got to put it in context here. You're looking at a 56% increase on the year, but it would also be a turnover that gives NVIDIA a bigger one than Ford or Bank of America. So the expectations, again, very strong going into this. And in terms of the correlation to this region, I mean, NVIDIA is now just as correlated to the TAIEX as it is to the S&P 500. So certainly you can expect big moves off these earnings here.
Yeah, its earnings have tended to be a sort of macro event for the broader market. Talking about the broader market, we're seeing not just AI as a very crowded trade. There are other crowded trades that prove to be risks for markets. What are you watching?
Yeah, interesting. So right across emerging markets, it's not just the tech, but there's other places where people have leaned into and had a really wonderful year. But everybody's been jumping into the same sort of trend-following, momentum-driven kind of trades at the moment. You know, Latin American currencies have performed extremely strongly this year. For example, emerging market debt in general as well. But people are starting to question, hang on, are we all in the same trade here? What's going to happen if people start to take profit towards the end of the year? Suddenly we find that the exit isn't quite as wide as it was when we were coming in. And I think we saw that as well with the big drawdowns, for example, in the Kospi over recent weeks. You know, the down days have been quite significantly bad, and that I think is foreign investors trying to get out, but not enough kind of demand there to give them an easy way to offload that as well. So I think we've got to watch out for that. And I think crucial as well as Nvidia earnings is going to be these Fed minutes that we've got coming up as well, because so many policymakers seem to have been giving us this idea that December is far from a done deal. They weren't even really on board with the last cut, and so let's pay lots of attention to what happens there too.
Paul, talk to us about some of this price action we're seeing in Bitcoin as well, because we're back now almost to where we were at the start of the year. Of course, this is a famously volatile asset, but where do we go from here?
Yeah, Paul, as well as the crowded emerging market trades, Bitcoin has been another one of those where everybody was in it earlier on in the year. It boomed to that record high. Everybody was very excited about it. You know, the retail crowd following it ever higher, and, you know, the sort of bottom seems to have fallen out of that now. Everybody's exiting at the same time, and it's not just ETF withdrawals, but some long-term holders as well. And so those leverage plays, the people that have been borrowing in order to bet on it, are the ones that are getting hurt the most. So we erased all of the gains for the year to date just this morning. We are seeing a little bit of a rebound now, but again, it's having a little bit of a crisis of confidence at the moment, and that's sort of starting to sap investor demand right across broader markets as well. So again, not really sure what it will be that will stabilize it, but at some point, you know, with Bitcoin, we see these big swings and cycles where it goes up a long way, comes back down again. So it will form a bottom at some point, no doubt, and we'll have to wait and see where that is.
Bell, on top of Nvidia, we're also watching some of these Chinese EV earnings.
Yeah, that's right. There's actually a pretty strong slate coming up just between today and tomorrow. So there's Geely, there's XPeng, and there's also Xiaomi. Of course, Xiaomi being the company that was initially a smartphone player but has now made that foray, a very successful foray into EVs. But you can see here from this chart that automakers have been lifted essentially by rising EV deliveries. So those are continuing to stack up quarter on quarter. You're looking at 1.2 million by the end of this year. But that should actually bode pretty well for these numbers coming into the results, because across the board, analysts are expecting, again, pretty strong third quarter numbers for these companies. In terms of what I'll be watching most closely, that's definitely going to be Xiaomi, because I think we're watching in this period, could the EV business have actually turned positive or break even? That is going to be really closely tracked. You've got the likes of UOB saying, yes, it could already be possible. Others are looking for it to turn a profit, maybe in the final 3 months of the year instead. But EVs are certainly continuing to be a bigger growth driver for that company. But you've got Geely, you've also got XPeng coming up later today, and XPeng as well. I mean, their quarterly revenue may have doubled, but you're seeing, again, these stocks have really risen, particularly XPeng year to date.
All right, Asia Tech correspondent Annabelle Drewlers and Asia Markets executive editor Paul Dobson there. Well, Japan has urged China to respond appropriately after Beijing issued an advisory warning to its citizens to avoid travelling to Japan. Tensions are rising after comments on Taiwan from Japanese Prime Minister Sanae Takaichi. Let's get to our China correspondent Min Min Lo in Hong Kong now. So, Min Min, talk us through the actions that Beijing's taken so far.
Yes, Beijing has issued a travel advisory for its citizens, warning them not to go to Japan, citing safety concerns, and also saying that since the start of this year, there has been an increase in the number of crimes and attacks against Chinese citizens. It's also asking its students in Japan to monitor the situation there. Now, you can imagine the impact of this, because there has been about close to 7.5 million Chinese visitors to Japan so far in the first 9 months of this year. They make up nearly a quarter of Japan's total foreign visitors. So the amount of travel spending that Japan will lose out on, I guess China is hoping that this would put pressure on Japan to retract its words so far, because Sane Takeichi had mentioned that any military attack on Taiwan could be construed as an existential crisis for Japan. And the reason this is significant is because Japanese constitution has renounced the use of force, but there is a leeway given for any situation that is survival threatening for Japan. So this is a legal justification for Japan in some ways to intervene militarily. And China is taking it as such. A People's Daily editorial has said that this is the first overt threat of force that Japan has made to China in 80 years since its defeat in the Japanese in the war in 1945.
Yeah, and this latest flare-up, Min, couldn't come at a worse time, as we see in this chart, how these arrivals from China to Japan have reached pre-pandemic peaks. But what is your sense of whether these latest moves signal more countermeasures from both sides to come?
Yes, well, Japan has been urging China to temper its response, saying that this is not in line with what the two leaders agreed on when it comes to advancing the strategic relations between the two sides. But we could be headed for a period of an extended period of tension here, because over the weekend, China had sent 4 armed coast guards to the disputed waters near Japan that is controlled by Japan, the so-called Diaoyu or Senkaku Islands that both sides have disagreements on. And China has said that was a right enforcement patrol that was legal. And China has repeatedly said it wants Japan to retract those words, but so far we hadn't had an explicit retraction from Japan yet, even though the Japanese policy chief has been urging for calm, saying that Japan's stance hasn't really changed and that dialogue is needed. So we could see, this was also signaled on Weibo, on Yuyuan Tantian, which is an account that is affiliated with state media CCTV, saying that these are signals that China is prepared to take more countermeasures.
Min, thank you so much. Bloomberg's China correspondent Min Lo. We have more ahead on the Asia trade. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We have plenty of economic data on the docket this week, starting today with Japan's industrial production and GDP figures. On Wednesday, the Fed will release minutes from its October meeting, shedding light on an unusual split among policymakers after the FOMC cut rates by a quarter point. We are seeing the Bloomberg Dollar Index looking pretty flat, the yen still hovering quite weak against the greenback. Of course, we also have the BLS saying that it'll release the September jobs report on Thursday. And this was, of course, delayed due to the government shutdown. Now, our next guest is approaching the end of 2025 and the year ahead with far more caution than before. Joining us now is Trin Rin, Emerging Markets Asia economist at Natixis. Trin, really good to see you. First off, why this trepidation going into next year? And in particular, how are EM Asia economies coping?
We are starting this year with much more caution just because 2025, despite the bark of tariffs, has been quite great for EM Asia. Exports were pretty strong thanks to front loading, thanks to the ICT cycle upturn, and of course the big deployment of AI to help the big chippers. And that has helped mitigated a lot of the drag. And more importantly, Asia central banks had plenty of room given the soft dollar to cut rates. So we're looking into 2026 with much more trepidation because a lot of this is running out of steam. we're looking at almost the end of the cutting cycle for a lot of emerging Asian economies in rate cut. There's very limited room for that. But at the same time, the exports are slowing, right? Demand is decelerating in China very rapidly. In the U.S., demand is likely decelerating also very rapidly. So as a result, we're very cautious on the exports for the next year, exports outlook for the next year, especially for Asian big traders and those more exposed to the chip cycle that have performed extremely well this year.
Trin, we've been seeing in the past 2 months or so lots of central bank surprises, increasingly hard to predict what policymakers are going to do. I wonder, though, going into next year, the risk, should we be talking not just about rate cuts or holes, but about rate hikes, given the inflation trajectory?
Absolutely. So one of the big concerns when the China data came out in October really is what is the policy reaction function, given the fact that data has been very underwhelming. And despite the fact that China has really high real GDP growth, nominal GDP has been very underwhelming, meaning real debt has risen for households, for corporates, so they find it easier to just pay down debt. So the move forward obviously is cutting rates, but it's not so obvious as the dollar is quite uncertain where the direction that will lead. So for Asian central banks, we're reaching at the end of the traditional monetary support. So we have to look into fiscal support. So when we are looking at into 2026, where a monetary tap is running dry and fiscal policy is getting much more loose, there's a big question that who is going to absorb a lot of this debt. Obviously, fiscal policy is supportive for growth, especially for the pro-growth agenda. And we're looking at South Korea, China, Japan, Indonesia, many countries easing fiscal policy. So that's a big concern. But fundamentally, we're not as concerned about inflation just yet, given the fact that we fundamentally think the output gap is quite a negative in Asia across the board still. So domestic demand is the weak link of the equation for Asian growth. Exports have been strong, so turning into next year, fiscal policy we need to support. And oil is an important equation, and food prices as well. Because oil we expect to be quite subdued and food has been favorable. So the risk factor is that those factors will rise. We don't think that is the case. So meaning inflation will remain manageable, but we don't have a lot of space as we've already front-loaded a lot of these policy supports.
Yeah, Trin, we've got a case study today. In fact, you mentioned Indonesia there. I mean, there is a case in Indonesia for a cut, but to what degree? To your point, is inflation standing in the way here? And if you do see fiscal stimulus in Indonesia, that sounds like it's hardly going to help the problem.
Absolutely. They've cut the most in Asia, 150 basis points of cut. Really surprised markets when they've been very dovish in front-loading that cut to pause. But the reason for the pause is very clear, is that the gap between the Fed and Indonesia is really very, very narrow. If they were to cut this week, that gap would narrow from 75 basis points to 50. And the market is uncertain where December is going to be for the Fed, right? Will it cut the upper bound from 4% to 3.75 in December? Given that is so uncertain, a lot of central banks are not going to take that risk, particularly when their nominal policy rates are so low. And inflationary pressures are actually rising marginally for Indonesia. So real rates are actually getting worse. Some other central banks have much more space, like India, for example. Inflation has been very, very low. They have a lot of space. But given uncertainty, again, this elusive India trade deal, putting a lot of pressure on the rupee, the central bank also is not really the one that with a lot of space to cut are not really cutting. So therefore, this caution is going to continue until we get clarity on where the growth outlook for the U.S. is. If the growth outlook is very, very decent, and at the same time we have a soft enough for the central bank to cut and inflation is benign, then maybe we can have a much more optimistic outlook for 2026. For now, given the fact that we have the export cycle turning down and growth picture very weak, and big question, of course, is China reflation trade, right? Will China do enough fiscal to really reflate its economy, import more from the rest of Asia versus this year where imports have been quite weak?
Trim, we've only got about 30 seconds remaining, but I do just want to quickly get your views on the risk posed to some Asian economies from potential correction in AI stocks, just very quickly.
So if you look at Korea, what the best stock market in Asia, not talked about much, is really chips. Chips have done really well. Autos have been very much down. With the trade deal, with the lower of tariffs, I think autos would do next year much better. But the question is, will chips continue? And the cyclical factor is fading, given the cycle turning into year. So we may still have very strong first quarter, but I think the risks are really there that chips that have driven a lot of this exceptional growth in Asia, it's going to decelerate. So we looking at 2026 with cyclical factors, risk rising, and at the same time, fundamental growth is looking very saggy globally. So the big question is, how big are we going to get regarding the fiscal bazooka into 2026 to offset the external stress that we're going to face?
All right, when emerging markets Asia economist at Natixis, thanks as always for joining us. We have more ahead on the Asia trade. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
A lot of our inspirations for new features comes from experiences in our own daily life.
The other day, I needed to double check an important meeting schedule by finding a specific call recording. Thankfully, with call summarization feature on my Galaxy, I could quickly find it.
Our users ask complex questions, and our model has to be able to speak multiple languages. What seems impossible now can quickly become possible.
The top global headlines we're following. India has arrested a Kashmiri man accusing him of helping plan last week's suicide bombing in New Delhi that killed 10 and injured 32. Authorities say he helped buy the car used in the attack. Indian investigators say they're still working to uncover the wider network behind the bombing, which has raised security tensions for the Modi government. German Finance Minister Lars Klingbeil is heading to Asia, pushing for open, rules-based trade as tensions rise between the US, China, and Europe. He'll take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition along with better market access for German firms. Thailand says tariff talks with the U.S. will continue separately from its commitments to President Trump over the border dispute with Cambodia. Bangkok clarified the stance after Prime Minister Anutin spoke with Trump, who signaled the U.S. doesn't wish to interfere in the conflict. The U.S. had paused trade talks pending Thai compliance with a peace deal. Paul?
Let's take a look at how shares of the world's biggest miner are tracking. BHP currently down about 1.5% in the early going here in Australia. That is lagging the broader index. Now, this is after a London judge ruled that BHP is liable to compensate about 620,000 Brazilians after the 2015 Samarco dam collapse in Brazil. The damages being sought £36 billion. That's about $47.4 billion. The court saying the risk of the collapse of the dam was foreseeable. The court says BHP were negligent, imprudent, and lacking in skill. Now, BHP says it does plan to appeal that ruling, which was handed down on Friday after the close here in Australia. It confirms that ruling and says it's going to update existing provisions to reflect the claim, but will be appealing. We have more ahead on the Asia trade. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Let's take a look at how US futures are tracking at the moment. S&P futures ticking a little bit higher, and markets did recover in the US on Friday. Major catalyst this week, though, the Nvidia earnings. There's always lofty expectations here, and there's quite often a sell the fact event as well. We do have the S&P 500 back above its 50-day moving average. The key question is whether or not it's going to be able to stay there. Let's get to this story now. The US Justice Department announcing an investigation into Jeffrey Epstein's ties to prominent Democrats, and this is after being urged to do so by President Trump. Now, that's after new emails raised questions about the president's own relationship with the disgraced financier. Let's get to Bloomberg editor Tony Chuchka now in Washington. So, Tony, a number of people on the list for this investigation. Can't help but notice that there's one name missing. Can you tell us more?
Yeah, well, Jeffrey Epstein was the talk of the town, as they say, last week. It ended with Trump asking the Justice Department to undertake this investigation that came, as you say, as you pointed out, after the release of these emails that do put Trump in a sort of in a spotlight that he would much rather obviously not be in. And some of the names that came up here, Bill Clinton, Larry Summers, the former Treasury Secretary, and also J.P. Morgan Chase. And Trump basically asked Attorney General Pam Bondi to open an investigation into what the connections are there, and she went ahead and said that that will be launched.
Tony, we're also watching Trump and the tariff policy against a backdrop. Treasury Secretary Scott Bessent has also been weighing in on the inflation trajectory. Take a listen.
I would expect in the first 2 quarters, we are going to see the inflation curve bend down and the real income curve substantially accelerate. And when those 2 lines cross, Americans are going to feel it.
Perhaps as part of efforts to ease food prices, we saw the lowering of tariffs on some products from last week. Where are we on all this?
It's all about affordability, quote unquote, now, and that took off with, as you recall, with the U.S. election day earlier this month, where Democrats in 2 states won the governorships and also carried the day on a variety of other issues, basically on the notion that Trump has failed to get prices under control, and that's what Bessent is referring to. Another issue that he mentioned that's been in play is, which then connects to Trump's whole tariff policy, is that Trump has been talking about a $2,000 rebate possibly next year, or dividend, as he calls it, for most Americans. Based on this tariff revenue that's coming in. There's been some debate about this and how it could work, and Bessent is the most recent administration official to point out that this would require congressional approval. I mean, it would be similar to the stimulus checks that went out under Joe Biden during the COVID pandemic. But all of it ties together under this affordability heading, and that Republicans are feeling, and Trump are feeling some heat there as we head into 2026, which is a midterm election here in the United States.
Tony, thanks so much for running us through these nuances. Our Bloomberg editor, Tony Chutzka. We turn to Chile, where presidential elections have just closed. Candidates from either end of extreme political ideologies, Jose Antonio Cast and Janet Jara, are on track to advance to runoff elections. Let's cross to Santiago, and our Latin America executive editor, Creighton Harrison, is there for us. So it looks like we're headed for runoff. I mean, put things in perspective for us.
Sure. Yeah, this was actually the most expected outcome. The polls have been a little back and forth down to the very end of public polling, but these two were always the favorites. In part, on the left, you had Janet Jara who won a primary among leftist candidates. So she was always going to get a certain percentage of the vote since the left kind of consolidated behind her. The question was always going to be what happened with the right. And Jose Antonio Cast is, sort of a right-wing figure. This is his third run for president. And he's known as, sort of a conservative Christian, which in the past hasn't gotten him quite over the threshold with voters. But he's kind of taken hold this time with a message about closing the borders and keeping immigrants out, which may sound familiar from other elections around the country, but it has taken hold here in Chile, where there has been a big surge of migration, most prominently from Venezuela, and a lot of people are concerned about how that is reshaping the country. So that appears to have been a key factor here. And it's fair to say that the right outperformed expectations with the vote across the board. There were several right-wing candidates who did very well, just not as well as Cast. And Jara on the left underperformed how she'd been polling. So markets are likely to respond pretty favorably to that tomorrow.
So, Creighton, when will the runoff happen, and what's the likely outcome here? What issues are going to be on the ballot?
So December 14th is the runoff, and migration far and away has been the number one issue for voters. They, again, are experiencing a surge unlike what Chile's ever experienced in the past. This country has traditionally been very welcoming of newcomers, but over time there have been some increases in crime that people are choosing to associate with migrants, and so this has become more front and center for them. Crime in general is sort of something that Chileans hold very highly as a key issue for them, even though if you compare Chile against other countries in Latin America, it's still a very low rate of crime. But that's why the message of a hard right, tough on crime, tough on migration candidate seems to be resonating this time around.
All right, Latin America Executive Editor Creighton Harrison there in Santiago. Well, the leader of Andhra Pradesh, one of India's key southern states, known for its thriving tech hubs, is confident that New Delhi and Washington will soon strike a trade deal. In Chandrababu Naidu, who's positioned his state as a major destination for investment and innovation, spoke with us about the ongoing trade talks and why he remains unconcerned about U.S. restrictions on H-1B skilled visas for Indian workers.
These are all always challenges, opportunities. When you don't have any production, no need to depend on global community. Today we are producing shrimp, aqua. National exports 60% are from Andhra Pradesh, 60-65%, 2/3 are from Andhra Pradesh. Naturally we will have this type of problems. One is alternative markets. With my strength, I have to move forward. And also they are negotiating Government of India. They may sort it out.
Do you expect a deal soon?
Very soon I'm expecting something.
There's a lot of students here too who are engineers and they get H-1B visas into the U.S. Those are now being restricted. How do you cope with that?
No, what I'm saying, in knowledge economy, location is not important. Knowledge is important, leadership is important. I can start a company here to service Americans, cost-effective way, in a service sector. There are manufacturing, I have to go there. There are some sectors where physical presence is important, then they have to move. Otherwise, so many services you can provide online by having proper knowledge and leadership quality. That is going to happen. If all intelligent people are going to America. Because of that, they are doing the best. Now some people are returned in India. That will help us further.
That was Chandrababu Naidu, Chief Minister of Andhra Pradesh, speaking with Bloomberg Asia Economics and Government Executive Editor Daniel Tenkate. We have more ahead on the Asia trade. This is Bloomberg.
right, let's take a look at how Japan assets are tracking at the moment ahead of the open in Japan. We've got futures looking a little bit softer, off by about 1/5% there. The yen still fairly weak. We are going to get, of course, GDP data for the third quarter, partial reading out later. It is expected to show a contraction, so we will be watching very closely for any news of fiscal stimulus coming from the Takaichi government. Once known primarily for its photography business, Fujifilm is expanding into biotechnology and semiconductors with major products in India and other countries. Speaking exclusively to Bloomberg, CEO Taiichi Goto told us more about the company's expansion plans and the impact of tariffs.
Currently, the primary areas we're investing in are, first, contract manufacturing for the biopharmaceutical business, also known as CDMO. The other area is semiconductor materials. These two markets have exceptionally strong growth potential. For example, the CDMO business currently represents a $500 billion market size. While low molecular weight drugs are currently dominant, the market is expected to grow to the point where biopharmaceuticals will surpass them by 2028. As for the semiconductor market, it has been growing at an annual rate of around 8% or 9%. By 2030, it is projected to reach a scale of around $1 trillion. We are investing in both of these areas.
When it comes to the semiconductor materials business, of course, you have the resist and the front end part of the manufacturing that you're dealing with, but you've also talked about strengthening the back end processes materials, right? Tell us a little bit about that drive and what you're focusing on right now.
One point is that our company possesses various materials for different processes within semiconductor manufacturing. That allows us to provide a one-stop solution. That's one of our key points. Right now, within that, the area we're focusing on the most is CMP slurries. First, as semiconductors advance in cutting-edge logic, memory, and packaging technologies, miniaturization and stacking continue to progress. Naturally, this also increases the volume of slurries required. Now, regarding the back-end process part of your question, the back-end process today involves bonding two layers together. The bonding technology itself is incredibly difficult. It offers many benefits, like lower power consumption. The most critical factor during bonding is the slurry used for polishing that area. We've now developed a slurry for that most critical part called hybrid bonding. It's been adopted by major semiconductor manufacturers, and we're currently at the stage where business opportunities are opening up. In other back-end processes, we're also working on things like insulating polyamide. So how much of that back-end market we can capture is now one of our major goals and challenges.
It's really interesting to see these Japanese companies really focused on the semiconductor equipment and materials part of the whole global chip ecosystem, right? How important do you think that is for Japan as a whole in order to be able to be part of this broader global drive for artificial intelligence?
We are a materials manufacturer. From a materials perspective, the key point remains providing materials that enable further miniaturization and higher density. Currently, Japanese companies are at the world's top level in this materials field. We are actually working together with semiconductor equipment manufacturers to develop these materials.